It is also raising resilience even as it lowers cost. Early study shows that productivity gain could be immense. Can you imagine? As much as USD 200 to 400 billion annually for the banks worldwide. Experts including Michael S. Barr, he is the vice chair of Federal Reserve Supervisory System in California, take this conversation further. As per Mr. Barr, there are possibly two models relating to AI ahead. One is incremental, where AI quietly supports and strengthens what humans already do, and where AI remains a powerful assistant boosting efficiency while humans stay firmly in charge. The other is transformative, other than the incremental, the second model, where AI fundamentally extends human capability and reshapes the way services are delivered. This involves automation and replacement of certain tasks and altering job functions and business models. The second model, obviously, would have more profound effect on skills, on jobs, and on how institutions organize themselves. This is why the way forward must keep human at the center. I'll repeat. This is why way forward must keep human at center. Technology must serve resilience, inclusion, and trust. The true measure of progress will not be what machines can do, but how wisely we choose to guide them. Now, looking at the innovation in practice, the future of AI in finance is no more a vision. It is already here. As Christine Lagarde, you know, that president of ECB, has reminded us, quote, AI is not tomorrow's story. It is shaping our world today, unquote. Project Aurora, you must be aware that it's a BIS Innovation Hub Nordic Center project, which are detecting and combating money laundering activity, is already proving how AI and its capabilities can strengthen our systems. By combining synthetic data, privacy-enhancing technologies, and cross-border collaboration, it has cut false positive by 80% and triple detection of complex laundering networks. These are not abstract gains. They translate into stronger protections, more trust in our institutions, and a system that not only responds to risk, but anticipates it. AI is also moving financial advisors out of the boardroom and into the hands of everyone. Robo-advisors, you are aware, are already helping families plan their savings, invest small amounts, and make sense of choices that used to feel overwhelming earlier. Inside financial institutions, the change is already visible. In legal and compliance team, contracts that once took days to review are now summarized in minutes, freeing the experts to focus on judgment rather than paperwork. On trading desk, AI is optimizing execution strategy, saving cost by millions while improving precision. In risk and compliance, machine learning systems are scanning the vast streams of transactions and regulatory filings, reducing errors and making oversight faster and more reliable. And even on the customer front line, AI assistants can hold conversation, answer complex questions, and guide people through financial choices with accuracy and empathy. In every corner, AI is helping banks do more, do it faster, and do it at lower cost. Taken together, these are the glimpses of tomorrow happening today. They remind us that the challenge before us is not whether this future will arrive, it is already here. The challenge is how we choose it and how we shape it. Now, whenever we talk about any innovations, always comes a duty to pause and reflect, because we have to balance the promise with the prudence. Artificial intelligence is no exception. As Norbert Wiener, the computer scientist, mathematician, and known cybernetics expert, reminded us, quote, "The world of the future will be an even more demanding struggle against the limitations of our intelligence, not the limitations of our machine, unquote. The risks are real and they are already visible. We know that AI systems can produce errors that appear convincing but are flawed. Experts call these hallucinations. Even when results look credible, they may be inaccurate and misleading and difficult to explain. This challenge of explainability makes oversight and accountability more complex. These are not small glitches. In finance, one inaccurate model can mean a wrong credit decision, a compliance failure, and most importantly, breach of trust. It is also important to note that AI and ML models are only as sound as the data they are built on. If the data is incomplete, if data is biased or of poor quality, those weaknesses will be reflected in the outputs. This is why data governance is critical to ensure accuracy, confidentiality, and clarity about sources. Now, also look about the risk relating to the financial stability in this age of AI. It has also become a discussion point relating to the financial stability. The Basel Committee has warned that highly automated models can amplify financial cycles, lifting markets higher in good time, but may deepen the fall in stress. The Financial Stability Institute has cautioned that unchecked adoption could magnify vulnerabilities through correlations, concentration, and cyber risk, the 3C. The IMF and BIS have both underlined that AI, if left unguided, they evolve into a source of systemic risk. The convergence of a strategy driven by AI-powered analytics, each seeking to maximize short-term profit, can lead to herding behavior and a dangerous concentration of risk. In such an environment, market participation may unknowingly reinforce one another's position, potentially inflating asset bubbles and heightening volatility across capital market. It is therefore imperative that our governance framework evolve in tandem with technology, ensuring that innovation is matched by robust risk management and commitment to financial stability. Now, look at the concern on resilience. It is not only relating to financial, as far as AI is concerned. It is some infrastructural. The AI infrastructure depends on the 5 interdependent layers. I'll just mention all 5. At the base, the first AI infrastructure are specialized chips that power complex computation. The second layer is cloud infrastructure that hosts and train models. The third layer is the vast database on which the models are trained. And obviously on the top sits the large foundation model adaptable to many users. And the last, the fifth layer, is the application that brings AI into everyday life. Each layer is essential. Hardware provides the power, cloud the backbone, data the fuel, the foundation models the engines, and application the outcomes we experience. However, concentration is one of the pressing concerns here, which is not just about providers, it runs through the very infrastructure of AI. From chips to clouds to models. One company makes 90% of advanced processor. 3 firms control most cloud capacity, and a handful of entities dominate foundation models. These systemic dependency, I'll repeat, these systemic dependency affect not only finance, but also economic sovereignty and national security. This is why our task as policymakers, supervisors, and industry leaders is to guide the innovation. With the diverse range of stakeholders and markets involved in the AI supply chain across borders, domestic and international collaboration between competent authorities will be the key. That means building guardrails, diversifying dependency, and cooperation across border may secure the foundation of this new era. So we must be clear. AI is a dual-use technology. It can serve progress or it can amplify risk. It can extend inclusion or it can deepen divide. It can strengthen stability or it can weaken it. The outcome will depend on how responsibly we innovate, how firmly we govern, and how prudently we diversify, and how wisely we balance speed with safeguards. This is why responsible AI, I'll repeat, responsible AI is not a slogan, it is only the way forward. Now, I'll touch upon a little bit on India's leadership in inclusive innovation, including AI. I understand Minister is coming and will talk about Bharat AI, etc. I'll not touch upon that. I'll talk about a little bit on NPCI. Amidst the global debate on risk and resilience, India has shown that inclusion at scale is not only possible, but it is already a reality in 2025. India is processing more digital transactions than almost any other economy in the world, driven by the scale and trust of the Unified Payments Interface, what we know it, UPI. UPI today accounts for most retail payments in our country with more than 20 billion transactions a month, proving the world-class infrastructure can be built for the masses. At NPCI, we are proud to have led this journey from UPI Lite for low bandwidth regions to UPI for her, empowering women entrepreneurs to 123 Pay, bringing digital payments to feature phones. We have made innovation a tool of access. These are not pilots, they are the live systems used by millions every day. We are also embracing AI responsibly in our own operations. Our federated AI model currently runs on a pilot basis, are strengthening fraud detection by allowing banks to share intelligence without sharing data. We are deploying AI to identify mule accounts and block suspicious activity in real time. We are also working with leading institutes like Indian Institute of Science to build deep tech research capabilities that ensure India remains at the frontier of the innovation. We are also building intelligence into payments. Our own small language model is being trained for India's uniquely diversity of languages and users. It will help make digital payments smarter and more intuitive by simplifying complaint resolution. And our ambition does not stop at our borders. Our motto is Global Digital Public Good. Global Digital Public Good. Under this philosophy, NPCI International, one of the subsidiaries, UPI is linking with systems in Asia, Africa, Middle East, Europe, and beyond. Our vision is to be a leader in empowering global citizens with accessible digital payment solutions and help them, especially the Global South, to design and launch their own sovereign, interoperable, and resilient real-time payment system. Another pillar of our strategy is interoperability, that is expanding the international acceptance of UPI, RuPay, and other NPCI innovations of offering different products. Equally important is our work for the cross-border remittances. Our efforts are directed at building affordable, secure, and efficient corridors that reduce cost and increase convenience, aligning with the G20 objective of lowering remittance charge globally. In our constant efforts to improve our offering to our customer, NPCI Bharat Pay Limited, now we call it Bharat Connect, is launched an upcoming platform to standardize online merchant transactions across net banking and mobile banking channels, enhancing interoperability, settlement efficiency, and customer experiences. You are aware about the Bheem app. We are building a sovereign digital payment alternative, which is trusted by every Indian. Our newest subsidiary we have launched just a few months before, that we call it NPI Tech Solutions Limited, that is NTSL, is where experimentation and breakthrough innovations will happen. We are excited to visualize NTSL to emerge as a cradle for future tech innovation in India, a space where bold ideas can be nurtured into reality for the digital economy. This year at the Global Fintech Fest, we are proud to showcase a new wave of innovation in coming 3 days. In digital payments, more than 10 products will be launched, 4 by Governor, 3 by Secretary of Finance, I think 3 by Deputy Governor, and 1 by me. Each of these has been designed with the purpose of making payments easier, safer, and more convenient for our users. We are strengthening security with smarter ways to protect transactions and adding new layers of transparency and accountability. These innovations will simplify payments for daily purchases, travel, and across different devices, reflecting our commitment to keep payments inclusive, secure, and future-ready. As may be appreciated, they all are about setting the direction for the future of finance, rooted in resilience, inclusion, and trust. This is the essence of India's leadership. Innovation anchored in inclusion, scale anchored in resilience. We are showing the world that AI in fintech can be harnessed not only for efficiency, but for equity. Coming to the conclusion, let us pause on the paradox at the heart of artificial intelligence. It holds within it the blessings of progress and the curse of risk. It can extend the reach of finance, make our system stronger, and open doors of opportunities that were once closed. But it can also carry risk, and if we let it run unchecked, then we don't choices, then it will create problem. The choices is not with the technology. The choice lies in us, what we choose for. That is why it is important to remember that humans, not machines, will shape the outcome. AI is a tool, and its value will depend entirely on the intent with which we use it. If we apply it with vision, discipline, and responsibility, it can widen access, build resilience, and make growth more inclusive. If we neglect these duties, it may magnify the very vulnerability we seek to avoid. In this context, our first task is to build the knowledge and skill to use wisely, train our people, build expertise, and apply the technology responsibly. The second task is to keep human judgment at the core of finance. AI must support decision-making, not replace it. The third is to guide adoption with clarity and foresight. And the fourth task is the governance and risk management, very critical, and it must keep pace in addressing issues relating to data governance, model biases, accountability, and third-party concentration. And above all, we must work together to seize the opportunities of AI, to confront the risk and govern this technology with cooperation across regulators, firms, and nations. No single institution, no single nation or country can carry this task alone. Let me now conclude with the word of Antonio Guterres, Secretary General of UN. Quote, "We must treat artificial intelligence as humanity's ally. It must be a force for good for all." Unquote. That is a charge before us. If we rise to this responsibility together, we can build a future where finance is more inclusive, more secure, and more resilient. A future powered by AI, but guided always by human being and for the human purpose. Thank you. Jai Hind.
Thank you. Thank you very much, sir, for your visionary thoughts. And with your words, we managed to grab those glimpses of tomorrow today. And we also look forward to witnessing the innovations by NPCI across these 3 days. So we eagerly look forward to all that and more. Attention that we are now about the program, which is why all the ones who are still standing right across with all that enthusiasm, I'm going to urge you all to very quickly, please take your seats. Well, that being said, we'd also like to thank our incredible sponsors as well. We'd like to thank the Speaker Lounge partner, OneCard, Cloud Communications partner, Proximus Global, Merchant and Consumer partner, Bharat Pay, Future of Global Payments partner, PayPal, and Diamond Partners, PayU. So we'd also like to thank them for their incredible support. But that being said, a very exciting segment is about to begin, and this is where I'm going to urge for each and everyone's attention. I'm going to urge all of you to also please take your seats. And with that, ladies and gentlemen, I'm going to say that just one more time. Please do take your seats for our next session for an exclusive preview of PayPal World right here at Global Fintech Fest 2025. Here we go.
Introducing PayPal World, connecting the world's largest digital wallets through a single groundbreaking platform, allowing people to shop anywhere PayPal checkout is available using their preferred payment method, or to send money to friends and family across the globe. And by offering more payment options, merchants can unlock access to billions of new customers. With PayPal World and NPCI International, it's one world, one fast, easy way to pay. PayPal World.
And now, ladies and gentlemen, please put your hands together to welcome on stage PayPal CEO and President Alex Chris and Ritesh Shukla, Managing Director and CEO NIPL, NPCI International Payments Limited.
Good morning, everyone. On your behalf, Alex, welcome to Mumbai. I'm grateful to you for making the journey. Mumbai is city of dreams for 1.4 billion and now many overseas as well. So thank you so much for your time to be here with us in Mumbai.
Well, thank you, Ritesh, and it is so wonderful to be here. This is my first GFF, and I got in yesterday. I got to go spend time with my team, which is here. I can see them. I also got to spend time with a local fintech and also some small businesses. And I would say the energy, the enthusiasm, the innovation that comes every time I'm in India is just so inspiring. And it's one of the reasons that we started PayPal World. Now, you saw the video, but to share the vision of PayPal World, we imagine a world where there is complete interoperability of wallets. There are going to be dozens, even hundreds of wallets around the world. And individuals, consumers, and small businesses should be able to have their home domestic wallet, but should be able to travel or provide e-commerce transactions, or in the future, agentic commerce transactions anywhere in the world. And so we wanted to create a platform that could connect the best wallets in the world. Let's see how it comes together. Please roll the video.
Meet Priya. At home in Jaipur, she's scrolling through her feed. Her favorite influencer has been raving about Amay, a perfume only sold in the US. When she finds a retailer that ships to India, she heads straight to their site to place an order. At checkout, she selects PayPal. She's given the option to pay with her favorite UPI-powered app. From there, she's taken through the same familiar payment flow she's used to. A few quick steps and she pays in rupees with the exchange rate locked in. Her purchase is confirmed. And just like that, her new designer perfume is on its way to India. Meet Ravi. Fresh off a flight from Mumbai, he's ready to experience New York like a local. His first stop, a farmer's market downtown. At a booth selling homemade sourdough and fresh veggies, he's ready to check out. Ravi opens his favorite UPI-powered app and simply scans the vendor's QR code. Ravi pays in rupees through his preferred bank account. The vendor receives US dollars. Halfway around the world, and checkout feels just like home. No downloads, no signups, just simple payments that work. Welcome to PayPal World.
Our partnership with PayPal World is significantly important. This integration will create global footprint for UPI, and 450 plus million users who are active every month on UPI different apps will be able to transact globally across the merchants that PayPal World powers. This aligns with our vision of democratizing payments like we have done in India. Now we want to do it globally. It's going to be easy, safe, and accessible option for Indian consumers to pay overseas. And it also will make the global payment landscape stronger because, like Chairman sir mentioned earlier, we process 650 million plus transactions daily. And on most days, we are the #1 payment network across the world. So this is going to add a great dimension to the PayPal World story, and we are super excited about it.
This is incredible. This vision coming to life is something that it's a world that we all want to live in. And the partnership with NPCI International has been one that is incredible. Bringing together these wallets, we now have over 2 billion consumers around the world that are able to interact. And think about what that means for a merchant. Think about what that means to now have the world of consumers opened up to them. But to commemorate UPI as the very first payment method inside of PayPal World, I have something for you. So this is a first of its kind. This is a plaque to welcome UPI as the first payment systems partner on PayPal World.
Woohoo!
Congratulations.
Thank you, Alex. So I think it's our teams that have worked so hard to put us together. I think it's only prudent to thank them for the hard work that they've done. And we are targeting to go live by end of this year, next 3 to 4 months. So looking forward to exciting times with PayPal World, Alex.
It's just the beginning. There's so much more we can build together. The innovation is just starting. This is just the beginning.
Cool. Thank you. Thank you, Alex.
Now that truly calls for the loudest round of applause, everyone. Let's hear it, ladies and gentlemen. Formalizing that partnership today, recognizing UPI as the first payment system partner joining PayPal World. So congratulations indeed. And with that, let me also inform you that now we're about to set the stage for a very, very interesting chat coming your way. So once again, all the curious eyes that are still standing right around, go ahead and please take your seats. Meanwhile, let me also inform you all that GFF 2025 is not just about thought leadership, it's also about creating unforgettable experiences. So alongside the main agenda, we also have some exciting festivities happening. So we have closed door round tables, we've got exclusive networking dinners, all that and more, and I will be back to share all the further details. With that, looks like our speakers are set. Ladies and gentlemen, it's time to bring our speakers back here on stage. We are excited for a very exciting discussion coming our way, which is all about the future of payments. So first up, once again, we have with us Mr. Alex Chris. But to spearhead this incredible discussion, we have the very incredible Shireen Bhan, CNBC TV18 Managing Editor. So if I could please invite Shireen Bhan and the PayPal CEO and President, Alex Chris. Let's have the loudest round of applause one more time. Ladies and gentlemen.
Good morning, everybody. It's wonderful to be back here at the Global Fintech Forum. Thank you very much, Kavya, for that fabulous introduction. And congratulations, Alex. Note to every founder, CEO in this room, carry your cheering squad with you. And props to the cheering squad for a wonderful, rousing welcome here. It's a great start to this morning's session. It's always wonderful to be here at the Global Fintech Forum for us at CNBC TV 18 because we've been part of what's happened with the Indian startup story for the last 23 years, and there's plenty that's happened on the fintech side. You just heard Alex talk a little bit about PayPal World, and I will get into the details of that, but just a quick overview on why this conversation with Alex is important in the context of what's happening with Indian fintech. PayPal has been around for over 25 years. It's a profitable venture. It's also a venture that operates across 200 markets, 430 million customers, both on the merchant side as well as active users, and it is the largest two-sided network today. And it has plans for India, of course, not for the domestic payment segment just yet, but they are looking at investing in Indian fintech. So those of you who have an idea, Alex is your man. Perhaps we could have some interesting conversations happen here at GFF. But Alex, without further ado, let's start by talking about PayPal World. Congratulations on launching that. But I believe the origin story for how PayPal World and the UPI connection happened was in Florence when you met Dilip Asbe.
That's correct. Well, again, thank you for having me. It's great to be here with you all, and it is amazing to bring my team along here. They are just an incredible team. So yes, the beginnings of PayPal World, we had some ideas of creating interoperable wallets, right? This is part of our mission to connect the world and ensure that we are creating what the future should be. But Dilip and I were at a conference together in Florence, Italy, of all places. And we were just having a sidebar conversation, and he was telling me about the progress and the incredible expansion that UPI was going through at the time. And I was maybe 4 or 5 months into the job at PayPal. And we just started having the conversation of what would happen if we could make it simple, seamless, frictionless, and easy for our consumers and our merchants to interact together. And we both thought that was a pretty good idea, and that was really the beginning of setting off. Now, let's be transparent. The easy part are two leaders sitting in a room in the middle of Florence, Italy, going, wouldn't it be wonderful if that happened? The hard part is what the team does afterwards, from both teams coming together and working through all the challenges. But here we are on stage today, announcing the partnership, solidifying, and launching again in the coming months. So it's very exciting.
Well, certainly very exciting, but let's talk about the aspiration that you have as far as PayPal World is concerned. UPI and NPCI are just one of the partners that you've signed up with. There are a bunch of others that you have signed up with, and I would imagine more on the way. What's the aspiration? What do you hope to do with PayPal World?
So this is the vision of the world that I hope we all want to live in, right? There are domestic wallets that exist anywhere in the world. You can go to countries in almost every part of the world, and there is a domestic wallet or multiple domestic wallets that is where people are interacting. And I fundamentally believe that the future of money is going to be a domestic wallet. And so if you believe that, or a fintech wallet, so if you believe that wallets are going to be the way that people are going to interact, then it makes sense to make them interoperable. But that's just not how it works today. If you take your digital wallet and you travel to the United States, you travel to South America, you travel to China, many of these wallets won't work. And so you're stuck having to create a second digital wallet or move cash, in which case you're paying significant amount of cost, friction, and you're having to juggle, and it's just not a great experience. In addition, if you're a merchant, you're only able to take payments from local currency or from local wallets that you know. It's one of the things that PayPal has actually worked very hard on in the United States and throughout Europe, is making it as seamless as possible for merchants to accept payments from anyone. But it really is only limited to a certain portion of the world. And so if you fast forward, the vision of PayPal World is making a platform that any digital wallet can connect to, so that any consumer in the world can use their home digital wallet, where they have multiple instruments, their banks, if they have credit cards, if they have buy now, pay later, whatever they want together, and be able to travel in person, make an e-commerce transaction, or in the future, an agentic commerce transaction with the wallet they have safe, secure transactions with, but with any merchant in the world. And think about how powerful that is for merchants. Merchants around the world will now have access to billions of consumers. Billions of consumers. That is a very exciting world.
So to put it simply, a digital global wallet, that is what you envision as far as PayPal world is concerned.
That makes it seamless and frictionless for each consumer to just not have to think about it.
Not have to think about it. But, you know, since we're talking about change, let's talk about what else is changing at PayPal. And I remember that you said at an investor call that 2024 was a year of transition for PayPal as you got back to profitability. And 2025, in your words, is going to be a year of transformation. Now, for the audience sitting here, explain to us, 25 years on, what does transformation look like for PayPal as you transition from being a payments service to becoming a commerce platform? What will that entail? What will change?
Yeah, so it is a real privilege to lead a company that has a 25-year history and really is the original fintech in many ways at PayPal. This week I celebrated my 2-year anniversary at the organization, so I am still...
Congratulations.
Thank you. I made it 2 years. But one of the things that I think a lot about, and one of the reasons that drew me to PayPal, is the transformation in fintech is so fast right now. There's going to be more disruption, I believe, in the next 2, 3, 5 years than in the past 20 years combined.
On account of technology or on account...
Technology, artificial intelligence, consumer demand. I think we're just, you know, in many parts of technology, you're seeing an exponential acceleration in development. You know, I heard before, I think we were having a conversation about how many fintechs there are just in India right now.
Yeah, a couple of thousand at last
thousands.
count.
And so when you have thousands of fintechs in India alone, the amount of innovation is just going to accelerate. So one of the worries that I have being in a 25-year-old company is you can become complacent. We have a system that works. You could just sit back and say, hey, this system works, let's not mess with it. And I think that's a recipe for becoming yesterday's company. And so one of the first things that I did when I came into the seat was really energize the company around innovation. We're going to lead the future forward. We're going to do it as an open platform, with PayPal World being a great example of we want to bring partners together and do this with incredible partners around the world. But we want to be at the forefront. I would much rather, if you believe that disruption is going to happen, I'd much rather be the disruptor than the one being disrupted.
You know, it's important that you talk about being the disruptor as opposed to being disrupted. And I think that's a dilemma that many CEOs, especially who take on a legacy like you have of a 25-year history of protecting the past while also trying to invent the future. What's been the hardest part of the last 2 years in being able to find that balance of protecting the past but also inventing the future?
You know, they wrote an entire book about it. It is called The Innovator's Dilemma. It is one of the biggest challenges that any established organization faces. And the biggest challenge is you have existing revenue streams. You have existing customer bases. And it's very difficult to think about the future, which may actually disrupt some of those revenue streams. We're a large organization. We'll do over $32 billion in revenue next year. Some of those revenue streams may be areas that actually we need to disrupt, and we need to replace them with what the future may be. Leaning into that disruption, and this is something that whether you're a big company or whether you're a small company, you have to continue to think about what is the customer problem that you're solving. I learned very early on that you must fall in love with the customer problem, not your solution. And the challenge with a large company that has been successful is you start to fall in love with your solution. It's worked in the past. Why not just keep doing it? Well, customers' problems change. Technology changes. Demands change. Think about how much the world has changed in the last 5, 10, 15, 20 years. 25 years ago, when PayPal was started, the prevalence of smartphones was zero.
Yeah.
It was zero. And now there are smartphones in every pocket. My guess is in this audience alone, many of you have 2 smartphones in your pocket. And so 5 years from now, how many of us will be wearing AI glasses to conduct commerce? And so we have to be able to be thinking about what does the future hold, what is the customer problem we're trying to solve, and how will we disrupt ourselves?
So let's talk about the customer problem that you're hoping to solve today as you transition to a commerce platform. From a consumer's point of view and from a merchant's point of view, what are the priorities that you chase after today?
So one of the things that PayPal was famous for when it started was solving the challenge of a payment. And payments were very difficult 15, 20 years ago. Payments is a problem that it's not easy, but it's been solved. There are many players, we have many competitors that have solved the act of a payment. The challenge that I think has not yet been solved, that we are leaning towards now, is the end-to-end commerce. And so what does that mean? Well, if you're a consumer, you now have more options to make purchases than you ever have before. You can go online, you can go on your phone, and you can type in almost any set of keywords, or you can open up your agentic app and speak a few words and get dozens and dozens and dozens of options. But how do you know whether it's the right product, whether it's the right price, whether it's from a merchant that you trust? How do you know that your preferences of whether it's a local small business have been captured? So this is all personalization that I think we can lean into, that is a part of the commerce journey for a consumer. On the merchant side, how do we enable small businesses to be able to find the right customer for their right next purchase? How do we enable them to leverage the data, leverage the scale of the billions of users that we've now opened up for them in PayPal World, to be able to find the right customer in a cost-effective way, to be able to continue to sell and grow their business. So these are commerce challenges, not just payment challenges, and for me, that's the future of PayPal.
Yes, if commerce is the future as far as payments is concerned, how do you address the personalization aspect that you spoke of? I would imagine that you're going to leverage the data that you already sit on, both from a consumer's point of view as well as the merchant's point of view. But what's been the hardest part of being able to crack the commerce challenge as you go after personalized experiences, both on both sides of the network?
You know, the advances in artificial intelligence and data networks is making this a lot easier. But first, it's about building trust, because the data is not ours. The data is our consumers. And we've had to have very transparent conversations with our consumers that we think we can build and enable incredible commerce journeys for them by leveraging personalization if they trust us. And the beauty of being a 25-year-old company is we have built up trust over decades now. And so as we've started to roll out some of our personalized offerings, consumers are actually opting in and saying, yes, I trust PayPal with my data. I want a better experience than just my generic experience online. And I will trust you with my data to be able to do it. Now, obviously, we take it very seriously. It's protected, it's anonymized, but connecting a merchant and a consumer together in a personalized experience is just a magical experience for both parties.
So initial days, what are the milestones that you're working towards as far as this transformation is concerned? In terms of numbers, where do you believe you're going to be able to hit the milestones that you hope in the next 3 years, 4 years, 5 years? What's the target for you?
You know, I've learned that you need to have big ambitions for the future, but you need to have KPIs that you hit every quarter. And so without doing our earnings call right here on stage.
Your earnings call's it's a little while away.
It is, but the quiet period has begun. So without going into everything, look, we are seeing acceleration in customer growth, which is very exciting. So we have KPIs around customer growth, both for our PayPal product as well as our Venmo product, which is very popular in the United States. And soon we'll have KPIs for bringing consumers on for PayPal World as well. We have different product segments. So payment volume is something that we look at. We have a branded experience. If any of you are familiar with the PayPal button, that's a branded experience that we look at. We're seeing buy now, pay later as an acceleration. Yeah. That is particularly in a younger demographic, a big move towards buy now, pay later, so we're seeing acceleration there. And we have these KPIs in every geography that we play in the 200 countries around the world. So this is not a, you know, you can wait for 3 years and hope that it takes off. This is
Here and now.
holding our team accountable for the here and now. And I'll give you another example, agentic commerce. Right? Agentic commerce is something that we're leaning into. It's a potential disruptor, but it's also something we want to lead in. And so we were the first company with a remote MCP server to allow merchants and consumers to be able to connect and actually open up a catalog for agentic commerce to happen. So we're leaning into the future as we speak.
Well, speaking about the future, let's talk about PayPal's future in India. Of course, you've done this partnership with NPCI and with UPI. The question that I know you're often asked is, why not domestic in India? Is it because it's a competitive market where you're not the first mover by a long shot? Is that what holds you back? I mean, why the decision to not look at the domestic market in India?
Look, we have many markets around the world that we play in.
But it's an important market clearly for you, and even from a talent point of view, it's your second largest employee base.
It's a critical market, which is why I'm on stage with an incredible partnership with NCPI International. Right? I mean, there is a reason that we are here and that Ritesh and I were on stage half an hour ago with UPI as the first wallet. That shows how important the India market is to us and to the entire world. And, you know, India, the way I think about it is it's not just a domestic market. Everywhere I travel around the world, there are remittances where India plays a critical role. There's commerce where India plays a critical role. And we've actually, part of what we establish ourselves with at PayPal is the ability to do cross-border payments and the ability to connect the world together. So I would rather have us spend our time and energy creating those connections across the world and let incredible products that consumers domestically know and love win the market here and enable us to connect them around the world.
But, you know, as an outsider looking at the Indian market and what's happening in the Indian payment space today, what looks most exciting to you? What has surprised you even?
I think what I just touched on, the cross-border payments, is something that I think has surprised me. Even I just spent the last week and a half traveling through the Middle East, and every location, every conversation I had, India came up as a location where there was just movement of talent, movement of money, commerce opportunities. Whenever I travel through Europe, India comes up, and the same with the United States. And so, you know, India is becoming, if not already here, as an innovator and a leader globally. And that's why it is so important for PayPal to play a role and connect India to the rest of the world.
Well, that does deserve a big round of applause for all of you in this room for what you've been able to achieve in the past decade of really putting India on the global fintech map. Plenty of excitement in this room, lots of young people pitching their ideas. You said that PayPal Ventures is open to looking at exciting ideas, including here in India. Are you actively scouting?
Yeah, we have a PayPal Ventures arm. I don't know if they're in the room, but many years ago, we actually were one of the first investors in Pine Labs, which I know is an incredible solution.
All set to IPO as well.
Which will be wonderful for our PayPal Ventures as well. So, look, this is a market. Our venture arm is really about finding the best and the brightest in emerging markets for us. And, you know, we get a lot of, you know, I get to spend a lot of time domestically in the United States with startups, but we want a venture arm that can be out in markets where, you know, I'm not necessarily all the time. And so if there are incredible startups and fintech startups in this market, we want to have the conversation.
You know, you brought up Pine Labs, and it's one of the companies that's looking at IPOing, you know, shortly, in fact. Profitability, and I think that's the question that's also being asked of Indian fintechs, and we've started to see that being delivered. Some are now listed, and many hoping to list in the near future. Monetization, with especially the transition to commerce, what kind of avenues does it open up in terms of being able to draw in incremental revenue and boost profitability?
Yeah, so there's a couple of pieces to the question there. The first is, I've run my own startups as well. It is good to be pushed on profitability. As a startup, it is important. You have to have a sense as to how to monetize and how to drive profitability over time. You may delay it intentionally in order to scale, but if you don't have a path to profitability, it's only a matter of time until the cycle comes, and then there's a challenge. For us, we are looking for obviously at the scale that we're at, we have to look for large opportunities. Commerce opens up new avenues for us. We've launched an advertising business, which is a new business for PayPal, but allows us to, again, leverage that personalization, enabling merchants to be able to leverage personal data to target the right customer at the right time. There are many successful companies that have used advertising as a monetization lever and a growth lever. That's just one example for us.
AI, and I think everyone's talking about what an AI world is going to mean, what an agentic world is going to mean. Have you started to see the benefits of that for the business in incremental ways already?
We sure have. A couple of ways. First, just internally for how we operate, we use AI across the entire organization. Every function, everybody in the organization. We actually, just 2 months ago, held our first PayPal AI Summit, where we took every single employee across the organization and walked them through access to AI models, access to orchestration layers, access to information and examples of how they could leverage AI to be more effective and efficient in their roles. And the feedback we're getting from employees is just exceptional. The AI is enabling them to have superpowers that they didn't have before.
Like what?
Oh, the ability, I had sales reps being able to say, I don't have to wait for engineers to come build pipelines for me. I can just type it into my AI agent and actually build my own technology applications on their own.
So should the engineers be worried?
Absolutely not. They now don't have to build sales pipelines for sales reps. They get to build great applications for consumers that they're excited about, and they're getting more effective and efficient as well. So for me, AI for our employees is just giving them incredible powers and making them even more effective. And then we're leveraging AI for our consumers and our merchants, and enabling consumers to be able to, again, agentically just search for the right product, use natural language to be able to say, I'm going to a wedding in a certain location, and have the AI understand the weather, understand what other purchases they've made, understand what's in their closet already, and be able to give them a great recommendation is just an advanced commerce experience that is really wonderful for consumers. And for merchants, being able to get access to not just all the consumers on PayPal World, but being able to target their products and services to the right consumer at the right time, we think AI is going to be a real opportunity for
call it the fireside chat coming your way. So once again, all the curious
Kind of people that you hire, what
guys that are still standing right around, go ahead and please take your seats.
product and a service and an innovation perspective?
I think speed and velocity of innovation is a requirement right now in this industry. And so, the talent we're bringing in, the good news is with new technology, the talent we're hiring is already AI native. They've been using AI and will be, every new university class that graduates will be using AI. And so it's just going to become a But I also think that's what consumers expect now. These cycles of years and years before new product releases come out, I think is yesterday's game. We have to be able to move quickly.
Well, talking about moving forward, and I think one of the examples that I want to talk to you about is what you've been able to do with Venmo. And I think that's something that this audience would like to hear about. What's been the biggest learning of being able to crack Venmo, which has been a category creator almost, which has sort of become a verb in many, many ways. What's been the biggest lesson and learning from Venmo? And, could we expect Venmo in India at some point in the future?
Yeah, so Venmo, for those of you that aren't familiar with it, is started as a peer-to-peer payment system in the United States. It's growing incredibly quickly and continues to scale. And I think the unlock for us was really, again, going back to the customer problem, why were customers using the product? And when you go and you sit and you talk to customers that use Venmo, oftentimes it's them interacting with their friends or family after they've had a shared experience. So an example would be, I go out to lunch with my friends, one of my friends pays the bill, and I Venmo them. Again, it's a verb now. I Venmo them, $10 for splitting the meal. So understanding that example allowed us to then work backwards and say, well, if you're using Venmo to split the bill, could you use Venmo to actually create that experience up front? And when you think about it, now you start to open up the ability to make payments online. You open up things like debit cards so that you can actually make the payment in person at the restaurant. And then we have a long roadmap of innovation that is all about the shared experiences that will be coming. So I'm not going to give you the full roadmap right now, including where we may or may not launch Venmo in the future, but right now, if you get to the US, download it. It's an incredible product.
Well, since we're talking about the US, let me also get a pulse check from you on what's happening as far as consumer spending is concerned, not just in the US, but also across the other markets that you operate in. There has been a resilience that we've seen through all the uncertainty and the volatility. The headlines may be screaming different things, but consumer spending has held up. What are the indicators that you're picking up on in terms of consumer preferences, where they're spending, how they're choosing to spend today?
Yeah, so again, there is an incredible amount of noise in the world right now, but consumers are resilient. And it's actually very inspiring to see how consumers manage through and block out the noise. I think the only big shift that I would highlight is something I touched on earlier, which is a shift away from debt and towards buy now, pay later. And again, buy now, pay later is a much shorter term, much lower value ability to spread payments across. And that is actually a sizable shift that we're seeing, particularly in a younger demographic. So it's really away from credit cards as their vehicle for credit and towards buy now, pay later.
So buy now, pay later is the big shift that you're seeing as far as the younger demographic and the younger cohort is concerned. What are some of the other interesting trends that are emerging that you intend to tap into and perhaps this audience here could focus on as well?
There's a lot of travel that's opening up now, right? I think there was a hunger coming out of the pandemic to actually get back out into the world, which is why cross-border transactions, things like PayPal World, where people can now travel the world with their domestic wallet and make the purchase. Those are the types of trends I would think about. So, obviously, whenever you start something, you want to solve the local problem, but local problems are becoming global because it's how consumers want to spend. They don't look at themselves just as within a certain community, right? I mean, think about how big of a shift that's been. 10, 15 years ago, people bought from their local community. Now they can go online and buy from anywhere in the world, and they want to travel anywhere in the world. And so those are the types of trends that we're thinking about.
You talked about bringing the culture of innovation back and bringing that mojo back as far as PayPal is concerned, and you've spent the last 2 years being able to do that. What does it take to recreate a culture of innovation? And I use that very carefully.
Yeah. Well, first, you don't forget where you came from. I stand on the shoulders of giants, and there are many leaders and many incredible, talented folks that have been at PayPal before. But I think in order to create any culture of innovation, you need an ownership culture. You need a culture where every single employee across the organization is obsessed about the customer and feels like they have an impact. We talk a lot about our mission. We talk a lot about who we serve, the customers that we serve. And I will tell you, in the 25,000 employees that work at PayPal, many of which are in the audience today, they jump out of bed in the morning with their heart beating faster, off to serve consumers and small businesses around the world. And so when you have passionate employees with a clear mission, clear priorities, and an ownership culture where they feel like their work can make a difference, innovation comes.
It's interesting that you talked about communication, because I remember one of the things that you chose to prioritize when you became CEO was bring transparency back much more into the forefront. Transparency within the organization is one aspect, but transparency with the consumer, because it's built on the currency of trust, is another aspect altogether. How have you been able to focus and balance both, transparency within and outside as well?
I don't think they're two different things. I think being clear what's important to us, both internally, and being clear what's important to the customer, and having a very clear and honest conversation is paramount, right? We make decisions that are principle-based and customer-backed, and we shouldn't be afraid to tell consumers how we make decisions. If you look at any of the notifications that we send out about changes to our terms of service, changes to our privacy policy, changes to our products and services, we're as transparent as I think we can possibly be with consumers so that they understand the why behind the change. We talk about it internally, we talk about it externally. So I don't think you can operate an organization where you have an internal narrative and then a consumer narrative. I think it has to be one narrative that you're confident and willing to stand up on stage and share.
Speaking of changes, what we have seen here in India, specifically in the last few years, is there's been some back and forth on regulation, especially when we talk about regulating fintech companies. And I would imagine that we're back to some sort of an equilibrium at this point in time where companies feel that they can go back out and innovate and try new stuff. How's the regulatory environment in the world today, because you operate in different jurisdictions across 200 different markets? We've always seen this innovation and regulation balance, but what are you seeing today from a regulator's point of view in enabling inclusion, in pushing fintechs as well? How different is India from many of the other markets that you operate in?
It's complicated. Not India. The regulatory environment globally is complicated because it's just different. And it makes sense. Every region around the world needs to make their own regulatory decisions. Some, there's incredible private-public partnership. Some, they're still moving through it. As a global organization, we have just an amazing set of government relations teams and employees that work to make sure that we can serve what the government need is as well as the consumer need in every part of the world. If I were to just sum it up, though, I do think there is a shift towards ensuring that a global world can exist. I don't see very many countries that are trying to lock down commerce and trying to just keep keep constraints on consumers and merchants. They absolutely want to protect. And money is important, right? I mean, you think about money, it is the thing that gives consumers and merchants the most anxiety. So it is important to protect it. It also needs to be able to flow. And so we work very hard with regulators to meet their needs, but also push the envelope to help consumers.
So let me end then by asking you about the world that we're living in, cryptos, stable coins. What does all of that mean as far as PayPal is concerned? The US has moved the legislation. We've got the Genius Act now pushing all of these commodities. How do you see a world where PayPal operates with cryptos and stable coins, etc.?
I would just go back to what I said earlier. I think there's going to be more disruption in just the natural state of the financial system over the next 3, 5, 10 years than the last 20 years. Stablecoins, agentic commerce, all of this is going to contribute to that disruption, and we'll be at the forefront. Our job as a leader in this space is to push the innovation, partner with incredible partners like we just did this morning, and continue to write the rules of what the next chapter of fintech will be.
And a last message to India?
Well, thank you for having us. Thank you for being incredible partners with PayPal. We are here to stay, and we are here to partner and create an incredible world together. Thank you.
Alex, many, many thanks. Ladies and gentlemen, a big round of applause for Alex, and congratulations once again to the PayPal team. We wish you the very best of luck with your plans here in India. Thank you very, very much.
Thank
you very much.
Thank you. Thank you very much, Mr. Alex Chris, and thank you very much, Shireen, for spearheading this session for us so beautifully. They often say that to get the right answers, one needs to ask the right questions, and we were indeed in the able hands of Shireen Bhan. Thank you so much again for joining us. All right, ladies and gentlemen, now this is where I'm going to be requesting you all to continue being seated. We're going to be expecting a lot of movement here and there, and that's bound to happen. That's why we call it a fest. But that being said, for those who have just entered inside the hall, grab those seats right away. And also in a short while, after a couple of minutes, of course, we'll also be having the presence of the Honorable Finance Minister, Srimati Nirmala Sitharaman ji, who will be joining us in a short while. But before that, I'm going to request all of you to please take your seats. The first few rows, we're going to request you to please keep them empty. We're going to request you to very quickly grab the seats right behind. The first few rows that are facing the podium, my podium, the ones in black color, all the seats that are color-coded black, I request you to please vacate these seats. Please empty these seats. The ones that are color-coded black, I request and please kindly oblige as we have protocol to follow. So I'm going to be requesting our delegates, the ones who are seated right ahead on the seats that were color-coded black, please do take your seats to the left or right behind. Please kindly do so, but please very quickly take your seats. You know, the one good thing about a discussion is that there's always another group discussion that follows, be it with the speakers, be it with the moderators, or amongst ourselves as peers. But that being said, it is a fest. I can see that everyone's joining in to be part of the conversation. Let's do that really quick. All the ones who just entered inside the hall, let me guide you to your left. We've got a lot of seats right available there, so please go ahead and occupy the seats to the left. The ones that are color-coded black, I request the delegates to please either move behind or move to your left. Thank you. Meanwhile, we'd also like to take the opportunity to thank our diamond partners Meta, NABARD and Scienzy, Credit Insights partner TransUnion Sybil, and last mile fintech partner Ruger Fintech. So that being said, we're also gearing up for the next keynote address, and this is all about from Paris to Mumbai, connecting continents through finance and technology. That's our next session coming up. If I could please request all of you to very quickly take your seats. And for those who have already taken your seats, thank you. Well, a lot of conversations will continue. And that being said, we are now about to deep dive into our next keynote address. And this is where we will be hearing from Mr. Francois Villeroy de Galhau, Governor, Banque de France. Now, we were to have his august presence here at GFF 2025. Unfortunately, while he couldn't join us in person, we do have his message in a video format that we'd like to share with all of you. In fact, I'm going to urge once again, everyone, please take your seats, because up next we have a video message coming in from Mr. Francois Villeroy de Galhau, Governor, Banque de France, NPCI. So this is all about from Paris to Mumbai, connecting continents through finance and technology. So let's deep dive into this message from Mr. Francois.
Ladies and gentlemen, I'm delighted to address this audience at the Global Fintech Festival of Mumbai, a city that embodies the momentum of India's economic development and above all the energy of its technological dynamism. I warmly thank Governor Malhotra for his friendly invitation. New technologies, and I will not speak only about AI, are driving profound changes and challenges, and the financial sector is no exception. In our current environment, payment systems have become more than just a technical issue. They are the cornerstone of our economy's stability, sovereignty, and a bridge to our economic partners. Today, I will focus on how we can accordingly reinforce global financial interconnectedness. I will therefore first discuss how, in the short term, innovation can help interlink legacy fast payment systems and connect different economic areas. I will then turn to the medium and long term, where innovation can strengthen both monetary sovereignty and global integration. Let me start with the short term about interlinking and connecting. Cross-border payments deserve our consideration, not only because of their size, but because of their role. Quantitatively, their importance is they amounted to 194 trillion US dollar last year and are expected to reach $320 trillion by 2032. But what matters even more is their purpose. They connect our firms and our markets. They underpin trade and investment. They sustain economic development through
segment of the program, which is why all the ones who are still standing right across with all that enthusiasm, I'm going to urge you all to very quickly please take your seats. Well, that being said, we'd also like to thank our incredible sponsors as well. We'd like to thank the Speaker Lounge partner, OneCard, Cloud Communications partner, Proximus Global, Merchant and Consumer partner, Bharat Pay, Future of Global Payments partner, PayPal, and Diamond partners, PayU. So we'd also like to thank them for their incredible support. But that being said, a very exciting segment is about to begin, and this is where I'm going to urge for each and everyone's attention. I'm going to urge all of you to also please take your seats. And with that, ladies and gentlemen, I'm going to say that just one more time. Please do take your seats for our next session for an exclusive preview of PayPal World right here at Global Fintech Fest 2025. Here we go.
Introducing PayPal World, connecting the world's largest digital wallets through a single groundbreaking platform, allowing people to shop anywhere PayPal checkout is available using their preferred payment method, or to send money to friends and family across
Good morning, everybody. It's wonderful to be back here at the Global Fintech Forum. Thank you very much, Kavya, for that fabulous introduction. And congratulations, Alex. Note to every founder, CEO in this room, carry your cheering squad with you. And props to the cheering squad for a wonderful, rousing welcome here. It's a great start to this morning's session. It's always wonderful to be here at the Global Fintech Forum for us at CNBC TV 18 because we've been part of what's happened with the Indian startup story for the last 23 years, and there's plenty that's happened on the fintech side. You just heard Alex talk a little bit about PayPal World, and I will get into the details of that, but just a quick overview on why this conversation with Alex is important in the context of what's happening with Indian fintech. PayPal has been around for over 25 years. It's a profitable venture. It's also a venture that operates across 200 markets, 430 million customers, both on the merchant side as well as active users, and it is the largest two-sided network today. And it has plans for India, of course, not for the domestic payment segment just yet, but they are looking at investing in Indian fintech. So those of you who have an idea, Alex is your man. Perhaps we could have some interesting conversations happen here at GFF. But Alex, without further ado, let's start by talking about PayPal World. Congratulations on launching that. But I believe the origin story for how PayPal World and the UPI connection happened was in Florence when you met Dilip Asbe.
That's correct. Well, again, thank you for having me. It's great to be here with you all, and it is amazing to bring my team along here. They are just an incredible team. So yes, the beginnings of PayPal World, we had some ideas of creating interoperable wallets, right? This is part of our mission to connect the world and ensure that we are creating what the future should be. But Dilip and I were at a conference together in Florence, Italy, of all places. And we were just having a sidebar conversation, and he was telling me about the progress and the incredible expansion that UPI was going through at the time. And I was maybe 4 or 5 months into the job at PayPal. And we just started having the conversation of what would happen if we could make it simple, seamless, frictionless, and easy for our consumers and our merchants to interact together. And we both thought that was a pretty good idea, and that was really the beginning of setting off. Now, let's be transparent. The easy part are two leaders sitting in a room in the middle of Florence, Italy, going, wouldn't it be wonderful if that happened? The hard part is what the team does afterwards, from both teams coming together and working through all the challenges. But here we are on stage today, announcing the partnership, solidifying, and launching again in the coming months. So it's very exciting.
Well, certainly very exciting, but let's talk about the aspiration that you have as far as PayPal World is concerned. UPI and NPCI are just one of the partners that you've signed up with. There are a bunch of others that you have signed up with, and I would imagine more on the way. What's the aspiration? What do you hope to do with PayPal World?
So this is the vision of the world that I hope we all want to live in, right? There are domestic wallets that exist anywhere in the world. You can go to countries in almost every part of the world, and there is a domestic wallet or multiple domestic wallets that is where people are interacting. And I fundamentally believe that the future of money is going to be a domestic wallet. And so if you believe that, or a fintech wallet, so if you believe that wallets are going to be the way that people are going to interact, then it makes sense to make them interoperable. But that's just not how it works today. If you take your digital wallet and you travel to the United States, you travel to South America, you travel to China, many of these wallets won't work. And so you're stuck having to create a second digital wallet or move cash, in which case you're paying significant amount of cost, friction, and you're having to juggle, and it's just not a great experience. In addition, if you're a merchant, you're only able to take payments from local currency or from local wallets that you know. It's one of the things that PayPal has actually worked very hard on in the United States and throughout Europe, is making it as seamless as possible for merchants to accept payments from anyone. But it really is only limited to a certain portion of the world. And so if you fast forward the vision of PayPal World is making a platform that any digital wallet can connect to, so that any consumer in the world can use their home digital wallet where they have multiple instruments, their banks, if they have credit cards, if they have buy now, pay later, whatever they want together, and be able to travel in person, make an e-commerce transaction, or in the future, an agentic commerce transaction with the wallet they have safe, secure transactions with, but with any merchant in the world. And think about how powerful that is for merchants. Merchants around the world will now have access to billions of consumers. Billions of consumers. That is a very exciting world.
So to put it simply, a digital global wallet, that is what you envision as far as PayPal World is concerned.
That makes it seamless and frictionless for each consumer to just not have to think about it.
Not have to think about it. But, you know, since we're talking about change, let's talk about what else is changing at PayPal. And I remember that you said at an investor call that 2024 was a year of transition for PayPal as you got back to profitability. And 2025, in your words, is going to be a year of transformation. Now, for the audience sitting here, explain to us, 25 years on, what does transformation look like for PayPal as you transition from being a payment service to becoming a commerce platform? What will that entail? What will change?
Yeah, so it is a real privilege to lead a company that has a 25-year history and really is the original fintech in many ways at PayPal. This week I celebrated my 2-year anniversary at the organization, so I am still...
Congratulations.
Thank you. I made it 2 years. But one of the things that I think a lot about, and one of the reasons that drew me to PayPal is
forward to your left, please do grab your seats as the session will commence within the next couple of minutes. So kindly stay tuned and please be seated. here at the Global Fintech Fest 2025. I also invite Ms. Sohini Rajola of NPCI to also please join our dignitaries on the dais. With that, ladies and gentlemen, may I now request all of you to please take your seats as we commence this very important segment here at the GFF 2025. So first up, may I please invite Mr. Vishwas Patel, the Chairman of Payments Council of India, to please come forward to share his welcome address for this exclusive session. So ladies and gentlemen, please put your hands together, Mr. Vishwas Patel.
So good afternoon, friends. Honorable Minister for Finance and Corporate Affairs, Nirmala Sitharaman ji, Chris, the Chair of our Global Fintech Festival Advisory Board, Sohini from NPCI. Okay, welcome to the vibrant city of Mumbai and welcome to the 6th edition of the Global Fintech Festival, the world's largest fintech festival. The event over the next 3 days is bringing together the sharpest mind to chart out a better future, which is powered by AI. Over the next few days, we are privileged to host thousands of delegates and exhibitors across the globe. Together, we will explore the advancements in digital payments, unveil cutting-edge technologies, and engage in thought-provoking discussions about AI and its impact on digital payments and the regulatory challenges that shape our industry. For us, it's also critical to discuss on the education of the new digital payment users, where we go beyond the existing 300 million users, specifically from fraud perspective. Even from digital payment service providers' perspective, we need to have a thought about the revenue streams. Also, we also need to, it's a unique opportunity to discuss these critical issues, share insights, forge partnerships, and ignite ideas and drive the future of financial services. From startups to established institutions, we are all here to learn from one another and to challenge the status quo, to envision a future where financial inclusion is a reality for all. I'd also like to use this occasion to be grateful to Honorable Prime Minister Sri Narendra Modi ji for gracing this event. He'll be coming for the 2nd year in a row and imparting his valuable foresight, creativity, understanding, as well as ideas to drive the future of financial services. We are also grateful to Honorable Finance Minister Nirmala Sitharaman ji for supporting PCI and the Global Fintech Festival from inception. She has been a true champion of Indian digital payment industry and has always been accessible to us to resolve many of our industry's issues. Under her visionary leadership, our country has made remarkable strides in financial technology, championing initiatives that empower citizens and foster innovation. Her commitment to creating a robust regulatory framework has been instrumental in nurturing the fintech ecosystem, making India a global leader in this space. I now invite Chris to say a few words. Please, Chris. Thank you.
Thank you, Vishwas. Let me also add my welcome again to all of you, delegates, partners, overseas delegates, friends of GFF 2025, media personnel. And as I said in the morning, we have worked very hard to create a wonderful program for you for the next 3 days. We have worked hard to put together a platform that allows us to deliberate and come out with ideas and plans for the future so that we can create a financial ecosystem, not just in India, but to the world, that's inclusive, that's driven by technology, and that allows us to look at a platform that leverages the best in the world. Now, India is one of the brightest spots in the global economic landscape. It's the fastest growing, stable, large economy in the world. In the last few months, India has reduced income tax for the middle class as well as streamlined and simplified indirect taxes. This leaves more money in the hands of consumers and boosts economic activity. This market, of course, is attractive to the rest of the world because of the 1.4 billion consumers. India is also a source for talent and more innovation for the world. India has leveraged technology for public good and inclusive growth. In AI too, we embrace technology and understand that has to be used responsibly. The government and regulators, along with industry, have created an ecosystem that nurtures innovation and entrepreneurship. The explosive growth in the fintech space is the result of these. This platform is a result of this collaboration. It is in this context that I welcome the leader who has catalyzed this growth combined with stability. And it's my privilege to request Honorable Finance Minister of India, Srimati Nirmala Sitharaman ji, to inaugurate GFF 2025 and deliver the inaugural keynote address. Ma'am.
Sure. Good morning, and what a energetic gathering. Thank you, Chris, for inviting me to be here. There's so much happening among yourselves, but I thought I'll just touch up on a few things which are happening from the government side. When it comes to talking to business, when it comes to talking to people in research and technology, we like to remain in the fringes and watch. We like to remain in the fringes and help where we are asked to come in. And that broad guiding principle derived from Honorable Prime Minister's guidance that we have to enable businesses and not interrupt in their progress. And that is what brings me here with a sense of hesitation that while I like to benefit from the conversations which are going to happen here, equally I'm not here to say, oh, the government has come to inaugurate. No. It might be the way Chris has put it out, but I'm here to just let you know what we have done till now on the request of the industry and what we will want to take away from these 2 or 3 days deliberations. So take what I speak in that spirit. So, formally, it gives me immense pleasure to be here, especially in its 6th edition of the Global Fintech Fest. Actually, over the years, it has gathered so much momentum that it has truly evolved into a global forum and an assembly of accelerating collaboration and shaping the international discourse on the future of financial technology. It also sort of reaffirms India's ascendancy as a global fintech leader.
and setting benchmarks in innovation, in scale, and in inclusion, while strengthening the collective resolve to shape finance as a force for global good. There are observations which one can always immediately make. When you do it for the global good, when you do it as a public infrastructure, the simple motive is that it should be for the public good, and at no point in time it gets weaponized. It is important to constantly remind ourselves that technology cannot be, in that sense, truly mastered, but having obtained certain proprietary rights over some parts of it, we should refrain from weaponizing it. I'm purposely adding this one line because constantly globally we see technology advancements sometimes being turned inward, that global progress itself gets questioned because of weaponizing it. So the Global Fintech Conference that you're holding 2025, this edition, with its timely theme, Empowering Finance for a Better World, powered by AI, captures the spirit of the moment as we harness the potential of artificial intelligence to build a financial ecosystem that is more inclusive, resilient, and sustainable. Fintech in India is not a niche urban convenience. It is a nationwide enabler of economic empowerment. Fintech in India has again not merely digitized payments. It has democratized finance. It has transformed financial access into a public good, empowering millions to save, invest, borrow, and ensure themselves with dignity and transparency. India's journey in innovation and adoption with respect to new financial technologies is a story of unprecedented transformation. The scale of this transformation can be best understood through the numbers that define it. In a span of a single decade, we have connected a population equivalent to that of the entire European Union to the formal banking system, opening over 56 crore Jan Dhan bank accounts. India is now ranked third in the world for the number of fintech companies and also leads in digital payment volumes, having processed over 18,580 crore UPI transactions worth 261 lakh crore rupees in 2024-25. Nearly half of the world's real-time digital transactions happen in India with adoption rates of 87% compared to the global average of 67%. Government of India has leveraged digitization by introducing direct benefit transfers as a system for all its social welfare schemes, which has significantly actually boosted the welfare efficiency by reducing subsidies and leakages. It has resulted in a savings, which is worth mentioning to this August gathering. The savings is 4.31 lakh crores of Indian rupees. And between 2014 and 24, this is the saving of 4.31 lakh crores because of DBT being adopted completely by the Government of India, 16-fold rise in beneficiary coverage. So not just your saving, but actually you've reached a larger number of beneficiaries. Technology has facilitated it for us. So a shift from paper-based disbursals to direct digital transfer has ensured that public funds reach the people that they are meant for and not for ghost entities. So the DBT model presents a valuable lesson, and as the first spark, I would say, it can also absorb a lot more better technologies, better innovations, better ways of handling technology, and so on. You have a world out there for you all to be innovative, even about improving the DBT's efficiencies. So the contributions of startups, engineers, entrepreneurs, investors in this have been immense. So the Government of India's policy has actually to play its role in nurturing the growth and innovation of fintech sector through a balanced approach, balanced mix of policy support, digital public infrastructure, and forward-looking regulation has actually shown the results. I'll list, instead of getting into details, Aadhaar, UPI, Account Aggregator Framework, DigiLocker, all of them have really decisively changed the contours of how public finance is handled for the betterment of the citizen. India has actually stepped decisively into the global AI arena with the launch of the $1.3 billion India AI mission. It is a comprehensive strategy spanning the entire AI value chain. And that is the reason I first of all wanted to say that amount not in rupees but in US dollars. Commissioning of 34,000 GPUs at concessional rates to spur innovation across startup ecosystem, researchers and academic institutions. Launch of the AI, which is India AI Data Sets Platform, AI Kosh as it's named, incorporating 2,000 plus verified and indigenous data sets, use case across sectors, and sandbox environment. Supporting development of 4 foundational LLMs that cater to India context by supporting vernacular languages and are multimodal in design. Setting up 4 centers of excellence and India Future AI Skills Program to boost India's AI talent pool. So these are first lot of steps that we have taken with the AI, meaning India AI mission. Now a word about the GIFT City. GIFT City is a bold vision, an initiative of the Honorable Prime Minister, Shri Narendra Modi, even when he was the Chief Minister of Gujarat. Now it is in a full bloom. It presents immense opportunities to the fintech sector. GIFT International Fintech Innovation Hub is the city's fintech incubator and accelerator where fintech startups can secure funding, obtain legal guidance, and scale their businesses. It has a network of industry experts, investors, mentors, and corporate bodies that will help fintech drive innovation and support them for their growth. Fintechs must leverage, I'll appeal to you all, you must leverage opportunities in the GIFT City. In this context, I am pleased to launch today the foreign currency settlement system in the GIFT City. So that tells me I don't need to explain what it is. You're quite aware of the importance of such a step, and I'm indeed grateful to the GIFT Authority who are all present here for having come forward on this. So, for those of us who would like to hear what exactly it is, transactions in foreign currency by entities in IFSC are currently settled through the correspondent banking arrangements, which is routed through different participants and multiple nostro banks. Such transactions are not settled on a real-time basis and usually settle with a lag of up to 36 to 48 hours. That's the present story. But the foreign currency settlement system, which gets launched today, seeks to solve this problem by doing a few things. One, facilitating seamless and efficient settlement of foreign currency transactions within IFSC on a real-time basis, not 36 hours, not 48 hours, just as it happens. Enhancing liquidity management and operational resilience. Ensuring compliance with regulatory oversight under the Payment and Ensuring Settlement System Act, that is the PSS Act, by the IFSA, the authority which is there. So, the FCSS will be a payment system within the IFSC designed for settling transactions in foreign currency on a real-time or near real-time basis. So I congratulate the IFSC on taking this kind of a forward-looking step. So with the operationalization of the FCSS, GIFT IFSC will now join a select list of financial centers that include Hong Kong, Tokyo, Manila, and so on, that have the infrastructure to settle foreign currency transactions locally. So together, these initiatives spanning policy, infrastructure, AI, innovative culture, and also regulations illustrate how Government of India has laid the groundwork for a vibrant, inclusive, and forward-looking fintech ecosystem that is powering India's rise as a global fintech leader. We have also been working to strengthen the factors that support functioning of GCCs in India, including framing appropriate policy framework. India's 1,800 plus global capability centers are at the forefront of the country's remarkable transformation into a powerhouse for technology-driven innovation and impact. Over the past decade, India's GCC landscape has evolved from cost arbitrage hubs into high-value engineering, R&D, and innovation centers, particularly in the banking, financial services, and insurance domain, the BFSI as you use an acronym. India's fintech GCCs are enabling multinationals to, one, launch new digital financial products faster, reduce costs and time to market, and deploy AI-led financial services at a global scale. So India offers an unparalleled opportunity for fintech GCCs to scale innovation, as we have a deep talent base and also a favorable government policy. India offers access to cost-effective and high-quality technical, entrepreneurial, and financial services talent pool. Global financial services leaders have immense potential to build, to scale, and to transform from India through setting up fintech GCCs that not only serve the world, but also shape its future, the financial architecture. The theme of the GFF 2025, Empowering Finance for a Better World Powered by AI, is apt given the rapid developments in AI across the world. Just as the internet and mobile technologies defined the first chapter of fintech growth story, the next, or what is being shaped now by AI, blockchain, and intelligent finance. Sorry. Fintechs must use the technologies to design better product and services. Thank you. That's So fintechs must use the new technologies to design better product and services. They must also continue to enhance transparency, predict risks better, and personalize services responsibly. So India contributes 16% of global AI talent and is among top 3 talent markets. Indians are the second largest contributor to public Gen AI GitHub projects. It is estimated that at least that all AI-enabled GCCs will, in all likelihood, contribute 30 to 35% of revenues of the India's AI services market by 2028. 30 to 35% of revenues of the India's AI services market by 2028. The potential for becoming the global hub for India and for building various AI products and services is very high, is not an exaggeration. Given the large population, with nearly 650 million smartphone users, we should create scalable models for sectors beyond finance, such as healthcare, education, agriculture, MSMEs, exports, and so on. India can also build AI products that fit diverse use cases across the world. It can be a laboratory for developing and testing AI aids. Our AI stack must be rooted in Indian languages, local contexts, and multimodal interfaces so that it can be widely accepted and accessed by our citizens. Focused approach across the AI stack can make India the AI torchbearer for the global south. So as this new wave gathers momentum, fintech innovators, investors, and regulators all have a shared responsibility to build systems that are not only innovative, but also resilient, secure, and inclusive. Undoubtedly, artificial intelligence is transforming finance, transforming governance, and also everyday life. But as we harness its powers, we may remain conscious that technology must always serve humanity. Even as AI opens extraordinary possibilities, we must confront its darker side. The same tools that power innovation can be weaponized for deception and for fraud. I'm not personalizing it, but I can say I have seen several deep fake videos of myself being circulated online, manipulated to mislead citizens, distort facts. It was a reminder of the urgency with which we must strengthen our defenses. The new generation of fraud is no longer about breaching firewalls. It's about hacking trust. Criminals are using AI to mimic voices, clone identities, and create lifelike videos that can manipulate people. So, in order to address the impersonation and false representation targeting investors, it is heartening to note that SEBI, in partnership with NPCI, has launched a dedicated @valid, which is a UPI handle for SEBI-registered investor-facing intermediaries, with category suffixes such as .brk for brokers and .mf for mutual funds. Major brokers covering over 90% of investors and all mutual funds have already enabled it. The @valid handle establishes a verified, secure payment channel in the securities market, while preserving existing payment options, improving safety and accessibility without disrupting user preferences. So SEBI has rolled out SEBI Check, which allows investors to verify UPI IDs and bank account details, that is the account number plus the IFSC, of registered intermediaries across the UPI, NEFT, RTGS, and IMPS before initiating payments via the web portal and the Sarthi application. So the framework embeds responsible use of technology through privacy, preservation, verification, secure processing, audit trails, continuous improvements which are informed by flagged mismatches and user reports. So, this is a good moment, I would think, to reflect on what kind of financial future we wish to build and how do we get there. So I have 4 messages, each with a few details. First, fintechs must essentially focus on the fundamentals, such as revenue growth, innovative product offerings, profitability, risk and compliance capabilities. So within that first message, I would like to add, as many of the fintechs mature, there will be challenges of meeting heightened expectations around financial performance and regulatory compliance, while continuing to innovate in the face of emerging competition. Focusing on fundamentals provides the cushion to continue innovating, investing in R&D, and weathering downturns. Firms that balance innovation with prudence can pivot faster and scale more responsibly. Sound risk and compliance frameworks help maintain customer confidence, which is critical for long-term survival. The future of reward will reward resilient innovators and not just disruptive entrants. The second message, global fintech revenues are projected to touch $1.5 trillion by 2030, in less than 5 years. But rapid growth also brings responsibility. In that, so in my second message, I'd like to say a few things more. In a country as diverse as India, with varied levels of literacy and digital familiarity, the shift from offline cash-based system to online fintech ecosystem comes with real challenges. Digitalization introduces significant challenges in terms of cybersecurity breaches, digital fraud, to unethical lending practices. As millions of citizens join the formal financial system, the focus must be to expand beyond innovation towards trust, safety, and inclusion. Speed and scale must walk hand in hand with safety. Regulations too must evolve, ensuring that the fintech revolution remains secure, responsible, and sustainable for the long run. My third message now, responsible regulation is not a brake on progress. It is a seatbelt for safe acceleration. Through the RBI regulatory sandbox and the self-regulatory organizational framework, SRO framework, we have created space for experimentation with accountability. These mechanisms encourage responsible innovation in a supervised setting. Work with the regulator. Share insights with from your plans and experimentation so that the next generation of fintechs can build on stronger and safer ground. My last and the fourth message, fintech sector must help cover the small remaining gaps in our financial ecosystem. What are they? Bring your creativity and technological prowess to solve the persistent challenges of credit access for our MSMEs, financial inclusion for our women and gig workers, and the development of innovative green financing and sustainability-linked products that can empower our transition to a low-carbon economy. After all, one additional observation, which many of you all would like to hear with a bit of a hesitation, AI itself requires huge power to run it. You need to have a sustainable green supply of the guzzler that AI is. We cannot overlook that fact. Help us build the tools that will power a secure, sustainable, and equitable future. So to conclude, 3 decades ago, in 1995, India's first ever mobile phone call was made between Delhi and Kolkata. What seemed like a modest technological milestone ignited a revolution that reshaped how 140 crore Indians live, work, and connect. Mobile phone has evolved from a luxury into an indispensable tool of empowerment. Now, it is now India's bank, classroom, and television, the centerpiece of its digital transformation, India's digital transformation. So as we move towards Viksit Bharat by 2047, we must all collectively ensure that technology continues to serve as a bridge and not as a barrier. It must deepen trust, safeguard privacy, and uplift every citizen it touches. To fight the newer challenges, from deepfakes to cybersecurity breaches, we need a whole of the society approach. All of us will have to be in it together to address that threat. Every part of the ecosystem has to play its role. The regulators, the fintechs, the startups, the citizens. Each of us must act with shared purpose and mutual trust. So our national mission must be to create a system that is not only the most innovative and inclusive in the world, but also the most trusted and resilient. So thank you for listening to me patiently. Wish you all the very best for the next 3 days.
Thank you. Thank you very much, ma'am, for sharing your visionary words with us all here at the Global Fintech Fest 2025. And now, ladies and gentlemen and distinguished guests, it's in fact now the time to mark a major milestone in India's fintech evolution with the launch of the Foreign Currency Settlement System, or FCSS, as ma'am had also mentioned earlier. And this at the India's maiden International Financial Services Center in Gift City, which is why now, on behalf of the IFSCA, we now invite the Honorable Finance Minister Srimati Nirmala Sitharaman ji to please inaugurate GIFT IFSC's Foreign Currency Settlement System with a click of this button. All right, so before we do that, we'd also like to please invite on stage Shri M. Nagaraju, Secretary, Department of Financial Services, Shri K. Rajaraman, Chairperson, IFSCA, Dr. Hasmukh Adhya, Chairman, Gift City Co Limited, and Shri Hare Krishna Jena, Managing Director CCIL, and Shri P.D. Singh, CEO Standard Chartered Bank, India and South Asia. To also please join the Honourable Finance Minister and our dignitaries on the dais.
Chris sir, Chair, Vishwas, Sohini, and members of the GFF Advisory Board. It is not lost upon us that the Global Fintech Fest not only wants to set standards on innovation on scale, but I think one of the most critical dimensions on which we want to really set the global benchmark is on thought leadership. And it is with this agenda that this year's flagship report has been constructed. It's a culmination of 6 months of effort, which captured the collective wisdom of 70 plus thought leaders around the world, 100 plus founders and investors who were surveyed, significant primary research, as well as a lot of analysis that has gone into representing what we believe is the voice of the industry as we think about the future of finance in the context of AI. Madam Finance Minister said something really pertinent on the dais today. She said that technology has to be in the service of humanity. And it is with that logic that the report is anchored convergence. While multiple other global thought leadership papers have spoken about AI, often it is quoted in the context of replacing humans. But what we have spoken about is the convergence of humans and AI to unlock the full potential. Now, Bharat and intelligence has had a long and ancient association. We have a new form of intelligence called artificial intelligence. But we still stand at the cusp of a major opportunity to combine our talent, our technology, our capital, and our scale to make path-breaking contribution to the future of humanity by leveraging technology of AI and finance. This report makes a set of important recommendations and findings for all the participants of the industry, for policymakers, for investors, and for the talent that is going to be investing their careers and making this their life's purpose. The first is that AI for all. We have to imagine that every citizen should have access to AI at an affordable cost. And we took the effort to build a blueprint which is available now after the report is released to all of you for free. And this blueprint talks about if we were to make AI available to an average human for ease of living, and if we were to make an AI CFO available to an owner of a small and medium enterprise as a CFO product, what will it cost? And madam, at today's scale of India, just today, we believe that after a detailed bottom-up assessment for something as low as 200 rupees per month, this can be made available to Indian citizens and Indian MSME founders. If we are able to scale up to all the working women, the self-help groups, to the MSMEs, 60 million MSMEs, and a fraction of those, even 50% of those adopt it, we believe the cost can come down to as low as 50 rupees. And that is something that truly only an India can provide. This will have integration into our DPI framework, the account aggregators, and also to the multiple government schemes which have been launched, which can be made accessible to the average Indian and the average Indian entrepreneur. The second is, we want to really throw a challenge, which is how can we solve the 220 conundrum? The 220 conundrum is that India generates 20% of world's data, yet we have only 2% of world's data centers, 5 gigawatts of capacity. If we are able to unlock this potential, it will create huge employment, but frankly, it is also an opportunity for us to become the data center capital of the world. And our assessment is that this is well within the reach of doing it. Third is how do we unleash risk capital so that innovation flourishes in India. One of the most interesting facets about highly innovative markets is that for an idea which has a 10% probability of success, you can find $50 million of capital in literally no time. We believe in India there is 10 lakh crores of capital which is sitting, which with some very minor reforms can be deployed towards this purpose. And we have sized and we have a recommendation on how to make this happen. Fourth, we want to make the simple and important point that those of us who follow Mag 7, the magnificent 7 companies in the world, which represent roughly 4 or 5 times of India's market capitalization, they are actually not 7 companies. They are 1,000 companies. In the last 10 years, these 7 companies have done 1,000 acquisitions. If we have to make M&A accessible to India, then some of the moves that have already been made by the governor in terms of allowing financing to, by bank financing to M&A is a great move. But some minor reforms around legislation and how equity-based transactions are facilitated can really create massive liquidity in the market, and we have a 17x potential. And finally, the last point I want to make, my friend here is asking, is requesting that the time is up. The last point I want to make is on talent. A few decades ago, India created Indian Institute of Technology. India created the TIFR, which is the Tata Institute of Fundamental Research. I think it is an opportune moment where we have created a blueprint for Indian Institute of Intelligence. And this Indian Institute of Intelligence, through collaboration with the industry, the academia-industry collaboration can really lay the foundation for the next round of innovation. Again, all the benchmarks and details are available in the report. I firstly thank the advisory board and the GFF for the opportunity for us to be part of this thought leadership effort this year and for the last 2 years. And I request all of you to take a look at the report, and we are welcome to your feedback. Thank you very much. Thank you very much. Oh, yes. The report, yes, please.
Firstly, thank you very much, Yashraj. And on that note, I also request you to stay back on stage as we will march ahead for the report launch. But first up, I'd also like to please invite the GFF Advisory Council to please come on stage. First up, may I please invite Mr. G. Padmanabhan, former Executive Director, Reserve Bank of India, and ex-Chairman of Bank of India, Shri Suvendu Pati of RBI. May I further please invite Mr. Ritesh Shukla from NIPL, Mr. Gopal Srinivasan, TVS Capital Funds Limited. May I also please invite Mr. Vibhav Hathi of One Card and Mr. Srinivas Jain, SBI Mutual Fund, to please come on stage. Let's have a huge round of applause, ladies and gentlemen, as the Honorable Finance Minister, Srimati Nirmala Sitharaman, along with all the August dignitaries, join in for the launch of the report titled Convergence, Human and AI for the Next Era of Finance. Well, I thank Mr. Yashraj and the GFF Advisory for joining in. I now invite Ms. Sohini Rajola, Executive Director, Growth, NPCI, to propose a vote of thanks for this very exclusive and very important segment of the program.
Honorable Finance Minister, Srimati Nirmala Sitharaman ji, respected dignitaries on the dais, distinguished guests, ladies and gentlemen, all the delegates to the Global Fintech Festival, a very good afternoon. And it is my distinct honor and privilege to propose this vote of thanks to our Honorable Finance Minister on behalf of the National Payments Corporation of India. Madam, as the Finance Minister of the 4th largest economy of the world, we know how valuable your time is. And on behalf of the entire lot of attendees at GFF, we thank you for taking time out from your exceptionally demanding schedule. I want to begin this vote of thanks by first thanking the policymakers of the nation for showing us a dream of Viksit Bharat. Dr. APJ Abdul Kalam had said, "Dreams are not what you see in your sleep, but dreams are those that don't let you sleep." I think this dream, which envisions India as a developed nation by 2047, coupled with the on-ground policy support, has been the wind beneath the wings of the digital payment ecosystem in India. And we at NPCI are working tirelessly to manifest this dream. by revolutionizing the digital payments ecosystem, not just in India, but also across the world. This is only possible with the active support and guidance of the government, the Reserve Bank of India, the hard work and collaboration of the entire ecosystem, and of course the participating citizens who place their trust to create a truly inclusive financial ecosystem. I just want to add one more point you made some very interesting observations on the state of the AI ecosystem and the opportunities and challenges that AI places before us. We would like to let you know that NPCI is using the same principles, the same guiding principles, to set up not just the AI zone here, giving the opportunities to the budding AI companies of India to build AI models and systems for India, for our citizens, and which address the local and real problems. We will continue to build on that under the guidance of Reserve Bank of India. Just like no one could have envisioned, I think about a decade ago, that whether the biker in Leh or the pilgrim in Rameshwaram, what joins them and what connects them is the way they pay seamlessly. I think there will not be this, as we stand today at 2025, this will be the beginning, and in some time we will have the same AI models, which are also encapsulated in this report, which will be guiding us and actually making our lives more comfortable, resilient, and ensuring that we are protected from all the risks that you highlighted. On behalf of NPCI, PCI, GFF, ma'am, I once again thank you for your presence here. It's a true source of inspiration for all of us. Thank you.
Thank you very much, ma'am. And with that, we once again extend our heartfelt gratitude and our heartfelt thanks to our Honorable Finance Minister of India, Srimati Nirmala Sitharaman, for joining us here at the Global Fintech Fest 2025. Can we have a huge round of applause one more time to thank Srimati Nirmala Sitharaman ji for her august presence here at the Global Fintech Fest 2025. We take those visionary words, we take that inspiration forward. Ladies and gentlemen, we march ahead with our immediate session that's about to begin. In fact, it's our next keynote address that's in store for all of you. So once again, I'd like to urge everyone to please be seated. And I'm going to urge all of you to please move forward, take your seats as we're about to gear up and get set for another riveting keynote address coming your way. And this is all about fintech diplomacy, building bridges for inclusive global growth. We have another esteemed speaker joining us this afternoon. So once again, we'll just hold on to it for a couple of seconds. I'm going to request everyone to please be seated. And I'd like to urge everyone to please move forward and please take your seats so that we can deep dive into the next set of sessions right away. Ladies and gentlemen, we also request you to please clear the aisle area. And meanwhile, we urge all our members of the audience who are still seated right behind, I'm going to urge you all to please move forward, take your seats. We're about to get up for our next keynote address, followed up with panel discussions coming your way as we continue focusing on the theme for this 6th edition of the Global Fintech Fest. I'd like to urge all the audience members who are still seated right behind, please move forward, take your seats. Thank you. And meanwhile, we also hope that you have managed to download the GFF app This is where you can grab all the live updates, real-time sessions, schedules, all the speaker details as well, networking opportunities, and all the exclusive notifications. So if you still haven't, then please go ahead and download the GFF app right away. From closed-door roundtables to exclusive networking dinners, there's something for everyone here at GFF 2025, which is why we'd also like to inform you that we have the Skepia Sundowner, which is a magical musical evening with legendary Shankar Mahadevanji. That'll be happening tomorrow at 6 p.m. in the Grand Theatre, which is why it is important to download that GFF app so that you can get an idea of all the updates, all the activities happening here at the Global Fintech Fest 2025. Once again, all the ones who are still standing near the aisle area or near the stage, I'm going to request you please take your seats right away. We have our next set of speakers all set to share their thoughts and their vision with you all. So I'm going to urge you all to very quickly please take your seats. And for those who have stepped inside the hall, I'm going to urge you please move forward and please take your seats. Thank you.
Beginning of setting off, now let's be transparent. The easy part are two leaders sitting in a room in the middle of Florence, Italy going, wouldn't it be wonderful if that happened? The hard part is what the team does afterwards, from both teams coming together and working through all the challenges. But here we are on stage today, announcing the partnership, solidifying and launching again in the coming months. So it's very exciting.
Well, certainly very exciting, but let's talk about the aspiration that you have as far as PayPal World is concerned. UPI and NPCI are just one of the partners that you've signed up with. There are a bunch of others that you have signed up with, and I would imagine more on the way. What's the aspiration? What do you hope to do with PayPal World?
So this is the vision of the world that I hope we all want to live in, right? There are domestic wallets that exist anywhere in the world. You can go to countries in almost every part of the world, and there is a domestic wallet or multiple domestic wallets that is where people are interacting. And I fundamentally believe that the future of money is going to be a domestic wallet. And so if you believe that, or a fintech wallet, so if you believe that wallets are going to be the way that people are going to interact, then it makes sense to make them interoperable. But that's just not how it works today. If you take your digital wallet and you travel to the United States, you travel to South America, you travel to China, many of these wallets won't work. And so you're stuck having to create a second digital wallet or move cash. in which case you're paying significant amount of cost, friction, and you're having to juggle, and it's just not a great experience. In addition, if you're a merchant, you're only able to take payments from local currency or from local wallets that you know. It's one of the things that PayPal has actually worked very hard on in the United States and throughout Europe, is making it as seamless as possible for merchants to accept payments from anyone. But it really is only limited to a certain portion of the world. And so if you fast forward, the vision of PayPal World is making a platform that any digital wallet can connect to, so that any consumer in the world can use their home digital wallet, where they have multiple instruments, their banks, if they have credit cards, if they have buy now, pay later, whatever they want together, and be able to travel in person, make an e-commerce transaction, or in the future, an agentic commerce transaction with the wallet they have safe, secure transactions with, but with any merchant in the world. And think about how powerful that is for merchants. Merchants around the world will now have access to billions of consumers. Billions of consumers. That is a very exciting world.
So to put it simply, a digital global wallet, that is what you envision as far as PayPal World is concerned.
That makes it seamless and frictionless for each consumer to just not have to think about it.
Not have to think about it. But, you know, since we're talking about change, let's talk about what else is changing at PayPal. And I remember that you said at an investor call that 2024 was a year of transition for PayPal as you got back to profitability. And 2025, in your words, is going to be a year of transformation. Now, for the audience sitting here, explain to us, 25 years on, what does transformation look like for PayPal as you transition from being a payment service to becoming a commerce platform? What will that entail? What will change?
Yeah, so it is a real privilege to lead a company that has a 25-year history and really is the original fintech in many ways at PayPal. This week I celebrated my 2-year anniversary at the organization, so I am still...
Congratulations.
Thank you. I made it 2 years. But one of the things that I think a lot about, and one of the reasons that drew me to PayPal, is the transformation in fintech is so fast right now. There's going to be more disruption, I believe, in the next 2, 3, 5 years than in the past 20 years combined.
On account of technology or on account...
Technology, artificial intelligence, consumer demand. I think we're just, you know, in many parts of technology, you're seeing an exponential acceleration in development. You know, I heard before, I think we were having a conversation about how many fintechs there are just in India right now.
Yeah, a couple of thousand at last count.
And so when you have thousands of fintechs in India alone, the amount of innovation is just going to accelerate. So one of the worries that I have being in a 25-year-old company is you can become complacent. We have a system that works. You could just sit back and say, hey, this system works, let's not mess with it. And I think that's a recipe for becoming yesterday's company. And so one of the first things that I did when I came into the seat was really energize the company around innovation. We're going to lead the future forward. We're going to do it as an open platform, with PayPal World being a great example of we want to bring partners together and do this with incredible partners around the world. But we want to be at the forefront. I would much rather, if you believe that disruption is going to happen, I'd much rather be the disruptor than the one being disrupted.
You know, it's important that you talk about being the disruptor as opposed to being disrupted. And I think that's a dilemma that many CEOs, especially who take on a legacy like you have of a 25-year history of protecting the past while also trying to invent the future. What's been the hardest part of the last 2 years in being able to find that balance of protecting the past but also inventing the future?
You know, they wrote an entire book about it. It is called The Innovator's Dilemma. It is one of the biggest challenges that any established organization faces. And the biggest challenge is you have existing revenue streams. You have existing customer bases. And it's very difficult to think about the future, which may actually disrupt some of those revenue streams. We're a large organization. We'll do over $32 billion in revenue next year. Some of those revenue streams may be areas that actually we need to disrupt, and we need to replace them with what the future may be. Leaning into that disruption, and this is something that whether you're a big company or whether you're a small company, you have to continue to think about what is the customer problem that you're solving. I learned very early on that you must fall in love with the customer problem, not your solution. And the challenge with a large company that has been successful is you start to fall in love with your solution. It's worked in the past. Why not just keep doing it? Well, customers' problems change. Technology changes. Demands change. Think about how much the world has changed in the last 5, 10, 15, 20 years. 25 years ago, when PayPal was started, the prevalence of smartphones was zero.
Yeah.
It was zero. And now there are smartphones in every pocket. My guess is in this audience alone, many of you have 2 smartphones in your pocket. And so 5 years from now, how many of us will be wearing AI glasses to conduct commerce? And so we have to be able to be thinking about what does the future hold, what is the customer problem we're trying to solve, and how will we disrupt ourselves?
So let's talk about the customer problem that you're hoping to solve today as you transition to a commerce platform. From a consumer's point of view and from a merchant's point of view, what are the priorities that you chase after today?
So one of the things that PayPal was famous for when it started was solving the challenge of a payment. And payments were very difficult 15, 20 years ago. Payments is a problem that it's not easy, but it's been solved. There are many players, we have many competitors that have solved the act of a payment. The challenge that I think has not yet been solved, that we are leaning towards now, is the end-to-end commerce. And so what does that mean? Well, if you're a consumer, you now have more options to make purchases than you ever have before. You can go online, you can go on your phone, and you can type in almost any set of keywords, or you can open up your agentic app and speak a few words and get dozens and dozens and dozens of options. But how do you know whether it's the right product, whether it's the right price, whether it's from a merchant that you trust? How do you know that your preferences of whether it's a local small business have been captured? So this is all personalization that I think we can lean into, that is a part of the commerce journey for a consumer. On the merchant side, how do we enable small businesses to be able to find the right customer for their right next purchase? How do we enable them to leverage the data, leverage the scale of the billions of users that we've now opened up for them in PayPal World, to be able to find the right customer in a cost-effective way, to be able to continue to sell and grow their business? So these are commerce challenges, not just payment challenges. And for me, that's the future of PayPal.
Yes, if commerce is the future as far as payments is concerned, how do you address the personalization aspect that you spoke of? I would imagine that you're going to leverage the data that you already sit on, both from the consumer's point of view as well as the merchant's point of view. But what's been the hardest part of being able to crack the commerce challenge as you go after personalized experiences, both on both sides of the network?
You know, the advances in artificial intelligence and data networks is making this a lot easier. But first, it's about building trust, because the data is not ours. The data is our consumers. And we've had to have very transparent conversations with our consumers that we think we can build and enable incredible commerce journeys for them by leveraging personalization if they trust us. And the beauty of being a 25-year-old company is we have built up trust over decades now. And so as we've started to roll out some of our personalized offerings, consumers are actually opting in and saying, yes, I trust PayPal with my data. I want a better experience than just my generic experience online. And I will trust you with my data to be able to do it. Now, obviously, we take it very seriously. It's protected, it's anonymized, but connecting a merchant and a consumer together in a personalized experience is just a magical experience for both parties.
So initial days, what are the milestones that you're working towards as far as this transformation is concerned? In terms of numbers, where do you believe you're going to be able to hit the milestones that you hope in the next 3 years, 4 years, 5 years? What's the target for you?
You know, I've learned that you need to have big ambitions for the future, but you need to have KPIs that you hit every quarter. And so without doing our earnings call right here on stage.
Your earnings call's it's a little while away.
It is, but the quiet period has begun. So without going into everything, look, we are seeing acceleration in customer growth, which is very exciting. So we have KPIs around customer growth, both for our PayPal product as well as our Venmo product, which is very popular in the United States. And soon we'll have KPIs for bringing consumers on for PayPal World as well. We have different product segments. So payment volume is something that we look at. We have a branded experience. If any of you are familiar with the PayPal button, that's a branded experience that we look at. We're seeing buy now, pay later as an acceleration. That is particularly in a younger demographic, a big move towards buy now, pay later, so we're seeing acceleration there. And we have these KPIs in every geography that we play in the 200 countries around the world. So this is not a, you can wait for 3 years and hope that it takes off. This is holding our team accountable for the here and now. And I'll give you another example, agentic commerce. Right, agentic commerce is something that we're leaning into. It's a potential disruptor, but it's also something we want to lead in. And so we were the first company with a remote MCP server to allow merchants and consumers to be able to connect and actually open up a catalog for agentic commerce to happen. So we're leaning into the future as we speak.
Well, speaking about the future, let's talk about PayPal's future. In India, of course, you've done this partnership with NPCI and with UPI. The question that I know you're often asked is, why not domestic in India? Is it because it's a competitive market where you're not the first mover by a long shot? Is that what holds you back? I mean, why the decision to not look at the domestic market in India?
Look, we have many markets around the world that we play in.
But it's an important market clearly for you, and even from a talent point of view, it's your second largest employee base.
It's a critical market, which is why I'm on stage with an incredible partnership with NCPI International. Right? I mean, there is a reason that we are here and that Ritesh and I were on stage half an hour ago with UPI as the first wallet. That shows how important the India market is to us and to the entire world. And India, the way I think about it is it's not just a domestic market. Everywhere I travel around the world, there are remittances where India plays a critical role. There's commerce where India plays a critical role. And we've actually, part of what we establish ourselves with at PayPal is the ability to do cross-border payments and the ability to connect the world together. So I would rather have us spend our time and energy creating those connections across the world and let incredible products that consumers domestically know and love win the market here and enable us to connect them around the world.
But, as an outsider looking at the Indian market and what's happening in the Indian payment space today, what looks most exciting to you? What has surprised you even?
I think what I just touched on, the cross-border payments, is something that I think has surprised me. Even I just spent the last week and a half traveling through the Middle East, and every location, every conversation I had, India came up as a location where there was just movement of talent, movement of money, commerce opportunities. Whenever I travel through Europe, India comes up, and the same with the United States. And so, India is becoming, if not already here, as an innovator and a leader globally. And that's why it is so important for PayPal to play a role and connect India to the rest of the world.
Well, that does deserve a big round of applause for all of you in this room for what you've been able to achieve in the past decade of really putting India on the global fintech map. Plenty of excitement in this room, lots of young people pitching their ideas. You said that PayPal Ventures is open to looking at exciting ideas, including here in India. Are you actively scouting?
Yeah, we have a PayPal Ventures arm. I don't know if they're in the room, but many years ago, we actually were one of the first investors in Pine Labs, which I know is an incredible solution.
All set to IPO as well.
Which will be wonderful for our PayPal Ventures as well. So, look, this is a market. Our venture arm is really about finding the best and the brightest in emerging markets for us. And, we get a lot of, I get to spend a lot of time domestically in the United States with startups, but we want a venture arm that can be out in markets where I'm not necessarily all the time. And so if there are incredible startups and fintech startups in this market, we want to have the conversation.
You brought up Pine Labs, and it's one of the companies that's looking at IPOing, shortly, in fact. Profitability, and I think that's the question that's also being asked of Indian fintechs, and we've started to see that being delivered. Some are now listed, and many hoping to list in the near future. Monetization, with especially the transition to commerce, what kind of avenues does it open up in terms of being able to draw in incremental revenue and boost profitability?
Yeah, so there's a couple of pieces to the question there. The first is, I've run my own startups as well. It is good to be pushed on profitability. As a startup, it is important. You have to have a sense as to how to monetize and how to drive profitability over time. You may delay it intentionally in order to scale, but if you don't have a path to profitability, it's only a matter of time until the cycle comes, and then there's a challenge. For us, we are looking for obviously at the scale that we're at, we have to look for large opportunities. Commerce opens up new avenues for us. We've launched an advertising business, which is a new business for PayPal, but allows us to, again, leverage that personalization, enabling merchants to be able to leverage personal data to target the right customer at the right time. There are many successful companies that have used advertising as a monetization lever and a growth lever. That's just one example for us.
AI, and I think everyone's talking about what an AI world is going to mean, what an agentic world is going to mean. Have you started to see the benefits of that for the business in incremental ways already?
We sure have. A couple of ways. First, just internally for how we operate, we use AI across the entire organization. Every function, everybody in the organization. We actually, just 2 months ago, held our first PayPal AI Summit, where we took every single employee across the organization and walked them through access to AI models, access to orchestration layers, access to information and examples of how they could leverage AI to be more effective and efficient in their roles. And the feedback we're getting from employees is just exceptional. The AI is enabling them to have superpowers that they didn't have before.
Like what?
Oh, the ability, I had sales reps being able to say, I don't have to wait for engineers to come build pipelines for me. I can just type it into my AI agent and actually build my own technology applications on their own.
So should the engineers be worried?
Absolutely not. They now don't have to build sales pipelines for sales reps. They get to build great applications for consumers that they're excited about, and they're getting more effective and efficient as well. So for me, AI for our employees is just giving them incredible powers and making them even more effective. And then we're leveraging AI for our consumers and our merchants, and enabling consumers to be able to, again, agentically just search for the right product, use natural language to be able to say, I'm going to a wedding in a certain location, and have the AI understand the weather, understand what other purchases they've made, understand what's in their closet already, and be able to give them a great recommendation is just an advanced commerce experience that is really wonderful for consumers. And for merchants, being able to get access to not just all the consumers on PayPal World, but being able to target their products and services to the right consumer at the right time, we think AI is going to be a real opportunity for businesses.
So if it's going to be the big opportunity for businesses, what does it mean in the next few years, both in terms of the way that you hire, the kind of people that you hire, what the strength of the workforce is likely to be, both in terms of cost savings, but also your ability to turn things around faster from a product and a service and an innovation perspective?
I think speed and velocity of innovation is a requirement right now in this industry. And so, the talent we're bringing in, the good news is with new technology, the talent we're hiring is already AI native. They've been using AI and will be, every new university class that graduates will be using AI. And so it's just going to become a core native part of how we operate. And it will allow us to accelerate our delivery and velocity of innovation. But I also think that's what consumers expect now. These cycles of years and years before new product releases come out, I think is yesterday's game. We have to be able to move quickly.
Well, talking about moving forward, and I think one of the examples that I want to talk to you about is what you've been able to do with Venmo. And I think that's something that this audience would like to hear about. What's been the biggest learning of being able to crack Venmo, which has been a category creator almost, which has sort of become a verb in many, many ways. What's been the biggest lesson and learning from Venmo? And, could we expect Venmo in India at some point in the future?
Yeah, so Venmo, for those of you that aren't familiar with it, is started as a peer-to-peer payment system in the United States. It's growing incredibly quickly and continues to scale. And I think the unlock for us was really, again, going back to the customer problem. Why were customers using the product? And when you go and you sit and you talk to customers that use Venmo, oftentimes it's them interacting with their friends or family after they've had a shared experience. So an example would be, I go out to lunch with my friends, one of my friends pays the bill, and I Venmo them. Again, it's a verb now. I Venmo them $10 for splitting the meal. So understanding that example allowed us to then work backwards and say, well, if you're using Venmo to split the bill, could you use Venmo to actually create that experience up front? And when you think about it, now you start to open up the ability to make payments online. You open up things like debit cards so that you can actually make the payment in person at the restaurant. And then we have a long roadmap of innovation that is all about the shared experiences that will be coming. So I'm not going to give you the full roadmap right now, including where we may or may not launch Venmo in the future, but right now, if you get to the US, download it. It's an incredible product.
Well, since we're talking about the US, let me also get a pulse check from you on what's happening as far as consumer spending is concerned, not just in the US, but also across the other markets that you operate in. There has been a resilience that we've seen through all the uncertainty and the volatility. The headlines may be screaming different things, but consumer spending has held up. What are the indicators that you're picking up on in terms of consumer preferences, where they're spending, how they're choosing to spend today?
Yeah, so again, there is an incredible amount of noise in the world right now, but consumers are resilient. And it's actually very inspiring to see how consumers manage through and block out the noise. I think the only big shift that I would highlight is something I touched on earlier, which is a shift away from debt and towards buy now, pay later. And again, buy now, pay later is a much shorter term, much lower value ability to spread payments across. And that is actually a sizable shift that we're seeing, particularly in a younger demographic. So it's really away from credit cards as their vehicle for credit and towards buy now, pay later.
So buy now, pay later is the big shift that you're seeing as far as the younger demographic and the younger cohort is concerned. What are some of the other interesting trends that are emerging that you intend to tap into and perhaps this audience here could focus on as well?
There's a lot of travel that's opening up now, right? I think there was a hunger coming out of the pandemic to actually get back out into the world, which is why cross-border transactions, things like PayPal World, where people can now travel the world with their domestic wallet and make the purchase. Those are the types of trends I would think about. So, obviously, whenever you start something, you want to solve the local problem, but local problems are becoming global because it's how consumers want to spend. They don't look at themselves just as within a certain community, right? I mean, think about how big of a shift that's been. 10, 15 years ago, people bought from their local community. Now they can go online and buy from anywhere in the world, and they want to travel anywhere in the world. And so those are the types of trends that we're thinking about.
You talked about bringing the culture of innovation back and bringing that mojo back as far as PayPal is concerned, and you've spent the last 2 years being able to do that. What does it take to recreate a culture of innovation? And I use that very carefully because you do have a 25-year legacy, you do have systems, processes, institutional memory. How do you recreate or reimagine innovation with legacy?
Yeah. Well, first, you don't forget where you came from. I stand on the shoulders of giants, and there are many leaders and many incredible, talented folks that have been at PayPal before. But I think in order to create any culture of innovation, you need an ownership culture. You need a culture where every single employee across the organization is obsessed about the customer and feels like they have an impact. We talk a lot about our mission. We talk a lot about who we serve, the customers that we serve. And I will tell you, in the 25,000 employees that work at PayPal, many of which are in the audience today, they jump out of bed in the morning with their heart beating faster, off to serve consumers and small businesses around the world. And so when you have passionate employees with a clear mission, clear priorities, and an ownership culture where they feel like their work can make a difference, innovation comes.
You know, it's interesting that you talked about communication, because I remember one of the things that you chose to prioritize when you became CEO was bring transparency back much more into the forefront. Transparency within the organization is one aspect, but transparency with the consumer, because it's built on the currency of trust, is another aspect altogether. How have you been able to focus and balance both, transparency within and outside as well?
I don't think they're two different things. I think being clear what's important to us, both internally, and being clear what's important to the customer, and having a very clear and honest conversation is paramount, right? We make decisions that are principle-based and customer-backed, and we shouldn't be afraid to tell consumers how we make decisions. If you look at any of the notifications that we send out about changes to our terms of service, changes to our privacy policy, changes to our products and services, we're as transparent as I think we can possibly be with consumers so that they understand the why behind the change. We talk about it internally, we talk about it externally. So I don't think you can operate an organization where you have an internal narrative and then a consumer narrative. I think it has to be one narrative that you're confident and willing to stand up on stage and share.
You know, speaking of changes, what we have seen here in India, specifically in the last few years, is there's been some back and forth on regulation, especially when we talk about regulating fintech companies. And I would imagine that we're back to some sort of an equilibrium at this point in time, where companies feel that they can go back out and innovate and try new stuff. How's the regulatory environment in the world today? Because you operate in different jurisdictions across 200 different markets. We've always seen this innovation and regulation balance, but what are you seeing today from a regulator's point of view in enabling inclusion, in pushing fintechs as well? How different is India from many of the other markets that you operate in?
It's complicated. Not India. The regulatory environment globally is complicated because it's just different. And it makes sense. Every region around the world needs to make their own regulatory decisions. Some, there's incredible private-public partnership. Some, they're still moving through it. As a global organization, we have just an amazing set of government relations teams and employees that work to make sure that we can serve what the government need is as well as the consumer need in every part of the world. If I were to just sum it up, though, I do think there is a shift towards ensuring that a global world can exist. I don't see very many countries that are trying to lock down commerce and trying to just keep keep constraints on consumers and merchants. They absolutely want to protect. And money is important, right? I mean, if you think about money, it is the thing that gives consumers and merchants the most anxiety. So it is important to protect it. It also needs to be able to flow. And so we work very hard with regulators to meet their needs, but also push the envelope to help consumers.
So let me end then by asking you about the world that we're living in, cryptos, stable coins. What does all of that mean as far as PayPal is concerned? The US has moved to legislation. We've got the Genius Act now pushing all of these commodities. How do you see a world where PayPal operates with cryptos and stable coins, etc.?
I would just go back to what I said earlier. I think there's going to be more disruption in just the natural state of the financial system over the next 3, 5, 10 years than the last 20 years. Stablecoins, agentic commerce, all of this is going to contribute to that disruption, and we'll be at the forefront. Our job as a leader in this space is to push the innovation, partner with incredible partners like we just did this morning, and continue to write the rules of what the next chapter of fintech will be.
And a last message to India?
Well, thank you for having us. Thank you for being incredible partners with PayPal. We are here to stay, and we are here to partner and create an incredible world together. Thank you.
Alex, many, many thanks. Ladies and gentlemen, a big round of applause for Alex, and congratulations once again to the PayPal team. We wish you the very best of luck with your plans here in India. Thank you very, very much. Thank you very much.
Thank you. Thank you very much, Mr. Alex Chris, and thank you very much, Shireen, for spearheading this session for us so beautifully. They often say that to get the right answers, one needs to ask the right questions, and we were indeed in the able hands of Shireen Bhan. Thank you so much again for joining us. All right, ladies and gentlemen, now this is where I'm going to be requesting you all to continue being seated. We're going to be expecting a lot of movement here and there, and that's bound to happen. That's why we call it a fest. But that being said, for those who have just entered in...
First of all, there are state-of-the-great, infrastructures for sure, serving financial services entities as of today. But tomorrow, they will have to develop in the areas of DLTs and blockchains, and that's why we're engaged in central bank digital currency projects, and with two names that may come back at some point here and elsewhere, called Pontes and Appia. So going towards, with those projects, a unified ledger maybe at some point in time, so trying to plan for the future, but also trying to think about your payments in the retail space. And there are, challenges at stake in Europe facing this. I mean, for sure, European actors need to have sovereignty in their payments. And that's why we are engaging with this digital euro concept and this retail CBDC. So, I mean, this is where we are today, and this is why we are planning, for those infrastructure to evolve. So nothing is set in stone, but we are trying to really accompany the actors and providing this core infrastructure to everyone.
Sounds good. So, David, we come to you last, right? Because the fire has been started from US. And you also leading the innovation for HSBC. So you will have some innovative ideas to what's happening there, how it's going to implicate, what are the implications, how do you see for your bank these new changes, or is this the movement of a new Bretton Woods, or should I say GFF movement, since we're all here talking about it? Go on.
Yes. Sometimes I wish I was Dave from Canada, but I am Dave from the US. Look, I think this current environment almost feels more like, I think it was 1971 when we actually broke the gold standard than it does 1944 when there was this harmony and order that was created across global currencies. What we saw, and we're one of the largest movers of US dollars globally at HSBC, and we saw remarkable volatility, but a real de-dollarization trade taking place. And early on, it was actually a euro-dollar trade. So a lot of people moving out of their fiat US dollars into the euro and other international currencies. As we think about kind of other developments, obviously I think the geopolitical things aside, we did see the administration provide at least version 1 of a regulatory framework related to digital assets called the Genius Act. We could always debate whether that was appropriately named or not. But the Genius Act did something where banks like HSBC and other US regulated banks suddenly had a bit of a framework that provided not total, but much more visibility in terms of how this kind of evolving technology would be regulated. What are the kind of guardrails? And what we are seeing now is tremendous amounts of capital innovation, company formation, and actually a lot of banks really trying to figure out their strategy there. What is interesting as it pertains to maybe like the stablecoin angle of digital assets is that it can almost synthetically create demand for the fiat currency behind it. So if you think about USDC, for example, which is the second largest stable coin in the world, the more prolific that becomes, actually by extension, the more demand there is for things like monetary funds behind it, or money market funds rather. And so I don't think we fully have digested the implications of that. The final thought that I have, and I think it's too early to know whether this is the right way to think about it, but if you think about the India infrastructure, which we're going to talk a lot about today, and things like UPI, where it's this kind of common framework for innovation and money movement, there are many who kind of view the blockchain as the global UPI. That suddenly this is the framework by which you can move money anywhere around the world. I think the challenge with that logic is that when you think about quantum and quantum innovation, and the security risk with that, quantum-resistant cryptographic technology has not been widely deployed yet. So some of the same inherent security vulnerabilities that exist within traditional banking rails will manifest in the blockchain.
Of course. So, Frederick, you come back to you again. So, see, we also have seen huge success stories with the public infrastructure, digital infrastructure, especially in India, with identity, with payments, with CBDC now being kind of piloted and few more. And we've seen the same with all of you, right? Whether in your private ways or a kind of, let's say, as a government or a policymaker. What we have experienced here, which is not talked so openly here, but let me put it out here, is that at times as it scales, sometimes it starts creating some conflicts. So let's say you have a payment rail, which is built, right, with support of government, with policy. But then there are some global flows, there are some traditional systems that are built by private organizations, right? Same way, let's say there are some new models that come in, right, which can be built by, let's say, a private side or a policymaker or a government side or in a partnership. So the boundaries, I remember early days when I was studying law, we were told that the government is supposed to do sovereign activities, right? Everything about governance, everything about regulating, about controlling, making law and order, and non-sovereign activities are usually left for the private sector. So in that scheme of things, do you see the conflict arising or increasing in your geographies? Are there any such instances, scenarios that you've seen?
Yes, of course. The same questions are very relevant in Europe at the moment for the project I mentioned that are built in a kind of public-private partnership. It's a very complex question, the different spheres and different roles. In my mind, I think that innovation is, in general, best placed with the private sector that has most expertise, most speed, and the technology knowledge. But there are certain situations where that does not work well. For example, if you look at payments, you can ask yourselves, why hasn't a global interconnected payment system been built already? It's a difficult case because the commercial viability is not so evident. You would have to build an infrastructure that would give you benefits only if you have also the network effects. So the incentives for the private sectors to build this are not so easy to find. Also, to wire money fast, there are only certain use cases. It's always good to receive money fast, but to wire money fast, also not such an evident use case on a big scale. So this is where we see that the central banks, the public sectors, step in and they provide an infrastructure, which I perceive as a platform for the private sector to innovate on. And I think we need both. We need the speed of the private sector, we need the central banks, and we also need a third player that is the regulator, which is sometimes forgotten. But I think it's not only about technology, it's also about standards, about safety. And we need, if we want to interconnect globally or build big projects like CBDC, we need data protection, we need supervision, we need safety, and these are questions that really concern our citizens, our countries. So I think this is for the states and the regulators to step in and to give the framework for what's built.
Thank you. David, from TransUnion, do you see also a conflict? You run a global conglomerate. Do you see somewhere you have to compete with, let's say, a regulator or a government agency while you could do it better? I mean, I know it's not an easy one to answer it so directly, but in whichever way you can.
So if I turn that around, and building on Federico's point, I think where governments have, if you think about open banking in Europe, so broadly the big banks were mandated to provide, an open banking environment. But actually the co-creation of that was through the private sector. So very much the government created the platform, the broad guidelines, but then the private sector was enabled to co-create, set the boundaries, and then align with the regulator on security measures, fraud, data libraries, etc. So the whole connectivity then was set centrally, built privately, and managed centrally again by the government. So I think that has worked really well. Where it isn't working is some countries that aren't embracing the private sector. So if you think about Kenya, burgeoning financial inclusion agenda, big inflows of capital for the fintech world, but a government really not releasing as many banking licenses or lending licenses at the pace of maybe some other African countries. So there's a risk that the dollars don't continue to flow into that from an investment cycle. So I see both sides of the coin.
So I think we're moving more onto co-creation kind of a model you're saying. And we've seen UPI in India is a great example, right? Because we see right from the vision of government to regulators to banks to fintechs, all of them working in a cohesive for the success. So Alex, do you see this as the answer, or do you still think that we need to compartmentalize to avoid conflicts?
No, I very, very much agree and support what the colleagues said. I mean, for me, there are three important things here. First of all, the public-private partnership is to be maintained, whatever happens in the environment around us. I mean, that's extremely important, significant. That has been successful, that must be carried on. I'll maybe come back to that with a few words. I mean, the second thing is governance is key. How to make sure that those projects can be governed in a safe and sound manner between the public and the private sector. And the third one is regarding sovereignty, which for us is no more, let's say, a bad word. I mean, talking about sovereignty doesn't mean that we will exclude competition and competitors.
Yeah.
So I think this is really, really important, and I'm really supporting what the colleagues again leveraged or triggered as principles. Innovation is for the private sector, but indeed we have the capacity as public authorities to frame it and to be around it. I mean, that's, I think, very, very important, very significant. For sure, when we talk about sovereignty, I mean, there could be sometimes ideas propagating that this is, getting back on ourselves and not being, openly communicating or discussing projects with others. I think it's not that. It's just, the freedom of choice and the ability to not have dominant players and actors in specific parts of the world. And I think that's really important to foster innovation, openness in all compartments of, the financial services industry. Yeah. And when we say sovereignty, that's, independence, strategic independence, for sure, but that's not excluding the actors which are present. UPI is a great example. Yeah. I mean, obviously that we are here in probably the most striking example of something that has been pushed by the public sector, but that has been extremely successful and embraced by the private sector without excluding the incumbents and the other actors. I think in Europe we are trying to do the same, and I've picked up, the retail payment space, and we talked about the digital euro a little bit earlier. We mentioned it. Yeah. That's exactly that also. The idea is to have a platform for innovation in a specific retail payment, an option, an alternative as a payment means for everyone, but not excluding actors providing, similar systems coming from abroad, let's say outside Europe, or within Europe, and actually helping the actors, the players, to innovate on that common goods. So, I mean, that's really, the type of approach that I would say we favor.
Thank you. And so, David, I think my question to you is also that sometimes when the government and the regulators work, their objectives are very different, right? It's public good. While the private is usually the profit or maximizing the wealth, right? How do you balance? Is it really get balanced, or like sometimes or other somebody wins, sometimes like a roller coaster? Sometimes one scale tips on one side and the other one goes down. How do you see your experience with, especially in innovation? I'll come to that subject in my next question. While some innovation may need government help anyway, without that, like quantum, and I'll come to that in my next question. But about this conflict between profitability and public good, how do you balance?
I'm not sure I see it as a conflict, and I think there's some really great perspectives that have been shared. I guess from a principle standpoint, just briefly, I think about the utility layer, and then I think about the commercial layer. And it's not clear to me that free market forces always build the utility layer, whether that is highways, an electric grid, or money movement rails like UPI, et cetera. And so I think, the government and other regulatory bodies really, helping to orchestrate that utility layer. And then I think the role of private market, private innovation really has everything to do with the commercial layer.
Interesting.
But, I'm not sure, and I just use the US highway system as an example, I'm not sure that would have organically arrived in the efficiency and the organization the way it is without actually having, true regulatory intervention and investment. So when you do that well, and when, I think you could get in trouble is if, regulatory bodies or governments started getting more into the commercial layer. But I haven't seen a lot of examples of that, at least from a US perspective.
Interesting. So one quick check with the audience. How many of you have questions for this panel? Because I have two. I have to decide whether I have to drop one and rather give you guys the opportunity or I complete my two questions. Guys, have you thought about it? Are there questions in the audience? Have you guys thought about it? Okay, there's one. I see very less hands. So, yeah, of course, I see one here in the front. I not see much, which means I can still accommodate one or two questions and go ahead with my question, maybe one a brief one and one a slightly similar one. So, extending on the same thought, while we all agree that we all need to co-create, and usually the innovation comes from the private sector, while UPI is an exception, it came from the government, indirectly from a semi-government organization to some extent, of course supported by the private ecosystem. But my question is, when you look at the time like today, and you look at power like quantum computing, right? Today it's restricted to 2 or 3 countries, right? We don't think beyond it. And there are a lot more countries who would need to adapt to it. We already talked about security issues that were talked by the panel, right? There are too many things. So do you think there are some examples and exceptions, which is innovation, which is technology like quantum, maybe AI, depending especially in India context for certain areas like KYC, cybersecurity, where the government may still have to step in and play a bigger role versus the private sector, because otherwise it will not even happen. So maybe I'll start with you, David, since you picked up the mic this time.
I won't do that again. So I think if financial inclusion is a genuine agenda point for any government, I think if we observe the progress of AI and how AI can be used in, ultimately potentially profiling an individual for creditworthiness, get them onto the financial ladder, the regulators in different government departments will have different regulations on permissible uses of data, yet the government may want to drive a financial inclusion agenda. And I think if you could cross-pollinate some of those governmental department databases, health, auto, etc., you may be able to get a richer picture of an individual than traditionally using maybe regulatory financial control permissible uses of data, i.e. to the benefit of the consumer with their permission to try and get a better view of that individual to try and help that financial inclusion journey.
Okay. Alex, do you agree with that? Or you think it's different horses for different courses?
The thing is, there is an overall, let's say, time to market. It's very marketing to say that for a regulator or central banker, but still, there is somehow a time to market in any of those things. If I think of digital IDs, for example, and I take the case of Europe, we have been talking about that in Europe for 20 years. That has not really taken off. I think it's going to take off very soon because, now, let's say the driving forces agree and there is an alignment between the public and private sector. But when we talk about the public sector, we have to talk about various entities there. So that's one example of something that maybe government or public authorities can drive, but then actually there could be difficulties in lending this. So this is typical of digital IDs in Europe. I know it has been different in India. So you see that there could be some really a variety of how people, citizens on one side, but also the private sector and governments react to make such complex projects. But we've seen successful things, like the SEPA in Europe, which has been unifying somehow the protocols and standards used for credit transfers and direct debits. That has been something largely driven by public authorities, with public administration implementing that almost everywhere first, before the private sector going there.
Yeah.
And that was driving things. But I would say, as a final word on this question, the public sector has to be, let's say, flexible and to adapt itself to the reality of the market.
Yeah.
Our role is not to innovate. So we should not be first-time, comers. We should not introduce, new things. We just have to sense where things are moving, and then we have to adapt and to react to that. This is what's happening right now with the DLT blockchains and, let's say, the tokenization of financial assets.
Interesting.
This is a drive coming from the private sector, with a demand coming from the private sector. We are just making sure that we understand that a bit, and that we propose something, and we propose a way forward to help, actually, those actors. And I think this is what we are doing, and we must carry on with that. But that's, again, important to have that public-private partnership through committees, through forums, through a lot of, shared governance in a way, so that we are, sensitive to those things coming from the market.
So, David, I think US follows different model here, right? Because we've seen all the innovation, whether it's a quantum, so big, right? Whether it's a digital assets. I mean, we've heard probably that they're still not sure about CBDC, right? That they want to do it. So do you think, is it more of a US geographical reasons, economic reason, and probably not necessarily applicable others, or should it continue that way, being a different one, or they also need to kind of balance it?
I mean, I think when I think about some of the comments actually building off of yours, trust is foundational for any commerce, and it's really foundational for any kind of global commerce, global money movement. And so to your question, original question around quantum, around cybersecurity, if we find that there's a lack of trust due to standards that don't actually mitigate fraud, that introduce risk, that finance terrorism, then commerce grinds to a halt. And so if we do see some systemic, whether it's quantum and a security issue, if we do see some systemic technology that actually poses a risk to the legacy way of doing things, then I think that could actually inadvertently be a catalyst for a more globally consistent, secure, protected payment rail or other policies and procedures that ultimately give people the trust to continue global money movement, trade, commerce, both within their borders, but then also around the world. So that's, I think, the biggest thing to watch as we see, in quantum is still, there's very few commercial use cases. We've done a number of experiments related to bond trading and whatnot, mark-to-markets, but we're a long ways off from commercializing that, but it is coming.
Yep. Frederica?
Yeah, I mean, in financial services, we're all so interconnected, and it's so digital that I think we're really vulnerable. And to say something about cybersecurity, to me, it's important that we don't only see it as a race of technology. So not only to look at, are we faster in encrypting mechanisms, or is decrypting and quantum faster? I think, of course, we have to use the technology also for defense, but that cannot be the only answer. I think the only answer can be to have good preparation, to have good governance, and also good information exchange between member states and also between public sector and private sector. And I mean, if we build huge things like potentially the Finternet, a unified ledger, of course, there's a lot of sensitive data coming together on one single platform, and this is especially vulnerable. So also this is a case for working together and having a really good governance, and also having the public sector on board to make sure that sufficient resources also are pooled into the project.
Thank you. So I'll come to David, you again this time. So this time, see, so far we talked about the initial Bretton Woods history and what happened and whether it's broken or not, right? The reality is those three decisions that were taken, they were all global. And last 3 questions that we spoke were all about your local geography. So my last question, and I'll need a very, very brief answer, is that do you think we need those kind of a decision in today's time? We know that the global settlement is broken. We know there are challenges with the technologies. Do we need, I don't know, can I say it that is IMF broken or not? I'm not Trump, so somebody else to decide. But do we need a new age institutional framework that we need to start new global collaboration, whether it's quantum technology, whether it's a cybersecurity? What are the global collaboration area, as you see as a practitioner, at least 2 or 3 that you want to name, that we need to start thinking not just local but global? And we need some sort of a consensus, and again, co-creation between private and public both.
I think, and I'm
this
very...
is the last question, so to keep it brief.
I will. You know, I'm very lucky to travel the world, and over the last 12 months, the biggest message I've been hearing from regulators, from governments, from investors, from fintechs is fraud. So fraud is something that was on an agenda a while back. Now it's towards the top of the agenda. And why? Because some of the fintechs now in this country have got 100 million customers, 200 million customers, and a big balance sheet, and may not have the protections to maybe businesses that have been established a while back. So I think some form of global connectivity around fraud is desperately needed, and it's a growing problem that I'm seeing.
Something like FATF, but a lot more operational.
I think yes, but I think that fraud evolves so quickly. This is not a one-time hit.
Yeah, of course. Alex, you want to go?
No, I agree about fraud. I mean, we are doing things, but not enough. And I think, you know, it has to go beyond sharing. It has to be also more operational in a way. But I would say that there are, let's say, tactical and more strategic thinking around, you know, the evolutions ahead of us. On the tactical side, I would put, you know, things such as fast payment system interconnection.
Yeah.
Those are things that exist in some regions of the world that we all know of. And tactically speaking, we should look at us, public authorities, favoring the interconnections there. Second thing is more on strategic thinking about, you know, this tokenized world that is coming up. What's going on in that space? I think we have to do more experiments. We started, we've done so. We do with the BIS, for example, global hubs, global projects, with the public and with the private sector. We need to carry on that, and we need to think about, you know, challenges. Governance is a challenge. Governance is a challenge for data. It's a challenge for who controls what. It's a challenge for the technical infrastructure in itself. So those would be my elements there.
David?
You know, it's never lost on me as someone who spends all of their days, nights, and weekends with startups and venture capitalists. The fastest adopters of technology are criminals. They're so fast to adopt new technologies. And as we think about, we've talked a bit of quantum. We haven't mentioned AI. And none of us know exactly what the full implications are, but they certainly have data sovereignty issues. And as we think about these emerging threats, as we think about the new risks that are beyond anything that any individual country, sovereign nation has actually navigated, I think there will be an opportunity for a more globally consistent framework. And it's only going to go faster from here.
Thank you. Frederica?
I think the cyber is something that we can probably globally all agree on as a huge issue. It doesn't end at country frontiers, and there should be international work, and there is actually. If you look at the G7 cyber expert group doing very relevant work on quantum, on AI preparation. So we do have the fora, and I think that we should operationalize it a bit more, perhaps think about common cyber drills more to really be ready. On the not so much financial stability side, but on the side of making life easier for people, I think that interconnecting fast payment systems is something that we should do. I mean, the technology is there. We see progress, and I think what's the most relevant work there is also to get the standards right and to adjust and harmonize the standards so that the technology can really deliver the speed in the actual life of the people.
Thank you. So I think we just have one question which I'd ask right here with the gentleman. If you can get a mic here very quickly, and probably just enough time. So please state your name, organization you represent, and your question is to whom? Address to whom, please. Very quickly.
Hi, my name is Sachin Deshpande. I'm representing a wealth tech company called Wealth. My question is how we are proceeding in terms of the interoperability when it comes to, because it's very important for us wherein we are wanted to have a collaboration between the major economies, probably let's say G7 or G20, and how we are moving on that particular
And this interoperability, you're talking for payments, for KYC, for which area?
Both.
Okay.
In terms of
any
the
specific
smooth transition.
It's for all?
Across.
Okay, very quick answers probably from whoever wants to answer.
Yeah.
I can start maybe. Interoperability has been on the agenda of all types of G7 or G20 meetings I've been to. There is so much happening in the cross-border payment agenda and the roadmap that has been put down in 2020, if I remember correctly. That roadmap is a multi-year roadmap, delivering step by step with a clear ambition of making on the infrastructure side, definitely more interoperability across the different regions. That's why I talked about, tactical wins like interconnecting FPS. Yeah. But there are bigger considerations at stake, especially with large value payment systems, how to open the windows maybe that they have, how to make them compatible in terms of the standards and protocols they use. So it's a work on the way. There is a push. And I think ministries of finance, for sure, the central banks, also, they're all pushing in that direction, supported by the private sector, which calls for it. But it takes time. There is an inertia in all this, as I started with. And so time is there, unfortunately.
Okay. Anyone else wants to add? Otherwise, we're running out of time, actually. We've crossed our time limit. Anyone wants to add anything quickly? Okay, so we're good. I think it's an old age problem. We hope we'll solve it soon. And thank you all for amazing insights. So co-creation, of course, there's no conflict with the co-creation. Of course, quantum fraud seems to be a big area. I hope we have a big institution just created to manage cyber frauds and the risk just at the global level. Hope to have that as a GFF movement soon, globally. Thank you.
Thank you so much. I've requested our dignitaries to come together for a group photograph. Let's also capture that. Meanwhile, ladies and gentlemen, for those who have just joined us in, we're also about to get started with our next session. And this is also going to be a fireside chat coming your way, so stay tuned and stay seated. Thank you so much again. Thank you very much. Thank you again. Likewise. All right, ladies and gentlemen, for all those who have joined us, we're about to give again a quick makeover to the stage. We're about to set the stage for the fireside chat, and this is where we are focusing at customer obsession at scale, wherein we're looking at balancing empathy and economics. So we will have a fireside chat start right away. Another feisty topic coming your way. So let's hold on to all the insights. In a short while, we'll have our speakers join in and we'll get the session started. Well, meanwhile, I do hope you managed to download the GFF app as well and got to explore all the activities that are happening at the Global Fintech Fest, got to also be part of some exclusive roundtables, connect with your peers for that matter, connect with your fellow delegates. So I do hope you managed to do that, besides grabbing a quick bite at lunch, because now we're about to move forward, really going back to back with our next set of sessions. And also push the boundaries of conventional thinking across industries. Ladies and gentlemen, we have with us the Managing Director and CEO, Axis Bank, Mr. Amitabh Chaudhary. So please put your hands together to welcome on stage Shri Amitabh Chaudhary, Managing Director and CEO, Axis Bank. And spearheading the session, we have with us Nupur Chaturvedi, Managing Director and CEO, NPCI Bharat Bill Pay Limited.
Good afternoon, all. I hope you all had a nice lunch, and no better session than hearing Amitabh sir today. It is a real privilege and honor for me to be in conversation with Amitabh on a topic which is really close to both Axis Bank and NPCI Group's heart, which is customer obsession at scale, balancing empathy and economics. Amitabh, your career journey has been across a number of industries, and it's really a masterclass on how to reimagine and reinvent yourself across multiple domains. My first question to you is, what were some of the defining choices that were turning point in your career?
Well, you know, I became an engineer because my father insisted I should become. I was too young to actually argue with him. And then ran away from it very quickly and did my MBA. And then went into banking. That time, obviously, money and being in a foreign institution was a cachet which attracted us. I got an opportunity to go abroad, went through the banking financial crisis and came to this conclusion that I used to do technology investment banking. I could see the change happening in India. And I realized that I could remain a banker and have some impact, while I could actually join a wave which I could clearly see coming on the BPO side. So I got an opportunity to work with a very small BPO company, and I joined that. It was a stupid decision financially. The only good thing I did is I did not think too much about it. I just took the job. And it was clearly a huge change, and a change for the better. And I keep advising people that sometimes when you're making a huge career change in your life, don't, look at the risks. Sometimes just take the plunge. Have confidence in yourself, and it worked out for me. It might not work out for everyone, but it did work out for me. And when I left that company, it had, 25,000 employees. It had 11 centers around the world, very profitable. So it was, and I worked really hard. I mean, that was the time not that I've not worked hard before, but I think in this, I worked hard, learned a lot, learned how to manage a company. Actually, when I was leaving that institution, I was actually trying to design a course for the future CEOs in terms of how you can become a CEO. And then this insurance opportunity came along. And I remember when I entered the interview room, I told the panel that if you ask me any question about insurance, I don't know. So if you're still willing to continue the interview, it's fine. Otherwise, I don't know anything about insurance. But I think people don't realize that when you enter new domains, you sometimes end up asking all the right questions which have never been asked before. So I then did insurance, and I came back to banking. And so now looking at the platform, looking at what the opportunity is, looking at what change you can bring about, looking at what the impact you can make is what the question actually one is asking, rather than worrying about which industry, which sector. I do believe and have the confidence that I can enter any industry and hopefully can make a difference there. But at the same time, I would be the first one to admit that every change I made has not worked, in the sense that every change I've done in the company I worked for has not worked. Many have worked, many have not. So everything which does not work is also humbling and a great learning experience.
Absolutely. Thank you. You talked about taking risks, but a little more than that. What has been your leadership style, and how has it evolved over different industries? And also, what are some of the boldest first-time CEO decisions that you've taken?
So, yes, I mean, we went from a very domain expertise kind of leadership, because when I was in banking, to actually looking at you're entering into sectors which you don't know much about, and then trying to bring in a leadership style which actually works. So I do believe I bring a couple of things to the table. I'm not saying this is what I people who work with me tell me that I do have courage of conviction. I do believe in taking some bold calls, bold decisions when I'm convinced of it. I do believe a lot in data, so I dive to the deepest levels to understand what data is showing and throwing at us. But I also believe in the gut. I also have, had the opportunity to work with great bosses. So I learned a lot with them, and at the same time, I also had the opportunity to work with a lot of colleagues and people who have stayed with me for 15, 20, 25 years. And the only reason they have stayed with me is because they have realized that I'm someone who is willing to trust, willing to empower. As long as the vision is aligned, as long as the method to get there is aligned, I'm there to back them up and at the same time keep pointing to them as to what more can be done. So my job is to always look at glass half empty, or as now in Access they say, jug half empty. And their job is to keep filling that jug or the glass. So it's a perfect combination, right? Someone is filling the glass, someone is ensuring that it remains empty. So hopefully the organization keeps moving along. But over a period of time, as you mature, you realize that everything which you want to achieve necessarily doesn't have to be done in the same style. Your style needs to change. Aggression in delivering the output is not always necessarily delivered through aggression in itself. So you find different ways of getting the same message across. You find different ways of, making people, because as the platforms become bigger, organizations become bigger. You can't just be pointing things out to them. People should discover them themselves. So your style, the way you motivate does change over a period of time. And, one hopes that it works. If it's not working, keep asking yourself, keep looking at yourself in the mirror and keep, pivoting to a different style, whatever might work with the set of people you have and the context you're living in.
Thanks. Spoken like a true person with a growth mindset. Thank you very much for sharing that, Amitabh. Moving on to the core topic, today's customers are spoiled for choices. We are living in a world where they seek instant gratification, there's hyper-personalization, and everyone out there to spoil them. I have been an Access customer myself. I am an Access customer myself. So how has Access managed to stay both relevant and deeply trusted in the times where everyone's really hampering after the same customer?
So firstly, thank you so much for being our customer. I'm a very happy man today. I forgot to answer the question which you had asked earlier, and let me weave the answer of that and the answer of the other question you asked. So you said, which is the bold decision which we have taken? So one of the bold decisions we took in Access when I joined the organization was, it came from a very simple question. The question was, what do you want the man on the street to say about Axis Bank? When you ask about Axis Bank, what do you want them to say? And we very quickly realized that the answers we are hearing are not what we want to hear. So we said that, okay, looking at again our context, our competition, where we were, what can we do differently? And the bold decision was we decided customer obsession as one of the areas we wanted to focus on. Why was it bold? Because we knew it is a more than a 10-year journey. When we decided to take NPS as a measurement of that customer obsession and said we'll measure that, we realized, and we talked to organizations around the world, and they told us that they have been at it for 10 years and they're still not reached where they wanted to reach. So the key thing about this was you're deciding to align 100,000 people behind a vision which will take 10 years and more to fulfill. And it requires not only a cultural change, it requires a huge technology change, it requires you to completely revamp the customer's journeys, the mindset, the thought process, and in an environment where the attrition is, let's say, 20 to 30%. So that was the bold decision. Now you talk about the second question which you asked. How do you keep that relevant and keep that alive? Obviously, one is the culture, right? What do you do on the cultural side so that any new individual or existing organization believes that, yes, keeping customers happy, both internal and external, is important for me. Now, the good news is that Access already had a strand of that very deeply embedded in the organization anyway. Not all strands, but there was a very clear strand. So it was easy to build on that. Second is obviously you have to ask yourself the question, how do I build technology tools to ensure that the customer obsession is enabled? So to give you one example, for example, we have an app internally which connects 90,000 people. It's like carrying the bank in your hand. It takes data from 35 systems. You talked about personalization. Every day we are monitoring close to 3 million transactions on a daily basis to look at how can I personalize data, offers, services for our customers. And by the way, we're just scratching the surface. We've got a long way to go. So when you start thinking customer obsession, when you pick that as a goal for yourself and say, yes, this is the NPS score I have to get to, you start thinking differently because it's an audacious goal. So I think the thing which we are thinking of in Access every day is that if we have to get to that goal, what are some of the audacious things I have to keep doing to get to that goal? And I think that's what keeps us alive. We have a separate team we call Sparsh, which just thinks of that. We have a separate board on Sparsh, which just thinks of customer obsession. And their life, their job, their career depends on making that difference for our customers on a daily basis. Obviously, there are people who are doing the day-to-day job, but they're thinking daily on how to make that impact 18 months, 36 months down the line. And I think that is what is bringing a difference about in some of our numbers. Just to give you a data point, when we started measuring our NPS scores, let's say our baseline was 100. In 3 years, we've reached 159. So it has led to a massive change in terms of at least how customers are perceiving us. External surveys, our ranking has moved from number 4 to number 2. And the gap between us and number 1 is very, very small. So it is leading to business uplift. It is leading to customer uplift. It is leading to satisfaction uplift. And obviously, as I said, we're just scratching the surface. We've got a long way to go.
No, amazing story of the NPS move, Amitabh. However, customer obsession is just one metric. As a bank, you can't do without looking at the profitability day in and day out. So how do you balance that approach of customer first versus sustainable profitability?
So yes, in my mind, in the long run, there is no difference. If you can get the customer experience right, profitability come in droves, actually. And that's precisely what I keep telling people in Axis Bank all the time, that I want one day you will see customers walking into Axis Bank, either a branch or opening accounts, because they've heard of the customer experience we provide. So imagine that day you're sitting in your chair and the business is coming. Now, to get there, a lot of work to be done, and we might have to spend more money, or we might have to ensure that we give benefits or some concessions to our customers, but that's money well spent. I mean, that's exactly what we do with technology. 10% of our money goes in technology. We are spending in technology today, hoping for a return tomorrow. I mean, you spend a lot of money in technology. This is exactly the same thing. You're spending money today because you will create a differentiator which will survive for a very, very long time. For people to go on this journey of providing a customer experience which is unmatched, it will take for someone else also those same 10 years. It's not that, they can just start tomorrow and it will happen. So if I can spend, and others are focused on other things, if I can get to that point in a customer experience which is way better than what others are doing, I have created a pretty strong moat around myself, and that will lead to customers coming to us in droves. I'm very, very confident. And it is proven by the data. You can already see the uplift which is coming through.
Yeah. So on that note, can you share with us one example where you prioritized customer experience over a short-term trade-off in some manner?
So we bought over the retail business of Citibank, which has been in this country for more than 120 years. And the slogan we used when we looked at customers of Citi, and frankly, we used the same slogan for the employees, Citi employees who are coming to us. It is same or better. So we said that if you were getting a service, and let's say Axis Bank did not have that service or that benefit or that product, we'll ensure it's at the same level. If we have it, and it is to our customers, we are offering a better proposition, we will give that proposition to you for free. So it meant that some of our synergies were delayed. It meant that it took a long time for us to ensure that the full migration to Axis happened. But we were so focused on ensuring that they don't even realize that they've changed from a bank they have been dealing with for a long period of time to a completely different institution was very, very important for us. So yes, it meant that some of our benefits were delayed. But I think in the long run, the NPV of that is way better than just trying to upfront some of your synergy benefits.
Thanks for sharing that, Amitabh. And yes, as an ex-Citi employee, I've really witnessed that journey. I really love one of the lines I've heard you use, that the banks of tomorrow will be technology company with licenses. And I know Axis Bank lives with that credo. So what are some of the structural, cultural, or technology changes that you've made in your tenure, which have really drastically ensured this?
So this has meant that we have had to go and look at our entire technology stack with a completely different eye. Because if you want to be seen as a digitally agile, innovative, technology-driven bank, you can't do incremental changes. So literally we have gone through every business of ours and every large platform of ours and have already completely revamped it or in the process of revamping it. In many cases, it has meant completely changing the system. It has also meant that we have launched front-end applications or systems which are completely new. So I mentioned, Siddhi, to you, we have done something similar on the wholesale bank side called Neo. We have done similar things on the platform which we're creating for the SME side of the business. We are doing something similar on the retail asset side of the business. So we are completely reforming and transforming this technology stack. And then on top of that, we have built various enablers. So I talked about Siddhi as one application which I'm aware no other bank has. And I remember I told you 100,000 employees of ours are using it. And we have created similar enablers around GenAI tools which our employees can use for processes. We have created one customer view. We today have 150 applications of ours on the cloud. So we have demonstrated scalability to our clients. We have today on the just corporate side 400 APIs, which we used to have 0 when I joined. So across every part of our platform, we have asked ourselves the question, what makes us best in class? And then we have now moved on to the next phase and said, okay, how will this technology stack look like 3-5 years down the line? And how do I start making those investments so that 4 or 5 years down the line, I will have the best stack, the best ability from a technology platform perspective to look like a technology company. And to just give you some statistics, 70% of our transactions are now online. Today, 15 million users use our mobile app on a monthly basis. So some of our app is rated 4.8 on the Google and Apple Play Store. We are the best rated mobile app in the world. So you can see some of these numbers come through over a period of time. But again, as I keep saying, it is now. You have to keep investing. You have to keep thinking of what would look like 3 to 5 years down the line and keep working backwards and keep making those investments. So right now, I might be saying, oh, we're looking great, but the journey never ends.
Thanks. So even as banks invest and move more and more towards technology, on the other end of the spectrum are the fintechs who are vying for licenses and wanting to become regulated entities. Where do you think the ecosystem will find its equilibrium, Amitabh?
Well, fintechs obviously have a very important role to play, and their ability to bring speed, change, ability to go and look at profitability pools which banks sometimes are not able to attack, or banks have been complacent about those profitability pools and take that profitability away is in some ways unmatched. But let's also forget a couple of things. One, as I said, we are trying to become not a fintech, but definitely a technology company. So we are not just sitting and telling the fintechs, please come and take our business away. So we are also trying very hard to ensure that in a lot of areas, I can see some important fintech players sitting in front of me. I'm telling them that we'll compete with you, we will collaborate with you, we will partner with you, and in different businesses, it will play out differently. And we also know that over a period of time where we are partnering today, we could start competing tomorrow, or the other way around. We might be competing today, but over a period of time, let's say we were able to get ahead of some of those fintechs and become so large that it does not maybe make sense for them to kind of be playing in that particular sector for some time. So that equation, both of us need each other. Both of us will keep competing. Both of us will keep investing. But end of the day, the customers will benefit if we work together and collaborate rather than only fight. And I think even if there is a fight, it has to be a healthy fight. So in that sense, you will see that happen. We have today more than 200 fintech partnerships. So it's not a small number anymore. Now, obviously, they are of various size and scale, but the number is quite large. And we want to be seen by the fintechs as a bank who is willing to work with them and collaborate with them and invest with them to create product solutions which are more relevant for the customers, make their experience better. So in that sense, we want them to see us as a go-to partner for any new thing they want to try. So some of these things are important for us. I mean, people, when they talk about UPI, think of some various fintech players, but they don't realize that Axis Bank owns 35% market share of the backend. And obviously, the only reason we could have reached that is because we work with those fintech players to provide those back-end pipes where our technical declines and our, the ability to ensure that the transaction goes through in the way the customers expect does happen. So in my mind, it's a healthy relationship. And at least we in the bank have a very positive view about what they can do to the overall financial services industry.
Thank you very much. Thanks for sharing that. And I'm sure your fintech...
No, we're expecting some shares from them for free, but that's okay. I mean,
So going back to the customer expectations, like I mentioned, customers are spoiled for choices. Today's norm is, today's delight is tomorrow's norm. In a situation like this, what is that one customer behavior or trend that you are anticipating to really disrupt banking and financial services in the next 5-10 years?
So my view is that all of us have always talked about investing in understanding customer behavior. I think the problem that is happening is with new technologies coming in and the experience which, in every sector they're seeing it, they're feeling it. The customer expectations are changing and the behavior is also changing. So for me, I think the winners of the future would be the banks and institutions which understand customer behavior to a completely different level than what they do today. I don't think we understand it enough. And we need to understand it almost at a personal level, so at an individual level. I think we need to invest much more there as institutions than what we've done till now. And I'm saying it for everyone, banks, fintechs, everyone. Because I think we understand them in cohorts, we understand them in segments, we club them together in some convenient category and say, okay, based on this customer behavior of this cohort, this is my experience which I want to provide. I think we need to go much, much deeper than that. So that's one point I want to make. Second is that in future, for any one of us to expect that customer will come to me or I need to go to the customer and make them experience what I have might not work. I think what will work is that we are just part of an embedded series of transactions which the customer is going through and in the process not even realizing that they trust a bank. Now I know it comes in the way of brand, it comes in the way of what toll you can collect, what fees you can collect, etc. But in future, as AI becomes more ubiquitous, in my mind, anticipatory banking, being part of the flow, making it so seamless that the customer doesn't even need to come to you, but understands that yes, you have just played a role and they play a very good role, is I think another customer behavior which we need to understand and appreciate. To expect customers to come to you to take your product and service, I think will mean your death knell over a long period of time.
Amitabh, to be in GFF 2025 and not mention AI and agentic AI in any manner will be disservice to the platform itself. What are your thoughts around that?
So, 1 or 2 years back, I also thought that, too much of buzz around it. I mean, look at the investments that are happening. I mean, it is almost becoming a closed club. And if you don't have $100 billion, you're not worth talking to. But I can now see, at least in Axis Bank and some of the other institutions I talk to, that they are now seeing benefits at scale. They are seeing use cases at scale. The number of use cases are growing day by day. Obviously, there are huge cost benefits that seem to be visible, and a lot of us are working on obviously going after those cost benefits. But I am now seeing the application of AI into how you can run businesses absolutely differently. And we are, for example, working on that. Now, it is not using a tool. You have to do it end to end. A lot of investment is required. It is expensive. There's a lot of thinking and a lot of resources you need to put after it. But the benefits can and will be huge. I think a lot of solutions are being launched, which are being in GFF, which are being termed as Gen AI. I think that's some distance to go, but my view is that you will start seeing, in terms of UI, UX experience, in terms of cost saves, in terms of business models, in terms of customer journeys, where Gen AI is playing a substantial role in delivering it and making it happen. So it is real. And the faster you understand the implications of it, the faster you embrace it, the faster you're very clear how you'll go about getting the full benefit of it, the better off you are. It's no longer a coffee table conversation. It is real.
Thanks, Amitabh. I think we are out of time, so one last question, and I want it to be on a personal note before we close. behind the boardroom persona of Amitabh is the person who's passionate and intrigued about some of the facets. So if not this role, if not this platform, where do you think you would have
Wish
been?
I was running a fintech. They seem to have all the money and the capital to, spend on all kinds of things. Wish I was that young also, but one day we will hopefully create a fintech out of the bank itself and give a run for the money. That's what we'll hope for.
Sure. Thank you very much. Folks, one big round of applause for Amitabh. I'm sure we've taken away a lot from his words today, and I wanted to thank you for that.
Thank you. Thank you very much, Nupur, and thank you very much, Mr. Chaudhary, for joining us. What an invigorating and what a riveting discussion that turned out to be, ladies and gentlemen. That being said, we'll also be setting the tone for our next session coming up within the next couple of minutes. And I'm going to be requesting our members of the audience to continue being seated inside the hall. We've got more exciting sessions coming your way and some very esteemed thought leaders joining in. But before we do that, I'd also like to take the opportunity to thank our incredible partners at GFF 2025. We'd like to thank our customer experience partner, Adobe, Notepad partner, Authbridge, Caffeine partner, Vatis Platforms, Insurance Innovation partner, Reliance General Insurance, and Flow Plan partner, Fiat Pay. We'd also like to thank the account aggregator and AI partner, Finarkin, Integrity partner, Digiatya, and session partner FICO, rewarding payments partner Revolut, and gold partners MasterCard. And we're now going to be bracing ourselves for the next session, and this is all about responsible AI for finance. Balancing innovation with financial stability. Now that's the underlying theme of our upcoming session. Ladies and gentlemen, all the ones who are still inside the hall, please do very quickly take your seats. Our next speaker is about to join us. In fact, we'll have none other than Mr. T. Ravishankar, Deputy Governor, Reserve Bank of India, joining us within the next couple of minutes. I'd like to request you all to please continue being seated. Thank you. All right, ladies and gentlemen, we have a quick request. We'd like to announce that the first 3 rows of the barricaded area, I repeat, the first 3 rows of the barricaded area, we request you to please keep them empty and keep them vacant for our dignitaries who are about to join us within the next couple of minutes. It's a humble request to our delegates. That being said, we have made arrangements to ensure that the entire set of audience can be accommodated right here in Jasmine 3 Hall. We request you to please proceed to the other vacant chairs. The first 3 rows, I repeat, the first 3 rows of the barricaded area, we request our delegates to please keep them vacant and please kindly proceed to the alternate seats that have been arranged for you. A humble request there, kindly oblige please. We've got our dignitaries joining in. And we request you to please sort of take your seats accordingly. But please be seated. We're about to get started with our next session. Everyone who's still standing, I'm going to urge you all to please very quickly take your seats. Thank you.
thing that ever to happen to humanity. We do not yet know which. It is acknowledged widely that AI could be the permanent answer to poverty and disease. But equally, there have been concerns from AI experts, ranging from concerns around bad actors using AI for bad things, to the more fundamental concern that human existence is irrelevant once machines achieve superintelligence. I do not intend to dwell on these widely divergent possibilities, but I raise this point only to highlight the fact that while the benefits of AI are transformative, they need to be used responsibly. In finance, the margin for error is even narrower as financial institutions are built on trust and economies prosper on stability. Therefore, the integration of AI in financial systems must be approached as a matter of profound responsibility with due recognition and mitigation of risks. What are the benefits of artificial intelligence specific to finance? I wish to spend a few minutes here. The promise of artificial intelligence in finance is by now, of course, well recognized. At its core, AI can expand financial access, strengthen safeguards, and reimagine efficiency. It can lead to better credit assessment through use of alternative data, like transaction patterns or utility payments, of unbanked customers. Ability to use massive data sources could help in real-time detection of frauds through identification of unusual transaction patterns, or improve market risk modeling. Operational efficiency and cost reduction can get a paradigm shift using AI. For example, in back-office processes or KYC or loan processing, etc. Chatbots and virtual assistants would make customer support 24/7. Data extraction from financial documents through natural language processing could make document processing virtually seamless. In the investment and trading space, the ability of AI models to detect short-term price inefficiencies are already being harnessed. Other benefits include allocation optimization, use of big data to forecast market movements, etc. AI-driven RegTech applications help regulated entities with better compliance outcomes. Automated monitoring helps detection of suspicious transactions and generate faster compliance. AI has potential to significantly expedite financial inclusion through alternative credit scoring models, for example, while language interfaces will remove language barriers and reach digitally limited customers. Investment advice becomes affordable to small investors through robo-advisors. This and many of the risks is what makes this financial technology so much more exciting. But these benefits come with significant risks. AI systems are trained on vast amounts of data. It is natural that the learnings from the data would also extend to learning the bias inherent in the data. AI systems trained on biased historical data are likely to perpetuate or amplify historical discrimination in, for example, credit profiling or hiring. Even small biases in training data can lead to systematic exclusion of population groups from accessing financial services. Algorithmic opacity would make it very difficult to identify possible biases upfront, which makes the problem even worse. The black box problem of AI models, or in other words, the lack of explainability of AI decisions, makes these models non-transparent. This makes it hard for regulators and auditors to understand how decisions are made, which in turn undermines accountability. Regulatory actions or denial of service to customers would typically require reasons to be communicated. Absence of explainability, therefore, could constrain the use of AI tools. There are systemic risks typical to AI systems, such as herding behavior when AI-driven trading models get widely used, which in turn could lead to amplified volatility. AI misjudgments can trigger market dislocations. Such problems are amplified by the possibility that it becomes difficult to assign responsibility when an AI model makes a harmful or erroneous decision. Legal frameworks would always find it difficult to catch up with very fast-moving technology. Over-reliance on automation could result in losing oversight or in delayed intervention when things go wrong. There is also the ethical issue of using behavioral data for manipulative cross-selling or risk profiling. Then, of course, there is the debate about AI and job displacement. Whether AI will displace jobs in the long run would depend on whether it is like other transformative technology changes of history, like the Industrial Revolution or the invention of electricity, or rather the discovery of electricity, or whether it is a fundamentally different kind of change. Max Tegmark, the founder of the Future of Life Institute, argues that while all past technologies amplified human ability, they did not replace human intelligence. AI is the first technology that creates intelligence itself. Now, what this essentially means is that it could actually make the human brain redundant, which is not a possible outcome that humanity is used to dealing with so far. Recognizing these risks is not to diminish the promise of AI, but to underline the importance of adopting it responsibly through safeguards, governance, and foresight. The key question, therefore, is how do we enable innovation while safeguarding systemic stability? This balance is a necessity for ensuring that AI strengthens rather than undermines the financial system. If regulatory frameworks are too rigid, they can dissuade experimentation, reducing AI to a tool deployed only by the large players. On the other hand, unbridled adoption, particularly in high-impact areas, could create vulnerabilities that are invisible until they snowball into a crisis. The balance is not only about restraint, it is also about actively encouraging innovation. This requires policies that create safe spaces for experimentation, such as sandboxes, facilitate open digital infrastructures, and provide access to quality data, enabling firms to innovate with confidence. It also requires incentives for responsible innovation so that firms see governance not as a burden, but as a competitive advantage. As we reflect on the transformative potential of AI, it becomes imperative to anchor its adoption within a framework of principles. The RBI took a step in this direction through setting up the Free AI Committee, which has articulated a set of guiding principles, or sutras as it calls them, for responsible and ethical adoption of AI in the financial sector. These principles are intended to serve as touchstones for all stakeholders. At the core is the principle of trust, the bedrock of finance. Every deployment of AI must reinforce, not diminish, the trust of consumers, institutions, and society. Equally important is a people-first orientation, ensuring that technology serves human needs. This report emphasizes innovation over restraint, coupled with fairness and accountability in outcomes. AI can inform decisions, but it cannot own them. The accountability must always rest with human actors or institutions deploying AI. The principle of understandable by design underscores the need for transparency, ensuring that AI decisions are explainable to both regulators and consumers. And above all, safety and resilience must be built into every layer of adoption. Alongside regulatory oversight, it is equally critical to encourage industry-led codes of conduct, self-regulation, and the institutionalization of ethical standards. This collaborative approach ensures that responsibility is not a mandate of regulators, but a shared culture across the fintech ecosystem. The RBI has always fostered innovation with safeguards. Through calibrated guidance, supervisory oversight, and structured engagement with industry, the RBI aims to foster an ecosystem where financial innovation flourishes without compromising systemic stability. As AI reshapes the financial landscape, this approach remains unchanged. Progress and prudence must go hand in hand. RBI has also taken initiatives for the industry through RBI Innovation Hub, such as the MuleHunter.ai, for combating the menace of mule accounts. Unlike the traditional rule-based system currently used, MuleHunter offers greater accuracy and precision with significantly low false positive rates. Currently, the model has been deployed in about 20 commercial banks. In addition to MuleHunter, work is also underway to explore a digital payments intelligence platform that can analyze and assign a risk score to transactions on a real-time basis. While AI holds immense promise, While AI holds immense promise, the financial system demands the highest degree of prudence. Critical infrastructure and institutions must be ring-fenced from unchecked risks that could arise from untested or poorly governed AI deployments. The objective is not to obstruct innovation, but to ensure that its application never compromises the stability or integrity of the system. To this end, practices such as stress testing AI models under diverse scenarios, red teaming to identify vulnerabilities, and the adoption of explainability tools and standards are indispensable. These mechanisms would help regulators and institutions alike to supervise AI outcomes, detect weaknesses, before they escalate, and ensure that AI-driven decisioning can be understood and, if necessary, challenged. Equally important is that AI systems are subjected to rigorous oversight and layered with inherent checks. Financial AI applications in particular must be designed such that they cannot inadvertently destabilize markets or payment systems or consumer confidence. This approach demands safety by design rather than safety as an afterthought. Safeguards must be embedded throughout the life cycle, from conception and data training to model validation and real-world application. Retrofitting safety once risks have materialized is inadequate and potentially destabilizing. Embedding AI in finance is not a one-time exercise. It demands continuous research, experimentation, and learning as models, techniques, and risks evolve rapidly. It also calls for partnerships among industry, academia, regulators, and startups. Co-developing solutions, sharing knowledge, and stress-testing innovations must be fostered. Entities should have in place systems for responsible data governance, ethical sourcing of data, and privacy by design in every model. They should develop common standards, toolkits, and disclosure mechanisms so that model design, training data, and decision logic can be explained. Safeguards such as digital watermarking of synthetic content should be explored to deter misuse. Internal policies and processes must be revised to embed AI risk assessment into product life cycle. Continuous monitoring, stress scenarios, and independent audits should be institutionalized. What is the way forward? As we look ahead, the path for responsible AI in India's financial sector is exciting yet deliberate, demanding a phased approach that balances innovation, inclusion, and stability. Alongside technological progress, the human element remains critical. AI literacy for consumers to understand both the potential and risks of AI will be central. Just as financial literacy has been a national priority, the coming decade will require a parallel focus on AI literacy for individuals to engage confidently and safely with these new tools. In the short term, the focus needs to be on awareness and capacity building. Financial institutions, technology providers, and regulators must train personnel, strengthen internal governance structures, and introduce initial risk frameworks to ensure that AI deployment is encouraged with a focus on safety. Awareness campaigns and workshops can also help smaller institutions and fintechs integrate AI responsibly. In the medium term, free AI principles should guide the industry practice. AI can begin to play a substantial role in soup tech, credit decisioning, and financial inclusion. In parallel, the industry should develop its own governance standards, self-regulatory codes, and ethical guidelines to complement regulatory oversight. In the long run, India can aspire to become a trusted global hub for responsible AI in finance. By demonstrating how innovation can coexist with strong safeguards, India can set an example for emerging economies and the global south, attracting talent, investment, and collaboration. I would now conclude. As we conclude, it is essential to reiterate that AI must remain a force for good, empowering individuals, strengthening institutions, and enhancing the resilience of our financial systems. Its promise will be realized only when adopted responsibly, with constant attention to its societal impact. Responsible AI should not be framed merely as a regulatory requirement, but as a matter of business ethics. Every model deployed, every decision automated, and every service enabled through AI must reinforce the confidence of consumers, provide fair access, and respect the dignity and privacy of all participants. Let me leave you now with 5 guideposts, not as tasks, but as a collective mission. We can call them the 5 T's. The first is trust. I've already talked about it. Commit to building AI systems that uphold and enhance trust in the system. Embed responsibility and ethics in every algorithm. Second is transparency. Reinforce clarity and explainability in AI, ensuring that decisions can be understood, audited, and questioned when necessary. The third is training. Invest in training to nurture a world-class AI talent within our financial ecosystem. Ensure India leads in creating, not just in consuming. Fourth is technology for good. Let innovation be guided by purpose. The test of every AI application must be whether it advances inclusion, resilience, and efficiency. And 5, togetherness. Above all, we must work together, regulators, industry, academia, and global partners, to collaborate and co-develop. Through shared commitment, ethical deployment, and continuous vigilance, we can ensure that AI fulfills its promise as a transformative enabler. Thank you so much.
Thank you very much, sir, for your future-forward insights that's truly shaping the growth trajectory, if I may put it that way, for the entire financial landscape, and also for sharing the 5 important tenets with us. That being said, we now come to that segment or that moment of the program wherein we look forward to something very, very incredible, and this is where we will be focusing more on certain initiatives and certain launches as well. But to take this segment forward, I would now like to please invite Shri Suvendu Pati, Chief General Manager and Head of Fintech Department, RBI, for taking ahead the CBDC product launches. So if I may please invite on stage Shri Suvendu Pati. Can we have a huge round of applause, ladies and gentlemen? The segment is only about to get even more exciting now.
Good afternoon, everyone, and thank you, sir, for agreeing to this set of launches that we are doing today. And now, from the theme of the conference, AI, let's move to something more, something even innovative, that is the central bank digital currency. So today we have 3 product launches on central bank digital currency, which we'll be doing today. The first one is creating the wallet on the go. So digital rupee could initially be transferred only to another CBDC wallet holder. It was made subsequently interoperable with the UPI, broadening its acceptance infrastructure. Now, to be able to become a true digital equivalent of cash, it was important to transact in digital rupee without any dependency on who is the recipient. Just think, when you are getting down from a cab and you would like to tip or pay something to the driver, and you are not sure whether the recipient is having any wallet or not, just the phone number would do. And that is what we are unlocking today. With the wallet on the fly feature, now you need not bother if the recipient has a CBDC wallet already or any other payment address. Just the mobile number will suffice. So now I would request Deputy Governor to do the launch of the wallet on the go feature with a click. The video will play. Sir, you can see.
Cash is accepted everywhere,
and Digital Rupee aims to provide the same trust. Starting with Digital Rupee QRs, it was later made interoperable with UPI. Now, even if the recipient does not have a CBDC or UPI ID, you would be able to make CBDC payments just through mobile number with wallet on the go feature. Want to convey your appreciation to the driver? Enter their mobile number and send money through your Digital Rupee app. If the receiver doesn't have a Digital Rupee wallet, it's created instantly on the go. Quick authentication on their phone is all they need. The wallet gets created without requiring an underlying bank account or any other existing financial address, just a mobile number will do. Developed under RBI's pilot, this feature helps onboard unbanked users while ensuring seamless payments. So, explore Wallet on the Go feature with the Digital Rupee, instant, secure, seamless and inclusive. Initially rolled out by PNB, the feature will soon expand across the CBDC ecosystem. The PNB Digital Rupee app is now also available in 4 regional languages to promote digital inclusion.
I now invite our Executive Director, Sri P. Vasudevan, Sri Ashok Chandra, MD and CEO of Punjab National Bank, to join us on the stage for a quick photo op. Moving on to the next one, it's about discoverability of the CBDC app. The Digital India prefers the ease of access and convenience while accessing digital products, especially in the financial space. With multiple banks having separate CBDC wallet, CBDC apps, a need was always felt to be able to access the multiple wallets through a single app. And now, Bheem now fulfills that objective by facilitating end-to-end user experience for the wallet onboarding and transacting through the Bheem app. And it enables discovery of the CBDC wallet being offered by various banks. Now I request Deputy Governor to launch this CBDC app through Bheem.
The digital rupee wallets are being offered by 19 banks and has over 7 million users. The digital rupee works with CBDC merchants and across all UPI QR codes in India. That is, from the largest mall in Mumbai to the smallest tea stall in rural Rajasthan. Let's see what the current scenario looks like. Meet Rajesh. He has accounts in 2 different banks. Rajesh appreciates having multiple options across different banks, but wishes he could manage them all from one convenient location. This scenario presents a perfect opportunity to enhance user convenience while maintaining the security and reliability of individual bank CBDC wallets. Wondering how Bheem solves this? Let's dive in. Bheem will enable users to access their CBDC wallets from one place, thus to complement what banks have built, not to replace. Working with partner banks, Bheem has created a unified access point, providing a convenient aggregation layer. This journey has been initially enabled by Axis Bank and Canara Bank and will gradually expand to other wallet providers going ahead. guided by RBI and together with banks, Bhim is making the digital rupee more accessible.
I request Ms. Lalita Natraj, MD and CEO, NPCI Bhim Services Limited, and Shri Satyanarayan Raju, MD and CEO, Canara Bank, Shri Neeraj Gambhir, Group Executive, Axis Bank, kindly join on stage, please. Moving on to the last item that we have on CBDC today as a launch. This is something very unusual, you would imagine. This is how CBDC is playing a role in person-to-person solar trading through programmable CBDC. As tokenized ecosystem evolves, it needs a legitimate funding instrument to support the emerging use cases. Supporting this initiative, India's first peer-to-peer energy solar trading platform on the blockchains, CBDC Wallet, is now facilitating the funding leg. The use case is significant not only in terms of the clean energy goals, but also in leveraging the tokenized structure of the CBDC in supporting tokenized assets, trading of the tokenized assets. I now request Deputy Governor to launch this use case of programmable CBDC that powers the peer-to-peer solar trading. And here, we would also like to make a special mention of Karnataka Energy Regulatory Commission for enabling person-to-person solar trading, and ICICI Bank to have developed this use case or partnering with us in developing this instrument, which is playing as a funding settlement. So I request now Deputy Governor to kindly click.
The digital rupee is a currency issued by the Reserve Bank of India in digital form. It began with simple person-to-person and person-to-merchant payments. But with the rollout of programmability, multiple new use cases are now possible, and digital rupee is uniquely positioned to serve them. In a significant clean energy initiative, the Karnataka Electricity Regulatory Commission has introduced a policy for peer-to-peer solar energy trading. Rooftop solar owners can now sell surplus power directly to other individuals. The marketplace is built on a blockchain environment and needed a funding instrument compatible with this technology, something legacy systems could not provide. Digital rupee is enabling the settlement leg in this first-of-its-kind use case where tokenized energy assets are traded between individuals. Availability of a legitimate funding instrument capable of interacting with blockchain opens up a new window of opportunities for next-gen use cases in digital rupee. As the tokenized economy evolves, digital rupee is ready to power the same in a secure and efficient manner. Digital rupee is powering the next generation of financial innovation for clean energy and various other sectors. ICICI Bank is implementing the pilot with KERC and stakeholders.
I take this opportunity to invite Sri P. Ravikumar, Chairman KERC, and Shri Rakesh Jha, Executive Director of ICICI Bank, to join us on the stage, please. I hand over the floor to
Thank you very much. And on that note, ladies and gentlemen, we now move on to our next set of launches as well. But first up, while we now focus on the NPCI group launches, I'd like to please invite Mr. Amit Tyagi, Head Fintech NBBL, to please come on stage. And let's put our hands together, everyone.
Good afternoon, sirs. Good afternoon, dignitaries, and welcome everyone. Under the guidance and vision of RBI and through the combined efforts of CCIL and NBBL, we are proud to announce the launch of Forex on Bharat Connect through FX Retail. This makes Forex transactions truly frictionless, from buying currency to reloading Forex cards or even sending money abroad. And the best part, it's secure, it's effortless, and can be done on a payments app of your choice. So before I move further, can I now request Mr. Radhesham Rathore, ED RBI, to take his place on the dais, sir. Thank you, sir. And without further ado, may I now invite up on stage Mr. H.K. Jena, MD CCIL, to deliver the welcome address.
Namaskar, good afternoon. Welcome to the program where we're launching frictionless Forex for the retail client segment. I welcome the dignitaries. First, respected Sri T. Ravisankar, Deputy Governor RBI. He has been the spirit behind the introduction of FX Retail. Thank you, sir. Sri Radhasyam Rath, ED RBI. Sri Vasudevan, ED RBI. Sri Ajay Chaudhary, Chairman NPCI. Madam Dimple Bhandia, CGM FMRD, who has been driving this project day in, day out. Other CGMs and senior officials from RBI. Sri Dilip Asbe, MD and CEO NPCI. MDs and CEOs of various participating banks. This time SBI, ICICI, Axis Bank, Yes Bank and Federal Bank and Bank of Baroda. Sri Bipin Preet Singh, MD and CEO MobiKwik. Sri Kunal Saha, founder and CEO of CRED, Ms. Nupur Chaturbedi, MD, NBBL, CEOs and other representatives from IBA, FBIL, FIMDA, FEDI, and FI, distinguished guests, partners, especially from the IT side, and colleagues from CCIL, NPCI, NVBL, and ladies and gentlemen. This is a great pleasure to welcome you all to this very special occasion during the 25th year of CCIL's incorporation, the official launch of linkage of FX retail with banking and non-banking apps through Bharat Connect. This is an innovative solution to enable customers to purchase US dollar to start with directly from their mobile phones. Over the past 25 years, CCIL has been the backbone of clearing and settlement services across government securities, money markets, OTC, Forex and derivatives. In the Forex clearing settlement space, it plays the critical role of central counterparty guaranteeing settlement from the moment a trade is matched. I welcome and thank you for being here as we take this bold step forward. Thank you all.
Thank you so much, sir, for those warm words. This launch has been made possible under the guidance and stewardship of RBI. So it gives me great pleasure to now invite up on stage Ms. Dimple Bhandia, CGM FMRD, to share her perspective with us. Ma'am.
Respected Deputy Governor, Executive Directors, Shri Rajesh Tamratho and Mr. Vasudevan, dignitaries and colleagues from CCIL, NPCI, NBBL, participating banks and third-party application providers, my colleagues from the Reserve Bank, ladies and gentlemen. It is my privilege today to be here today at the launch of this innovative offering, FX Retail on Bharat Connect. The product is special in many ways. Of all the markets which RBI regulates, it is perhaps the FX markets in which there is maximum direct participation by individuals, households and firms, both small and large. It is the market which enables us to cross borders, whether to trade, to study, to meet family and friends, or just to travel. It is also a market which is mystical in many ways, comprising, as it does, a myriad of currencies, exchange rates, and complex calculations which are not always as transparent as they could be. The introduction of the FX retail platform by ClearCorp, a subsidiary of CCIL in 2019, was an important step towards fostering greater transparency and fairness in the pricing of foreign exchange for users. For the first time, users in the FX market had access to live, real-time prices from banks authorized by RBI to deal in foreign exchange. Today's launch marks the first next step towards a giant leap of making the platform and real-time FX rates available to every entity which has a need for buying or selling FX digitally and without frictions. Just as the foreign exchange market bridges borders, this product has bridged many systems and entities to put together a fair, transparent, and seamless experience of dealing in FX at real-time rates. The product will initially launch with the facility to buy currencies, load cards, and send remittances in US dollars by the individual customers of 5 participating banks. But we hope to soon expand the scope to include more user categories, banks, third-party providers, and a wider range of currencies and transactions. As we move forward on this journey, we will look forward to the feedback and suggestions of everyone gathered here today and the users of FX Retail on Bharat Connect. None of this would have been possible without the support and guidance of our Deputy Governor and Executive Director Sri Ratho, the tireless efforts of CCIL and NBBL, and the cooperation and collaboration of the participating banks and the TPAPs. Getting all these together in one seamless whole has been the stellar efforts of my team in the Financial Markets Regulation Department of RBI, Ajay, Amitabh, Atul, Rohit, and earlier Sashwat, and by the support provided by the Department of Payment and Settlement Systems. I must thank each and every one of you and congratulate you on the beginning of this journey of facilitating every individual and enterprise to meet their Forex needs with convenience, fairness, and transparency. It is now my proud privilege to request Deputy Governor Sri Ravi Shankar to launch FX Retail on Bharat Connect.
What if booking Forex was as simple as paying a bill? Skip past the banking queues, get transparent charges, and find the best rates every time. The future is here. Under the vision and guidance of RBI and in partnership with FX Retail by CCIL, Bharat Connect, the network that made bill payments and recharges effortless, is now powering the way you book Forex. Introducing the Forex category on Bharat Connect. Planning a trip? Preloading your Forex card? Sending money abroad? Do it all directly from your favorite app, fulfilled by your own bank. Seamless, secure, and super fast. This is not just Forex booking. This is Forex reimagined. Forex category on Bharat Connect. Book smarter, live borderless.
Thank you so much. Thank you, ma'am. Now, I'm excited to pass on the baton to my colleague Soumya, who will actually show you how simple, how intuitive the flows are. Soumya, over to you.
Thanks, Amit. Good evening, sirs. Good afternoon, sirs, sorry. And good afternoon, everyone. Let's now see this in action with the app, MobiQuick, and walk through the customer registration journey. It is very simple. All that customer needs to enter is email ID, the PAN number, accept the terms and conditions, and choose the preferred relationship bank. We are currently live with SBI, Federal, ICICI, Axis, and Yes Banks. Customer once verified and proceeds, the FX Retail customer ID is generated instantly. Is it as seamless? Now customer is ready to book Forex currency, reload a card, or send money abroad. Now, before I jump into showing you the different use cases, let me tell you a story of my friend Shweta Shetty and her son Neil. As Neil is about to go abroad for a university for higher studies, she chooses Forex on Bharat Connect to manage his financial expenses, right? So, it is just quick, secure, and frictionless. So let's demo the Forex currency buying journey, how she does on an app. So it's a cred app. She chooses the Forex category, enters the quantity, selects the SBI bank, chooses the branch, chooses the preferred payment method. It could be UPI or net banking. Now she has chosen UPI. That's it. The payment is done, and now she'll visit the Agartala branch that she has selected on SBI to collect the currency. Next comes the big expenses, tuition fees and the living costs. Traditionally, sending money abroad is not seamless and very stressful, but not anymore. With Forex on Bharat Connect, Shweta can remit funds seamlessly to Neil's overseas account in just few simple steps. Let's see how. This time she uses MobiQuick app, chooses the Forex category, enters the quantity. Oh, $1 is not enough. Chooses the branch visit. We also have a digital option, but she chooses branch for an Axis Bank. Due to UPI security, the PIN cannot be entered. The payment is getting completed.
Soumya, that looked really smooth. I hope Shweta is not planning to surprise Neil with a visit. That might turn out to be more of a shock for both of them.
Absolutely. And it's done. Right. So the process completely is smooth from booking to payment to fulfillment. It's fast, transparent, and reliable. With Forex on Bharat Connect, we are just simplifying the foreign exchange. We are transforming it.
Thank you, Soumya. That looked amazingly super fast. From discovery to booking to fulfillment, the journey is seamless, the journey is transparent, and the journey is frictionless. We begin with select banks and a few payment apps, and USD as the first currency. And this is just the beginning. Ladies and gentlemen, Forex is now truly frictionless. So with that, I now invite up on stage my colleagues Saurav and Avdut to take the proceedings forward. Thank you.
Check, check. Thank you. Namaste, sir. Good afternoon, sirs, and re-welcoming you all to the some launches of UPI. Also, my colleague Avdut is here with me. So what we are going to do, we are just talking about two features of UPI which we are introducing. One is the multi-signatory in the UPI, and second is the how do we use light in the smart wearable. So in the UPI, as every day, many users are doing crores of transactions. UPI is a platform which talks about or redefine how the nation pays, progress, and grows seamlessly, securely, and instantly. More than 500,000 users of UPI, sir, loved UPI because of its safety, security, and the other features which are critical features for UPI. In this, same features and the same power of UPI now we are bringing to the multi-operating accounts, wherein as of now UPI was only one PIN at a time. Now we are introducing the multiple PINs. That means one transaction can be approved by the multiple approvers. So that's the functionality which we are bringing in. This is the new era of the shared trust. And this entire functionality will cover about 100 million users or the accounts. Close to that 70 million accounts will be of the MSME, and the 29 or 25 million accounts of the joint account which are in saving accounts or the corporate accounts. So let's start with this experience. Darshini, can we have the AV please?
India's digital payment story has set global benchmark. Every day, millions trust UPI to make life simpler. But when money is shared in families or in businesses, it requires trust, transparency, and collective consent.
Now, UPI makes joint accounts simple and seamless for families, businesses, and every joint responsibility. Every payment is transparent, consent-driven, and secure. Here's how it works. One person starts a payment, others receive notifications, review, and approve. Once approvals are complete, the money moves immediately. UPI extends its simplicity to joint and business accounts because trust in payments should be as seamless as the payments themselves.
So that's about the concept that how this is going to work. Let's welcome the new era of, again, shared trust in UPI and give more powers to our business community. Requesting my team, which is Alok, which is Himit and Avishkar there. Can I? Lovely. Okay, so here what we are trying to do is, we are show you a live demo, and under which two processes are there. One, wherein how do the business users can onboard themselves in any or either of the UPI app which is available, and they can add any of the bank account. So the journey which we are trying to showcase here is the Axis Bank account and on the Bob ePay app, wherein the users, and the account name will be Escrow Stack Private Limited, which is having account in Axis Bank. So let's start. So they can choose authorizer or initiator. They can choose their bank. They can choose their account. This is the customer ID which one need to put. Now you can set up your UPI PIN. Reconfirm your UPI PIN. This is how you can onboard yourself as first part of it. Means you can be initiator, you can be a requester. A lot of companies, you can call it as an account manager who have some powers to initiate the account. Yeah. Let's move to the another journey wherein the authorizer is being onboarded. Again, the account is being chosen. First, here the account has to be the same because the debit has to happen from the same account. Here we have increased the security. Instead of one customer ID, we have added two more factors for security reasons. Again, you are setting up your PIN. And this is how your onboarding journey is being done. This is now what scenario we are talking about, Bob ePay app, and customer belongs to Axis Bank. Now we will show you the live demo. And the live demo, what we are trying to do, there is a firm called Alok Traders. Alok Trader is having an account in PNB, and we are all using the PNB account and the PNB app. So Alok being initiator here, and we have also taken two approvers. So already the linking and onboarding journey has been done, and here is the video. Yeah. So Sanjay Meena ji has to take money from the Alok Traders, scan the transaction, 9 rupees. Alok is waiting for some funds to come. So he's low on funds nowadays, yeah. Yeah. So Alok is now playing the role of initiator here. Once the PIN is being put up, this is the initiating request with first PIN is being successful. Now, because we have the restriction of the two, slides, we have another, this is the transaction where the authorizer. So this is the transaction history which we can see here that Alok has initiated, and now this is pending with the Avishkar. So the another one. And initiator can also see the same transaction there in the transaction history. Yeah. So now Avishkar has also approved. Now we will go to the final approver. Alok ki company mein thode se bade sahab hain, which is the Himit Parekh. Now Himit can you just authorize this transaction? So now another phone will come, another app will come. So some lag, just allow, and this is what happens. At least this is faster than a lot of paperwork and all that thing. So the whole idea is, yeah, Himit, it's okay. Himit, it's fine. I think we have shown the two UPI pin was put up by the customer. One is the initiator, second is by authorizer. So that's how this is the successful journey which has happened. Now, Avdut, over to you. What you are bringing on the table?
Hey, thanks, Saurabh. And I must say, while you're speaking, my smart glasses were telling me that you are wearing the smart glass, but he is looking way smarter. So, almost all of you here have almost replaced your wallets because of UPI, right? Even myself, we go out without carrying a wallet for many places. While UPI has effectively replaced wallets to a great extent, it is still locked. And it is locked to this little guy, right? It is locked to your phone. Well, what if I tell you not anymore? We are happy to introduce payments through smart glasses using UPI Lite. Imagine frictionless payments without your wallet, without even your phone, and because these are smart glasses so well designed, you look good while doing those payments. So the linking journey is very simple. You go to your smart glasses application. In this case, we did the development with payments on WhatsApp and Meta AI. So you go on the smart glasses application on Meta AI. You allow intent to call your preferred application, which was WhatsApp in this case. You set up UPI Lite, and that's it. Your payments are set, right? Now, as it's the GFF, we are, of course, going to do a live demo, right? And I don't need this little guy anymore, so I'm going to put it in. But what I do need is a QR code. So this is the good old UPI QR code. Let's try a live payment. What says Saurabh?
Yeah.
Perfect. Hey, Meta. Can you scan and pay 90 rupees to this QR?
You want to pay 90 rupees to verified merchant, right?
Yes, please.
Payment processing. Please wait.
You guys cannot see it, but my fingers are crossed behind my back. We'll definitely make it a bit faster.
Okay, 90 rupees paid.
I think the speaker should also ring.
Rupees 90 received on ABC Enterprises.
Perfect. So, Saurabh, actually never felt this good sending money to somebody. This is probably the first time. So this is UPI for you, frictionless, seamless, and now without even a phone. Thank you so much. Thank you, sir.
But sir, with this, thank you very much for your time, sir. Thank you.
Payments are getting lighter, faster, and smarter every day.
Yeah.
And now,
MC is coming,
UPI
sir.
takes its next leap into the future of wearables. Introducing UPI Lite on smart glasses. The power of UPI Lite now built into your everyday eyewear. Just glance at a
that showcases how collaboration between RBI, CCIL, NPCI continues to shape India's financial landscape. On behalf of NPCI, I extend our heartfelt gratitude to Shri T. Ravi Shankar, Deputy Governor RBI, Shri Vasudevan, Executive Director RBI, and Shri R.S. Ratho, Executive Director RBI, for their guidance and for unveiling the initiatives that broaden the reach and depth of India's digital ecosystem. The products launched today reflect this vision in concrete terms. FX Retail on Bharat Connect opens up India's foreign exchange market to wider set of users, making access simpler, more efficient, and transparent. UPI for joint and business accounts ensures that digital convenience is no longer limited to individual users, empowering households and enterprises alike to transact seamlessly. UPI payments via smart glasses offer a glimpse into the future of digital payments, where payments are intuitive and immersive.
Thank you, sir, for being here. You know, the banking system is really in the throes of a transformation, and especially with what RBI has recently done with the spate of reforms and the structural, sort of upgrades, the reforms, the governance, capital strengthening measures that have been put in place over the course of the few years, but really how a legacy institution like yourself is transforming while at the same time, ensuring that you're taking on global competition. That is something we're hoping to cover here in this session. So, Mr. Chand, thank you so much again, and welcome to this session. Let me start by,
Thank you very much.
Thank you. And, let me start by, one of the sort of agenda that you've set for your bank, and that is to double the size of the bank in 5 years. And you said that 2 years back now. So in 3 years, we'll see double the size of Bank of Baroda. That is quite something. Tell us what will drive this kind of fast growth and the role digital will play in it, given that we're here at the FinTech Festival.
Thanks, Ritu, once again. And let me say, when we talked about doubling the balance sheet, we talked about somewhere in July 2023, saying that the bank need to double the balance sheet. Doubling the balance sheet is more of a roadmap, and we said that the doubling is more of a rolling plan. That means when we talked about 2023, 28 over 23, 29 over 24, 30 over 25, in that kind of a number. So when we looked at the 5 years growth prior to that, the CAGR growth of the business was almost at 12%. And in case for next 5 years, we can make the CAGR at 13%, we are almost there at doubling the balance sheet. So it's more of a roadmap that we thought that we need to, some kind of a glide path for the bank, not only me, the entire management, the entire field force, they need to see the goalpost, and that is what a goalpost we set in. But saying so, the way that we are trying to construct the book and the balance sheet, look, we have a significant international presence. And the opportunity for us to grow higher in international is always there. Secondly, we also said that we need to retailize our book more. So if you look at our RAM growth almost for last many quarters, almost at 18-19%. The retail is growing more than 20% consistently for last 13-14 quarters. So scenario like that, the focus would be more on the retail. Secondly, on the corporate book, we wanted to focus big time with regard to the mid-corporate, the mid-size account. And that gives you a very strong, what you can say, a higher income potential, the collateral coverage and all those things. And on the physical scale, we said in last 1 year itself, we would have opened more than 250 branches now. What is happening on the Indian, I mean, although we have very large rural and semi-urban branches, but on the metro side, a lot of markets are moving to a lot of micro markets where the growth potential is much higher. So we are opening branches in those, so we are expanding in terms of span also. I think adding 1% and digital has been a key enabler as far as the bank concerned. Bank of Baroda has been, I think, right on the curve in terms of the digital adoption. And all this, we are quite hopeful that we can add almost 1 to 1.5% growth. That is what can be extra vis-a-vis the growth we had in the past. And the moment we are there, we are almost at the double the number. So it's a rolling plan. So when we are in 2025, we are talking about 2030 over 25. Moment you get into next year, it will be 31 over 26. So it gives I mean, what you can say, goalpost for all the field people to look that the bank need to double the balance sheet.
You know, but carrying the weight and the legacy of the institution that you are, over a century old now, just tell us what kind of changes you're pushing into the bank, whether that is cultural or governance, to be able to move at the speed of a startup today, because that's what you have to do if you have to realize some of these ambitions.
Absolutely, you are right on that. Any organization, particularly legacy like us, 118 years. See, one of the key themes behind the legacy organization like us, we are predominantly government owned, that you have the trust and the safety aspect as a fundamental factor while driving business. And it is there for last 118 years and going to be there for many more years from now. At the same time, Bank of Baroda is one bank, whether it is culturally or digitally, we are more agile as compared to what we are in the past. So what I mean by agile that, look, culturally, suppose I talk about the HR part, we have built in huge capacity within the HR workforce in terms of adapting to changes. And where one bank experimented the lateral hire and the internal talent beautifully well, so that we on any business line, we are at the top of the curve. I think culturally, the bank has been quite well positioned to have the best of what you can say, the skill set or the knowledge set. That's important to drive the bank forward. That is point one. Secondly, on the digital architecture, the design has been, thanks to my digital team, we are not in a manner like a waterfall structure. We are more of an agile structure where if there is a changes happening, then the digital system would quite in a position to change to the new, architecture that is likely to come. So in that way, we encourage more of open banking. We encourage more of agility in terms of the digital design itself. A couple of initiatives wherein, the internet banking or mobile banking are something a very front-facing application vis-a-vis customer. And now both the applications we are trying to have it within us so that we can design those applications as per our requirement. So in terms of the digital infrastructure and the design, the structures are more agile to look into the changes. In terms of human resources, I think Bank of Baroda lucky to have a kind of a cultural integration in terms of both internal and external working well, and wherever the bank need to hire people to be at the curve, we are hiring people. This something worked very well. Look, around 4-5 years back, Bank of Baroda was the only bank to come out with a shared service company. The shared service company was called BGSS, significantly supporting manpower to the bank. So these are the innovativeness. I think the bank is, even if it has a legacy of 118 years, but the bank is quite as young as like any new entity and trying to adapt to changes which again the market would like you to change. We always say that while operating model, I need to be relevant. relevant for my business, relevant for my structure, relevant to the market. At the same time, whatever dominance we have in the market in terms of a market share of 6%, so I'll not be losing that dominance at all. So we're trying to construct both in terms of creating agility within rather than giving any rigidity to not to change.
You know, but to stay young, to stay relevant, to become agile, what are you doing to adopt some of these newer technologies that are coming into the fore? And, you know, every hall here, we're having one or the other conversation about artificial intelligence. Yeah. What is the real use case beyond just chat bots? You know, what is a bank like you doing with AI to strengthen your systems and even on cyber security?
That's very critical when we do have such a huge superstructure of ITA. All these aspects are very, very important. Look, the usage of AI as far as the bank is concerned in multiple business lines. And whether it starts with the risk modeling, whether it starts with the fraud risk management, whether it is an underwriting scoring model, the usage has been significant. And it has been there already. And always we treat AI as something to augment rather than supplement something. So AI, the usage of AI within the bank is to augment processes, augment in terms of the ease of doing banking. So a couple of things that we have done significantly in the last 2 years, particularly the AI, particularly on the Gen AI space, wherein we deployed one is a bot called Aditi, who can interact on a live basis with customer to meet the customer service requirement. So as compared to somebody talking to the call center, somebody can interact with Aditi on a live basis and get the services. And recently we deployed a virtual branch in one of our physical branch, where a customer can walk into a small enclosure and interact with the virtual robotic bot and get 18 transactional services over there. So the Aditi that we talked about is that talks about a non-financial service, a robotic bot. But the virtual branch which I am talking about, there somebody can get the transactional rights to do transaction with a human, human-like robotic bot. And that gives something a significant difference therein. The point here is that when we are looking at the new age banking, the entire world is going digital. At that time, we as a bank, while structuring the branch modeling, can you have a hybrid structure wherein you can cater to the requirement of the people who would like to be transacting with you on digital. Yeah. At the same time, those set of customer who like physical and they continue to be in the physical banking. So we as a bank on the AI usage has been significant. We always internally when we design our own policy, we always say let us be on the curve or the edge of the curve. Would not like on the technology piece anywhere. Currently, I am spending almost 10% of my operating profit on technology, be it capex or opex. And as a policy, we said if there need be, we can go up to 15% of the operating profit as an investment in tech space. So we are quite keen that the tech investment should go off, the customer experience should improve, the ease of banking for the customer should improve. At the same time, the quality of life within me, my own banker's friend working in the bank, that should be also made much easier.
Well, that's an interesting concept, a phygital branch, so to speak, for customers that want both the physical experience, sometimes only the digital experience. But, you know, we also have to talk about this global push for banks because you're balancing a lot of things on your plate. On one hand, you're talking about digital cyber security, doubling your balance sheet, your AI adoption, but then you also have to look outward because Indian corporates here are also growing. They're making acquisitions overseas, FDI coming into the country. What are you doing to pivot to serve this global diaspora, and how do some of the recent reforms from RBI, particularly when it comes to M&A financing, for instance, going to aid this transformation?
You said right, Ritu. The fact is that our tagline is India's international bank. So in terms of capacity to grow India internationally, the bank is right there, right? So if you look at the international book as far as Bank of Baroda is concerned, it almost accounts 16-17% of the global book as the book in international. And 3 years back, this was almost at 12%. So from 12%, we have improved to 16%, and we aspire to again cross 20% in a couple of years from now. So in terms of capacity, we do have now 85 branches outside India. So one thing that we are working, a couple of years back, we had 95 branches. We scaled down to 84. We wanted to optimize that. But having done that now, I think Bank of Baroda has the capacity now to expand further. Currently, as on today, we are looking at, a couple of centers overseas to expand. We are looking at a couple of inorganic buy also so that we can scale up. Look, the concept that we are talking about Bank of Baroda International is that, look, India is trying to, internationalize itself more and more. And Bank of Baroda is the right platform for India to internationalize itself, right? So that's something I think as a structure, we are already there and are going to play a significant role. The second thing, a couple of policy measures that recently announced in terms of merger and acquisition financing. See, globally, we participate in a lot of global syndication market. We are one of the good approved lender in the global syndication market. And there, all these transactions do happen quite regularly, wherein banks coming together as a syndicator to fund debt financing for a merger and acquisition equity finance, right? So ultimately, the assets should be there with you on an indirect manner. So I think that's a very good move by India, because the more we are getting into, we are getting into more of a mature market. I think all these products which are required for the country has to be there, and this is the right move to have thinking of banks financing the merger and acquisition. Secondly, the bigger theme here, how do you again help Indian corporate for a trade support overseas? And bank like us, we do have large presence, and I think we are working on to how do you increase the trade book so that Indian corporate are more encouraged to have all those trade to other countries. Particularly, I was part of one of the conclave recently, which was a African, how do you convert aid to investment? And Bank of Baroda having large presence in Africa. And I was part of that conversation therein. I think there are a lot of things that you can do vis-a-vis to promote Indians trade outside. Merger of acquisition finance is going to be a significant boost for that. I think as a bank, we are the right platform to make India grow its scale outside India in terms of trade business, in terms of investment, in terms of, talking about internationalizing India more outside India, and that's something which we are quite capable of.
But in three simple points, if you could put it, what would a large-scale, globally competitive Bank of Baroda look like, say, 10 years down the line? And the three things that would be needed right now to make that ambition get realized?
We do have a fair ambition because, see, look, within India, we want to, increase our market share. That's very significant. And, obviously, scale, there are debates happening, but only one thing I can say that as far as Bank of Baroda is concerned, 5 years, we're talking about doubling balance sheet. We are at 27 lakhs going to be 54 lakhs kind of a number, organic number, which I can say. But one thing that we are completely aligned that how do India can add scale outside India. And we are the right platform for that, actually. We are one bank, other than the largest bank. We are the second bank, having significant business outside India. And there, as a policy, internally, like currently it's 16% of the global book, the international book as a percentage of global book. We intend to go to 25 level in a couple of years' time.
So a quarter of your business is going to come from international banking?
It is going to be in next 3 to 5 years. We are working on that. We are working on how to, that's why I talked about a couple of, now we are thinking of expanding overseas. We are looking at inorganic opportunity. I think trade, we are, as a product, we are quite positive.
Okay.
Indian businesses now thinking global now, a lot of conversation happening on that. Now the Indian banks allowed for financing merger and acquisition. A big change in policy is going to help on this. So all these things, I think the bank is quite capable, and rightly so, because we are the India's international bank. And if we do not be on the what you can say, the first mover on this, I think we'll be feeling in our duty on that.
Well, we've spoken about the global trends, but you can't really be a bank of the future unless you cater to these future generations, the younger generations. What are the changing patterns you're seeing with Gen Z and beyond? And how are you adapting at Bob World, for instance? What are the changes, innovations you're bringing about in your own app to cater to the changing needs?
You are right on that. Actually, as I said, when we announced a lot of these digital measures, the idea was how do I cater to the Gen Z customers. And I just tell you one data point saying that many of the metro branches, the pre-COVID and post-COVID, the footfalls have gone down. Why the footfalls have gone down? Because many of the people now completely comfortable doing a digital transaction rather than coming to the branch. So when we experimented hybrid branches, which is in the form of physical branch, and offering, look, on a normal digital transaction through an app, you can do only one transaction. But you can't do multiple. Suppose I want to interact with a call center executive. I want to do a kiosk thing. I want to inquire about product feature. I want to like multiple that physical, the digital space within the physical branch, all these facilities are available. The idea is to again pull the customer again back into the branch. And the moment that somebody comes to a digital portion of a physical branch, all the products and services with the physical is visible to him on the eyes. And he will be enticed to get into proceed further and do a physical transaction also, a physical interaction also. So that's the agility that we want to bring in on the branch structure. Bob World is one of the super app we have, and the customer base is significant. We are coming out with a new version of Bob World maybe in a month time or a month and a half time, which talks about a significant better customer experience while dealing with the app. And it would have better safety feature, better protocols therein. And one big piece in the new version of the Bob World is that we wanted to add a lot of e-commerce into it. So, I mean, suppose you are getting into a UPI app at this point of time. Apart from the UPI, you can do multiple other e-commerce transactions like booking a ticket, going for a movie, multiple aspects.
You want the customer to not leave the app.
No, you not leave the app.
Use everything.
So
on
once
the
you
app.
get into the app, do everything banking requirement in the app itself. So that's the version 2 of Bob World we are talking about.
You know, has your view on collaboration or partnership with fintechs evolved over time? You've set up your own subsidiary at Bank of Baroda to experiment and bring in, adopt new technology. Do you still feel the same need you did 5 years back to partner with fintechs, or do you think you want to build those capabilities in-house, or perhaps look at some acquisitions rather than collaborations? How has the view changed?
I think the fintech space is a beautiful thing that happened to India and Indian economy. And as on today, if I believe I am using multiple scoring model, underwriting model, multiple digital offering, backend there are a lot of tie-ups already there. As on today, we have 25 odd fintech tie-ups as on today. The digital interaction is 100 plus in different application and platform. So we strongly believe these collaborative efforts have given the right dividend for us, and will continue to continue with the fintech partnership. Okay. At the same time, as you rightly said, we activated a company called BSTL, Baroda Sun Technology. And what are the purpose of this particular company? This typically can behave as a fintech company. It can get into the payment space like any other bank, any other. So look, the Bob World is only for customer. But now if you take about any UPI app, they are customer agnostic in the sense that customer can have any bank. So we have two super app now. Bob World is one for the customer, another is a Bob EPA, which again is super app and competing in the market like any other generic UPI app. But here it can acquire both customer and non-customer. So my ability to get non-customer is something key that we understood that the bank must focus on. And maybe at some point of time, this digital asset can be part of the BSTL, the Baroda Sun Technology. This is one. Secondly, a lot of emerging technology, both in terms of fintech and others happening in the market. For that, you need to invest. Either you can, as you rightly said, you can acquire or you can invest. So what we have decided, a lot of emerging technology, I think this entity is the right entity to invest into emerging technology. Create those solution or application for the bank, and that would be deployed. So that my existing bandwidth to support a huge IT is not getting some way compromised because my focus too much on the emerging technology. So we have segregated emerging technology outside the bank. The normal support system should be within the bank. And this entity can really compete with fintech company and create those kind of experience for customer, targeting non-customer equally for them, so that we get the right value and look at the journey of the fintech happening in India. I think as a conglomerate rather. I think I'm on the banking and also I'm on the fintech.
Well,
so I capture both the world. That is what the thinking, and that is what can give us the right dividend.
Well, you've given us a lot to think about, but before we close the conversation, I do want to touch upon an important subject, and that is sustainability and what you're doing at Bank of Baroda to build more sustainable practices so that ESG, it's not just a checkbox exercise. I mean, take us through some of the measures you've put in place on that front.
I think the bank, one of the core themes for the bank while doing business is to get into the ESG big time, and how do you ensure that you adhere to the ESG. As far as ESG, the S and G part, the banks have been doing since decades and decades and decades. Of late, we focus more on the environmental side. We are one bank. First, when we thought of ESG, we thought let us come out with a different logo, which again house all ESG piece into a logo as compared to the Bank of Baroda generic logo. So we have a different Bob Earth logo that talks about ESG housing under that particular logo. At the same time, look, we are one of the banks to adopt a ESG policy and announce that to the market publicly. There it talks about getting a net carbon zero by 2057. That is the 150th year of Bank of Baroda Foundation year. At the same time, by 2034, we want to have a carbon scope 1 and 2 emission reducing by 75%. We announced a lot of measures within the policy, which is publicly now available therein. At the same time, we have taken renewable sector as a champion sector for the bank, and for last 3 years, I think on the lending side, we have created almost more than $3 billion USD book on the renewable side. In terms of my own internal processes, we have made all our, most of the processes more of a paperless driven approval process so that we are not consuming paper. Many of the buildings have been made green. The usage of the solar tree have been wherever it's possible, we have planted that. Recently, we have come out with a new concept within BKC called Bob Forest.
Bob Forest.
Yeah.
What is that?
So we have 2 buildings in BKC. The other building had a bit of space over there. So we have constructed a forest in BKC itself with 100 different varieties of what you can say from the Sahadri range of herbs, plants, species therein. And it's a beautiful, having something, a forest within BKC itself, which so we have created the Bob Forest, going to replicate this in multiple centers across the country now. So on the ESG is the core theme of the bank, and we think that gives us the right capital in terms of, look, all this financial part is something which are captured in terms of numbers. But ESG is something yet to be captured as a number.
Yeah.
We have started documenting all these numbers to create a book. We have been rated on the ESG now. Our rating is strong now. Yeah. So I think, and we have a couple of international lines to support the ESG activity within India. So I think the bank is quite aligned in terms of how do you construct the ESG. What do you mean to say? Sustainable business that talks about process, practices, everything together. At the same time, driving the doubling balance sheet that we are talking about.
Well, I can tell that with the level of enthusiasm you've shown answering this particular question compared to everything else we've been talking about, just the last few minutes. So if I may take the liberty of doing a quick rapid fire with you to get some more points out and, just one word answers, Mr. Chan. One fintech or fintech trend that genuinely excites you right now?
See, I'm very fond of India getting a global payment space, and UPI is something a game changer whenever I travel abroad.
Okay.
And meet with the regulator, they are so fond of this UPI. So with this now, the UPI, the scope of UPI can go beyond transaction and get, now today we have announced the settlement system here.
Yeah.
Where again, the foreign settlement can happen instantly. So there are a lot of other payment space which I think there are work going on therein, and I think that's really exciting to get a real usage of blockchain, everything on the payment space.
Okay.
That would significantly reduce the, what you can say, the manpower requirement, at the same time improve efficiency.
What will the future of money look like? Will it be completely cashless? Will it be wallets? Will it be crypto or something else?
I'm fond of CBDC.
CBDC.
I have multiple times I said that CBDC is going to be the game changer.
Okay.
And in one of the conversations I said, like when the UPI first came in, people said that I'm able to do a transaction by credit, why should I make a debit therein? But the sheer ease of doing transaction pulled everybody into UPI. Similarly, I think CBDC is going to be the game changer. We also have a couple of announcement in the Global FinFest itself.
Which we'll wait to hear.
Yeah, and I think the CBDC is going to be a game changer, and we as a bank anchoring with the Reserve Bank of India can drive strongly on the CBDC.
When was the last time you used cash?
recently I traveled somewhere, so I had to withdraw cash because, cashless and cash both has to go simultaneously. You can't completely do away with cash. So cash is a requirement, but it's not significant as far as I know.
One big regulatory change that will move the needle on financial inclusion.
Financial inclusion, look, again, when we structure Bank of Baroda, they are in the mass market and also in the premium market. Only on financial inclusion, I tell you, I do have a BC points, almost 45,000 BC agents now. My market share is 6%, but my share in the Jan-Dhan account is 18%. I have 7.5 crore of customers Jan-Dhan account with me. The deposit in all the 7.5 crore of Jan-Dhan account is 44,000 crore. So I think financial inclusion has really, when we operate as a bank, because we are a universal bank, we need to be in all segments of the market. So actually, one of the growth model, the business engine or the rule engine for the bank is to how do you make strategic business unit who focus on their own area of activity, and financial inclusion, the team is driving very strong, and we are quite, what you can say, ahead of the curve in terms of financial inclusion initiative.
Okay, what is the single biggest misconception outsiders may have about public sector banks today?
I don't think there is a misconception therein, but normally when I interact with people, my own relatives, sometimes they feel that suppose they get into a branch, how they would be received by the branch. And I think that's a complete misconception, because the services in branches, you can't differentiate any bank for the matter. Rather, I would put policy sector banks because of the customer service initiative that we are running. They will be better than others.
Well,
so this misconception has to go, saying that suppose he walks into a public sector bank, any customer, small customer, the service, there can be a differential between bank X or bank Y. Now the service have standardized, or rather better, I would put it, rather it would be any inferior.
A banking practice you think will not exist in 5 years from now?
Look at the small value, see, we are running a digital lending book. The book is almost now 40,000 crore.
Yeah.
And here a small ticket like personal loan. Earlier, people used to walk into a branch to get a personal loan. Now they are not required to go. So in terms of small ticket transaction, although banks would go more and more retail, but within the retail also, there would be a segment of the market where completely it would be digital. So there, you do not need to go to the branch. In that way, the banking would be more and more, what you can say, slightly wholesale, although the service you would get.
Okay.
But to a branch banking, you'll be more wholesale. So I think that can be a change that can come to India.
Okay, finally, the last question. What is the one thing in, or rather, what is one thing in technology that can never replace, in banking?
So banking is a technology driven, because whatever we do, my co-banking would continue as it is, because that's the powerhouse.
Okay.
So what you can develop or innovate is on the peripheral to the co-banking, right? And that is what's happening actually. All these application, whatever fintech, everything, that is only to supplement or augment a part of the workforce, a part of the process, which was earlier manual, now going to be digital. But the co-banking cannot be replaced actually globally also anywhere. Core banking has to be robust. We need to invest more time to understand core banking and how do you again build in analytics on that. And now DPDP Act is coming. It will be much more important for a bank like us to see that we strictly comply to the DPDP Act, at the same time store the data in a manner which talks about safety, security, and it brings trust.
Well, on that note, Mr. Chand, thank you. It was fabulous speaking with you, and thank you for being so candid with us. And thank you all for being such a wonderful audience. A big round of applause for Mr. Chand.
Thank you.
Thank you.
Thank you so much, Ms. Ritu, and thank you, Dr. Chand. I think that was truly a seamless conversation. We really loved the rapid fire round as well. I request you to just come together for a quick photo that I'd like to capture at this point in time. But truly enjoyed this conversation, and I think some really good takeaways from this conversation as well. Thank you so much once again. Thank you for being part of GFF 2025. Thank you. All right, ladies and gentlemen, with that, we will be taking a short break. We shall be resuming right here back at 3 p.m. So request you all to be back in time at 3 p.m. We have our speakers who are all set, and our next set of sessions that will also be underway here at the Grand Theatre at GFF 2025. Thank you so much.
My apologies for starting with a delay. That's because I have come armed with a lot of statistics on how many people India has already onboarded onto the digital platform. This is from a NSS, National Sample Survey of the Ministry of Statistics. As official as it gets, numbers in India, approximately 85.5% of households possess at least one smartphone. Around 86.3% households in India have access to internet within the household premises. And then there's more data in terms of growth of digitization. While China dominates in value, in terms of number of transactions, India processes the largest number of real-time digital transactions globally, accounting for 50% of the world's total, significantly higher than the combined volumes of US, China, and EU. So we have onboarded a lot. Otherwise, you can't be processing the maximum number of transactions in the world, accounting for 50% of transactions onboarded. So a lot has been done. We are now talking about onboarding the next 300 million. But what is the first? Is it the first 300, 200, 100? I think that question will go to Lalita. As the CEO of Bheem, I guess best placed, how many have we onboarded in terms of digital payments?
I think it's over 400 million, about 400 to 450 million users have been onboarded on digital payments, Lata, so far.
And what is the pace of growth? I mean, how much was it last year, for instance, or the year before?
Should be about 12% CAGR will be the pace of growth. While I'm saying that there are more than 400 million users onboarded, there will also be people who are onboarded but not utilizing fully because of various inhibitions.
That includes the 400 million?
Yes, which we will cover during the course of the panel, I'm very sure. But yes, it includes that also.
Why don't you start from there? Okay. I'm not being partial to her because she's a woman. It's because, Bheem represents NPCI, which is the, organization that has laid the rails for digitalization in India and digitized payments. So over to you, Lalita. What inhibits people who have been onboarded but not using?
Okay. So I think a couple of things. One thing that we had done a survey a few months back when we were trying to relaunch the Bheem app. And one of the things that came to us as a feedback was that people feel that using UPI or using a digital payment as opposed to a credit card may not give them a credit score, right? When you use a debit instrument, you don't get a credit score, right? That's one. Second, they did not know if the payment fails, be it a card payment or a UPI payment or anything else. Whom do I go to? What do I do? I'm supposed to raise a dispute. I raise a dispute, and then it goes into a black box. I don't know what happens. Will I lose money? If I lose money, will I get money back? And then there are a lot of these cohorts, which are communities, right? So one bad thing happens to one person in the community, the entire community feels that, you know what, better to stay safe, right? So there are people who've got onboarded because of a lot of interest and enthusiasm. There will be some of them who are not using it, which is also a part of this 490 million. And that is our endeavor to solve this. We also have a set of people like aged parents of all of ours who want to use, who consume a lot of digital content. All of them are available on internet and WhatsApp and do a lot of voice videos and audios. But they feel that this is probably alien to them. So there are multiple cohorts, and these are the people who have onboarded but not used.
Okay, actually, you're already giving us, the obstacles to the next 300 million in what you've said. But let me come to that, Mr. Lakshmi Narayan. To onboard, we have reached what, 400, 490, she said. For the next 300, what would occur to you as the first problem of onboarding?
Yeah, I think I was asking the question, why do we want to onboard the next 300?
Okay. Well, if you want to give yourself that question, then go ahead.
No, I suppose there are answers to that, but I won't. But I think, what has got us to the first 400 will not get us to the next 300. And it reminds me of, I think it requires a full rethinking of the business model. The stakeholders in the system today, the banks, the merchants, the customers, what's in it for them in the rural area to onboard into this is not very clear. Banks are also already straining with the incentives taken away from them. They just have to invest more and more infrastructure. And you add 300 million more, their cost is going to go up. with
So
no
one
real-
disincentive for banks is clear.
Yeah, and for the merchants, clearly, they don't see any incentives on accepting digital transactions because they're happy with the cash. Their inventory turn is much faster if they had the cash on hand rather than waiting for settlements and some of the issues that Lalita talked about if refunds don't happen. And similarly for the customers as well. There is no incentive for them. Credit scoring is one of them. But really, there is no incentive for them to move to the digital platform. So I think that's the set of three things. I think it's the business model itself needs to be rethought. And I don't think, as I said, what got us to the first 400 will not get us to the next 300.
Well, you took away my next question, which was what will incentivize? But we will come to that. We have to look at positive steps that can incentivize. Let me look at the problems. Mr. Gaur, I think Paytm did a great job of cracking even the first 400. In terms of, unlike NPCI, which did not have to make money, you had to make money. Otherwise, it doesn't make sense. So something incentivized you to the first 400. If you can tell us what are the problems you face, therefore.
So the business model is very clear for at least to fintechs and other companies like Paytm. You get a customer because if you look into the customer or the merchant ecosystem, everybody is collecting money. If he takes money in cash, we don't know what is his earning. Why digitalization is important for the India is because if we have to look for 1 trillion economy or a digital economy, we have to have at least 500, 600 million active users. And once we know that what is the pattern of his earning, there is a business model of financing over it. Because today, there are a lot of people who earn good amount of money, but if they need are the need of some kind of financing, they go to an unstructured way of financing, which is actually not giving him good returns in terms of the capital or the interest which he gives. Second is how we do it. So one of the important factor which we have seen, because if we talk about Paytm, we have close to 35 million merchants. And we have merchants in close to 1,200 plus cities, which is way, way deeper. And thanks to the NPCI and RBI, the digital...
Can you repeat the numbers you have?
We have close to 1,200 cities where we have merchants who are accepting payments every month on month. And we have devices which have helped us because if we have to onboard merchants or customers in deep rural or tier 3, it has to be the vernacular. It can't go with English. It can't only be text-based. It has to be voice-based. So where the efforts, the AI, we had a beautiful session on AI previous to us. AI will help us immensely in cutting the cost of operations at least for fintech and banks, because earlier developing an app in a vernacular language was very difficult. But now with the help of AI, it is very easy to launch at a low cost. So I think we took around a decade to get, at least a decade to get 400 million customers.
Yes, yes.
But in next 6 to 7 years, our pace of getting 300 million can be achieved because of the technology which is available today.
Okay. You spoke about getting into your payment system, people who were hitherto using cash. Would you say Paytm has covered almost everyone who uses cash? Because there the problem is different. Where you have cash, you have an incentive to join. What Mr. Lakshminarayan is pointing out to that part of people who really are not even that helpful for banks because they are not doing much transaction. They are economically in a different category. Would you say you have covered everyone who is good in cash?
No. I think there is, at least on the merchant side, which I represent in Paytm, there are close to like 60 million merchants in India, which we feel with the surveys and whatever study we do, and we are close to like 35 million. So it is still a very long journey. If you go to a tier 3, tier 4 city, you will hardly see 8 to 10% of shops having QR. So that journey is still far. And once the people come on the digital ecosystem, they realize that their earning is recorded. If their earning is recorded, especially on the merchant side, they have that tomorrow if I need a capital for my business or to expand my business, I can show that. The problem in tier 3 and tier 4 cities is they may be earning good amount of money. They're actually more richer than a service class people in the Gurgaon or a metro, but they don't have a earning, what you call the, if you
have a record.
So banks cannot lend them. So they are forced to take money from some local person, and they are just not helping the banking ecosystem also.
Yeah. So what you're saying, Mr. Gaur, is that from 35 to 60 million should be an easier ride for Paytm.
Yes, not only Paytm, but overall ecosystem, because of the technology which we have got today was not available at least even 6 months back. In AI, every quarter there is a lot of change which happens in the technology and the business models.
Fair enough. Actually, I don't know, you're perhaps underestimating your reach. I met a forest, wildlife photographer yesterday, and he was saying that in some remote reaches places like Pench and Tadoba, he could pay through Paytm because of the voice box. So I think your reach is more than you're acknowledging. Ravindra, everybody is pointing out to why banks are incentivized. Before I get to that, because I think you will have a big tale of woe to speak about, let me first get to what I thought will be predictable answers, and none of you gave those as difficulties. How much is the internet reach in India? I mean, I know of several places where you go out of internet. Or how much is electricity reach? What is the smartphone reach? If the entire family has one smartphone, how much of payments will they do? Maybe one man in the house, maybe occasionally using it. And I'm deliberately saying man, not because I want to be an anti-feminist, but I'm just reflecting reality. What are the ground realities in terms of extending to the next 300 million?
True, very, very true. What you just spoke about, what got us here will not take us to another 300 million users. One of the biggest challenges, like exactly what you said, is the latency and the connectivity. That is where probably the OTP fallouts, you see a lot of those there. So this is exactly where Mr. Lakshminarayan would be able to really help us out with, because the hinterlands are going to be the future for India again. The tier 2, tier 3, 3 or 4 cities, because if you see the average age group, it's between 28 to 30, and with a young population, and the young population are tech savvy, and they're very good with the instruments in your hand, and most of them will be teaching you what to do and what not to do with the phones, and this is what will take us there. But having said that, educating, because the biggest problem today, even we spoke about
literacy.
Yeah, educating them on what to do and what not to do is more important, and that is what we keep reading day in and day out, where people lose out on the money. This is the biggest challenge, because if somebody has experienced that, probably they will have a step back, and just wait and see whether it's going to help them out or not. So that's collective responsibility of all of us sitting here on educating people, because India as a the population in India are very adapting. I can talk to you about one of the incidents that which happened when it was many years back, when I was in Frankfurt. There was a professor from Scotland. A very interesting thing, you need to hear this. So he said he was traveling to India, and from Mumbai they were traveling to Nasik. And when you go to Nasik, there is I don't know if you visited. There's a lot of places where you have sugarcane juice, and those sugarcane juice are done by bullocks going around. There's no electricity there, and they stopped over and to have a glass of sugarcane juice. And once they did, when they did a payment, he gave cash of 500 rupees and they didn't have change. And this man takes out a QR code, and he asked them to pay, and he was surprised, and he was totally surprised. And one of the sentences that he used is, "I had juice in the most primitive contraptions that I could ever see, but made payment through one of the latest instrument that I could ever make." So that is India for you. So I think reaching to the next 300 is not a challenge, but bringing everyone together to reach there, that is mostly to educate people on how to do, what to do, and what not to do, because of the population that we are going to see that's below 30, which is going to be the majority of population. That's what is going to lead us there.
Fair point. I mean, that's extremely encouraging, and I think all of us will have such moving instances of people with not having financial and digital literacy, but able to participate in some of the advanced digital contraptions. But let us come to the point that Mr. Lakshminarayan raised, and all of you have agreed. Incentivizing the financial actors. because you may not make much money from the next 300 million. Of course, Gaur would have us believe otherwise. He thinks that there are still enough people from whom he can make money. But assuming there isn't much money to be made, Lalita, your take. How do we incentivize in our pre-round of the event? You were referring to how banks were forced to do things with priority sector. So do you think something like that needs to be used to ensure the first push?
Yeah, I think more than making money or incentivizing, what is the incentive for onboarding these people? I think the cost of onboarding and the cost to serve for this 300 million is going to be high, right? So that is very important to get covered. If you do not cover it beyond a point, it is going to be very unviable for anybody, whether the bank which is powering it from the back end or the app which is powering it from the front end. They will have to send some assisted means of onboarding to begin with. That's how the process is going to be, right? And it is important to indemnify this cohort for honest mistakes. If they really lose money, you may have to just, as a gesture, say, "Acha, theek hai, we will refund it to you." So which means that the cost to serve and the cost to onboarding is going to be high. So where will the money come from? So one is, if there is a way in which the top of the pyramid is able to give you more money, which let's say we've been talking about seeing whether a particular turnover and above we can have more MDRs or anything levied. So there's one way of getting money from there. If there is a incentivization that comes from the government side for pushing this, then those can be plowed in for this 300 million to sort of accelerate the adoption and the pace of getting them onto the ecosystem. I was referring to the priority sector lending because I remember that when we were starting off on the lending space, there was a particular percentage of the book which had to be given as a priority sector lending. This will have a differential rate of interest. It will have a differential rate of booking also. And this, again, this also needs to be covered by providing additional immunity to this section. If some of these initiatives can be brought to life, then I think there will be a lot of reason to invest in this set of cohort, which is a very, very important cohort to invest in. But it's going to be very difficult to travel the miles, so we will need a lot of boosters and additional incentives to cover this up.
No, absolutely. The telecom guys also were forced to pay, are still forced, the USO, Universal Service Obligation. Their money has to be set aside, and BSNL uses it to extend the telecom lines to where it is not profitable for private companies to do. Mr. Lakshminarayan, is that the way to go? I'm sorry, I know it's an unfair question because both telecom and banking are utility services which are being ragged literally. They're not able to make money at several points, and I'm conscious of that. But really, what is the option? Is it
what Lalita said in terms of reappropriating some MDR at the top of the pyramid and see if that a percentage of that can be used for funding the next 300. Some incentives clearly are required. I think we started with cashbacks, but more we need to think through. I just wanted to, I'm fascinated by the business model, what we need to do and how do we need to innovate.
Please.
It takes me back to, in the UK, there is an organization called Nest that the government set up. And the real challenge in the UK was there were low-income earners and middle-income earners who are not saving any money at all for the pensions, right? And the government saw that there is going to be a huge gap, and to cover through Social Security, they saw really a time bomb ticking, and they had to solve the problem. And I think they came up with, the Nest came up with a very simple set of rules. One was, how do I remove the incentive is one, but more importantly, how do I remove the friction? So the auto-enrollment was real hero. Oh. So when I'm earning something, my employer would automatically deduct a small amount, right? So, and they have to make it so frictionless that it's more an opt-out. If I want to opt out, I need to go and ask rather than not as an opt-in. So here also we need to think about some opt-in mechanism, auto opt-in mechanism, that when I open a bank account, can I automatically open an UPI ID as well? Why do I need another process to do that, right? Or if I have another touch point in the bank for something else, even in the rural area, when I go there, can I use that touchpoint process to enroll the person, as opposed to have another process for doing all the, the KYC and everything else. So that's one parallel that we saw. And, the Nest started in 2011. And today their target was to cover 7 million people who were not saving enough. Now they have 11 million. So I think that was a phenomenal success. That was one. The second is, while the insurers, we all know when we offer something for the pensions, about 2% goes away in the admin, the process as well as the fund administration. But here, Nest was given a mandate that you shall not operate more than 50 basis points. So once you have a target like that, you have to rethink your entire process, right? And then we used to say that, then you design your process to the cost you can afford rather than the other way around. So you make it leaner and leaner and leaner and digitize as much as possible. Eventually, they are running still, after this many years, they're still running at 50 basis points. That's the reason why, even though their target was 7 million, now they're able to cover 11 million employees and pensions, and it's a huge problem solved. Similarly, what we have to think about is, the mechanisms of auto-enrollment, not just for the customers, but can we also think of auto-enrollments for the merchants? They also have banking transactions. How do we, enroll them automatically? And remove all the frictions as much as possible, right? Because, think about, can you do a microclaim insurance, get immediate refund rather than having to call somebody and yes, voice AI can help. But I'm saying, why do all that? Just, how much is it going to cost? See, put some limits and remove, the first goal should be remove as many frictions as possible. Now, as a person from a technology background, we were, as in my previous hat with TCS, we did the Nest platform and made it happen at 50 basis points. But the technologist in me says that you can solve some of the problems. So we talked about connectivity network. We've actually done a pilot with the IDRBT for using LoRa network for connecting micro ATMs, right? So that's a very, it consumes less electricity, the bandwidth is low, but you can do some of the transactions, micro ATM transactions using a network. So we can find solutions, but who's going to fund those solutions, right? And similarly, you could have voice-assisted onboarding process. You could do now, I think the MSMEs are Udayam. Portal is there. So if you're doing one KYC, why are we going and asking another KYC for something else? Can we just make one universal KYC that everybody can use? Absolutely. So I think there are technology. I'm a fan of AI, and I can talk about how all it can help. Yeah. Network we can talk about, but more importantly, I think if we really think about the business model, how do I remove the frictions and how do I minimize it? And combined with what are the right incentives we need to give to the banks, to the merchants, and the customers, we can be successful.
No, well, if UK has NEST, India has NPCI. If UK's Nest can do it in 50 basis,
I think we can do it even better. We can even do it better, yeah.
I would assume. So, we're at least enthused by the initial successes that NPCI has had. But really, banks are our, if we have to succeed in onboarding the next 300 million, it has to be the banks. And banks are not incentivized because there isn't much money over there. I can report a conversation which I couldn't report earlier between an RBI deputy governor and a bunch of bankers, and the deputy governor roundly chided the bankers for just giving away the UPI game to Google Pay. What were you all doing? GPay is taking away everything. And, you guys couldn't put together a platform where you could pay from bank to bank on an app designed called India Pay or something like that. How did you give it away? But the banker said, we couldn't say this in RBI because they are the regulator. But where is the money? Google has deep pockets. They're not earning a penny from Google Pay, and they are ready to spend. Can we banks do it? So that question straight away to you. Ravindra, what do you banks want? That you can extend the 300 million. We know that banks are loaded, and they've gone through the service ecosystem, hand-holding the fisc for priority sector. Jan Dhan, again, it was a cost to all the banks, Jan Dhan, and they didn't make money on it. So how should the regulator or the government enroll your support to extend?
So convenience comes at a cost, right? So somebody has to pick up the tab. Well, we're talking about enrolling, 300 million people, and also technology is the only solution for this. And just now, even before we started this, we were talking about how investment heavy, all this technology, is. And that is where your outsourcing models and partnership models are very relevant. And this is one place where I look at probably, banks and all the NBFCs or any, MFIs. Partnerships are very much required for this. Unless and until you partner with, tech-related giants or tech-related tech enablers, this would be very difficult. Yes, cost is there, somebody has to.
Would you expect a subsidy like, beyond this number, the banks should be reimbursed? I think the government even thought of reimbursing some of the MDR payments, provided you keep UPI free.
Correct.
So would a reimbursement kind of thing work for the banks?
That would be brilliant. That would be brilliant. That would be a great thing to do it. That's exactly what we discussed right away about
if the cost,
incentivizing.
as you say, for onboarding is 25 rupees, then the government bears 20 rupees or 15 rupees.
Correct. That would be a great way of helping out the banks, because as in the point of repetition, because technology is highly disruptive, because you invest a lot, this is the biggest challenge. Invest a lot and suddenly it becomes obsolete.
PhonePe takes away the customer.
Yeah, it does happen. So that is where we all need to come out with the solution. Probably, as you rightly said, if the government incentivizes, that will be one step forward for the banks to come forward and see what we can do much better with this.
Even if the government were to pay that initial amount, they're not going to pay it to Paytm, is my assumption. They're more likely to do it to banks, because they see that as the lowest common denominator, serving your driver and your maid to open accounts. Savings bank account holders would be the one they would go to. What would be Paytm's view in terms of, what will incentivize you to go to the next 300?
So, government have certain subsidies and incentives which can increase, or so like there is a specific zone which government calls as PIDF, which is not so highly digital zone. PIDF, where for merchant onboarding and for soundbox placement on those zones, RBI gives a decent kind of incentives for a device. Okay, so and that incentive.
It's already there, incentives are there.
It is already there. That incentives directly comes to Paytm. But it is very important that we have to understand that why these people are still not on the system. Everybody is trying, Paytm is trying, banks are also trying. But how we solve the trust problem, which Lalita was mentioning, that they are not, it is not that they are not onboarded because people have not trying to onboard. It is because they don't trust the ecosystem. कि यार मेरा पैसा ना चला जाए कहीं. So if we have to onboard these, we have to solve first. One is the business model is obviously we have to solve, but how we solve the trust deficit with these people have because of their ecosystem awareness or the digital ecosystem awareness, because they feel, yeah, if something happens on this app, I have no face to complain. And if we solve that problem and we build a confidence that, okay, your problems can be solved sitting at your home, then the onboarding will become faster for especially in tier 3, 4. Because today when Jan Dhan account were opened, it was a face or a bank name or a branch which they could see. But especially on a UPI kind of a system, they feel if something happens to my balance in my account, I have nobody to complain. And there people churn out of the system or they don't come at the system.
No, I agree with you. I mean, I would count as among the top financially literate and digitally literate person. If I have a problem with the bank, I call the corporate communications department of the bank, people with whom I always deal with. I don't call the call center. I mean, if a person like me behaves so badly, I mean, or at least is, call center will take time. I have to search for the call center number. Should I look at the credit card? Is it written over there? All these things. I'm still not looking at the call center number. It will be way more difficult for someone who is not in English or for someone who is not digitally savvy. Now, Lalita, how do you solve this problem? Hand-holding. I mean, even Digi Yatra, we have hand-holding. We all do it at home, but when we go over there in the airport, there are people who are helping us. And that makes you feel better, that someone is there to help you. So how do you get this human element in?
No, so I think there are three different cohorts of people whom we need to address. One is people who consume digital content but are not on digital, which is, even like I said, our parents and some people who are also in the younger generation who prefer to use cash. Some of the products that we've made very recently, we launched today a product called UPI Circle, which allows you to delegate money to somebody. They pay on your account with a particular limit. Okay. So you basically warm them up to payments, but don't give their bank account linked, so they don't lose money. And you keep either authorizing the payment or you give them the authority.
But how do you do that? You personally go to each person?
No. So this is for people like, people like us and people like our parents, right? The second cohort and the third cohort. In the last 300 mile that we're talking about, the last mile, right? I think we have to look at the women population differently and the men population differently. Oh. So these are three cohorts that I feel which are to be addressed. The first one is easy because it's a product solve. The second and the third, I think, is a product plus intent plus technology solve. When we did a survey, again, a lot of women who wanted to use UPI could not use UPI because they had one phone in the family and the Aadhaar number was linked to that one phone, right? So they can't onboard. You do a SIM and a device binding. So that's a product plus a technology solve. Second, my mom used to do this. She used to keep a lot of money in those jars in home, right? So I don't want to come on UPI because I want my savings to be my savings. I don't want my spouse to know about it. So it's an intent solve. So how do we create people-first products for this women population who helps them to come on to this? Because they have an intent, but their intent is a little bit different from that. So this cohort will have to be addressed through product solve and a technology solve which helps them get over that intent. The third one, of course, is the men in the cohort, where I think it's important, assisted. The business correspondent network today is doing a great job in actually going and meeting them and solving for a lot of problems, and we have a lot of product unlocks there. So I think you should use assistance to begin with because there is no other option. Sometimes it's okay to use assistance because if you make their onboarding frictionless, they may fall prey to unnecessary frauds and their start is going to be patchy. So it's okay to use assistance. That's why the cost of onboarding is going to be high. But with assistance and with a little bit of, let's say, for example, most of them are covered by banks, right? If the bank branches tell them that, every time you open an account, aapko main ye app set up karke de dunga. That could be the assistance. It need not necessarily be a BC. It can be any touch point of them with somebody who is probably a little more financially literate than them. So that can be a way to solve. So these are the three cohorts, if I can summarize as important.
That's excellent. That was going to be my last round of questions, and you have already answered it. I want from each one of you at least one, or if you wish more, advice to the government or to the regulator or to the ecosystem itself to get the next 300. One or two pieces of advice.
I think we had a lot of ideas, including how you could deploy a network in the rural area, like a LoRaWAN and other technologies. There are newer technologies coming which will not require that much of bandwidth and make it a lot more secure, like the named data networks, which are very secure. So you can solve a technology set of problems. We can take some of the incentives and onboarding assisted through the correspondence and so on. My suggestion would be to take a microcosm of 3 districts and do a pilot there and really measure all the cohorts, what incentivizes and how do. And more than that, once they're onboarded, can we solve the credit score problem? Use their payment history to give them loans, for example. So that it goes beyond just the incentive in the form of some kind of a cashback or anything else. Other incentives which will tell them, hey, it was good for me to come on the digital bandwagon because I'm getting a lot more benefits out of this. Right? So I think we can experiment in a certain way, combined with technology, combine selecting the cohorts, combining certain incentives and everything, and do that as a.
I think a microcosm idea would be great because then you can, from the pilot, extrapolate to the whole. Mr. Gaur?
So one of the programs which government has done very well in India in last 30, 40 years is the vaccination program. And we can learn from that. We have seen that vaccination worked very well in India when we had ambassadors in every village who were driving that. So we can have digital ambassador program kind of a thing, where a person is maybe appointed with some money or just recognition, where his role is to make people digitally savvy, and government is endorsing that those digital ambassadors, like we have concepts of like Health Didi and other, especially in vaccination. So now the time has come that we should have digital ambassadors program from the government of India or NPCI or certain fintechs and drive the onboarding and digital adoption in the rural India.
Bank Didi would be a good idea. I agree with you. But Mr. Gaur, I thought you will speak about your agentic AI. The voice box is now talking back, I believe.
Yeah. So I think when Lata was mentioning, I understand that today we are talking assisted as a human touch. But we at Paytm are very sure that assisted does not require human touch. You have call centers which are now AI driven. Earlier you were talking to a person when you're dialing in, now there's an AI bot or a voice bot which responds in a better way than a human will. So I don't feel that the time in next 6 to 8 months, the assisted human touch will go away. Assisted will be purely AI. We have seen this happening in, at least in the call center industry at this point of time.
No, absolutely. Actually, you can combine what Lalita is saying, have a Bank Didi show, how the agentic works, and then perhaps the rest of the village or the cohort or the ecosystem is able to pick up. Hopefully something like that. All three of you are looking at a pilot that can be extrapolated. Ravindra, what's the advice or suggestion?
So for me, probably it'll be trust, belief, and confidence. So you need to give confidence to the people. For instance, today, if somebody loses money while doing a transaction, like how we said, they lose out. There is probably my probably request to the government would be like how we were talking about how 2FA is there in India, and outside India, probably if somebody loses out on a credit card, they're insured, and then the money comes back. So if you give this confidence to the people at large, that even by mistakes, things happen. If they lose money, they are going to be, taken care of if it's, happen. Genuine error, yeah, exactly. So these kind of messages, if it goes out, I think this will be a great way of, probably if you want my father or my mother to come on, because it's very difficult because somebody calls them and I'm calling from the bank, they reach out to their, a debit card or credit card to tell what the number is, because that's their belief. So this is where we need to be very clear how, as regulators, as government, as bankers, we give confidence to the people out there, because as I already told you, the 300 million coming in would basically be from the tier 3, tier 4, tier 5 cities. And these are the cities, these are aspirational cities. Because I also know that in the Western Ghats, there are small villages, and they do a lot of QR-based transactions.
Yes, they do.
Yeah, they do a lot of transactions. So the country has moved on. But again, they don't know where to go. So if this problem is solved, I think we can reach this target beyond prior to what he was talking about, 5-6 years. I think by around 3.5 years.
I too feel confident that from 2017 when UPI first came, I think it was even earlier, 2016 when it came. Yeah, we didn't use it much, but even when demonetization happened, many of our colleagues went on into UPI but came back once cash came back, but went back to digitization for good after COVID. So, some such pressure does make us take irreversible steps towards digitization. I had good intentions, but there are only 6 minutes, 5.5 minutes left. Questions are open for the floor. Please. You could even tell us whom you want the answer addressed to.
I just want to add on to what Mr. Ravindra said. And in the masterclass by NPCI, I've already made the statement.
Closer.
Yeah. So I've actually written a paper reimagining UPI next. And that paper I've submitted to Reserve
Your
Bank.
name, sir?
My name is Anil Katia. I'm an ex-banker. So what you just said, and this is a point I'm making for quite some time now, what you need is build the chargeback process into technical architecture. You have to make it so easy to have a grip over my money that it becomes confidence and trust that is lacking.
Fair point, sir.
Yeah.
Thank you very much for that. Suggestions and questions welcome. Just keep them as brief as he made it. Looks like everyone is very confident the next 300 million will come. Please. Please, ma'am. You have to stand up, otherwise the mic won't come to you. Yeah.
Thank you, esteemed member of the panel and Ms. Lata for moderating this session very well. Sorry, my voice is a bit bad.
No, go ahead.
So, I'll tell you my personal experience and my friend's experience to the point what Mr. Ravindra said and this gentleman also said. We transferred money to a wrong number or a bank account number and we could not get it back. It's been almost a month. The challenge is even when you contact the payment aggregators like Beam or GPay, they say the data is encrypted, so we do not know where your money has gone. So we are left in a way that we do not even know where the money has gone. Now you go to the bank, that from my bank account, the money's got transferred somewhere else. Bank will say you go to the mode of payment. If it was net banking, we could have helped you. Here we cannot help you. So the challenge is we got onboarded, enrolled on this very digitally. But the query resolution, or what I would say is that the mechanism to ensure quicker and fair recovery, that is not digitized. And as Ms. Lata also said and Ms. Lalita said, we do not know whom do we call also.
Fair point. Ma'am,
so is there any
human element?
Yeah. So is there any implementation in the platforms or any plans to have this implemented where we get that confidence that even if we make a mistake, like for example, can I have a system I can revoke my payment within 2 minutes if I realize I've transferred it to a wrong number?
Fair point. No, that's taken on board. Yeah, please go ahead. You can take my mic if you're not, okay.
Hello, hi. This is Mitesh here from Miss Call Pay, actually. So while we embrace 350 million users already on UPI, there are significant 850 million users or 85 crores users who are banked but not on UPI. And the problem is actually that there are systems which has been invented like 123 Pay, and which is the ecosystem I belong to. But the adoption, the way it is treated is similar to what a UPI has been treated. So the costs, economics are completely different. And actually the way it has to get onboarded also is different. So what is a regulator or a bank's point of view where we can actually, be part of this, enablement to enable the next not only 300 million, but 850 million which are actually using AEPS and a cash-based economy. Driving to
I believe the Reserve Bank of India Deputy Governor is one of the speakers, Ravi Shankar, in one of the panels. I think you should put this question to him. The regulators will have a plan, or should have at least. I don't know if anybody else wants to take this question here. No, it's the regulators' forte. The question will be put to them. But I think the lady's problem also is, it's
so I think to her problem, I have 2 points. One is, see, chargeback as a process is there for a merchant transaction today. It's never there for a person-to-person transaction. While, see, it's very important because the bank who has your account knows and has a trust score attached to you. Not literally a score, but, they know that you're a trustworthy individual. You will not file a complaint unnecessarily. Okay, so this is so we can't develop a universal mechanism for solving it because there will be people who will misuse it. I will say I sent her money by mistake and I genuinely owe her money, and then I say please refund it back to me. So it's very important. So many banks are doing this. They have certain ways of solving this problem, which is if the money is going and coming within the bank. If it's across the bank, it's a very tricky problem to solve, but it can't solve by the idea that you gave saying that delay it in 2 minutes. You want things to happen instantly. Delaying it by 2 minutes is going to cause a different set of problems altogether.
Massive misuse.
Right? So, yeah.
Ability to revoke.
So that's what I'm saying. When you revoke, what are you doing? You gave me money, you're revoking it, right? I'll give you a simple example. Because of the fact that there are reward points attached to a debit card transaction, people have done a debit card transaction, revoked, done, revoked, and earned thousands of points just by using this mechanism. So some of these things, while they will solve this problem on hand, it will create numerous set of other problems. That's why the P2P world will have to be dealt with a little more caution. our way of dealing with it, and Mr. Gaur and Mr. Ravindra can correct me if I'm missing something, is by putting limits. You can't do more than X transactions in a day. You can't transfer more than X value in a day. But the refund of a P2P transaction is always based on trust. If I've sent money to him, I should be able to call him and say, yaar, galti ho gaya, reverse karo. That's the process today, and that's what it is. Unfortunately, the bank or the app cannot do anything because you have, as a person, willingly transferred that money.
And especially in a P2P transaction, most of us transfer money to a known contact or at least a number which is saved in the phone. So that is where such kinds of limit of withdrawal cannot be put, because it will be so massively misused that people will transfer money, avail the service, and say refund. So that is where there are challenges which are there in P2P especially.
Okay. No, actually, the lady's problem is genuine. Yeah. Her suggestion was not very helpful. But I think that trust problem is
trust
there.
Problem and where do I go and complain is very genuine. I'm sure we will solve for that.
It has to be solved for, just as the gentleman's, how do you onboard the next 85 crore or 850 million? Unfortunately, the time is screaming up, so I cannot entertain more questions. The guests are going to be around, and you may personally ask them your questions.
Ma'am, we will take one last question from the gentleman there. Yeah, we'll take
Okay,
that.
go ahead.
Ma'am, just one last question. So just taking the cue from what everybody said, my name is Sandeep. So there was an interesting seminar just before there where the DOT gentleman said that they have created a repository of phone numbers because everything is linked to a phone number, and they have a risk categorization, a high, medium, or low risk. So when you're transferring the money, it just pops up on your screen that you're transferring money to a high risk. So probably you get warned beforehand. So maybe if the banks start reporting that these are fraudulent numbers, then probably this database could become a repository, like a credit score.
Telecom companies are also solving that problem to some extent by
Thank you
alerting
so
of
much.
spam.